1,000 to 29,000. After everything that we've seen, if we are to assume that even if there's a little bit of a skirmish, XYZ, you're not going to go back to what the situation was, say, last evening, before the ceasefire.
If I remember,
a few hours. Kush, what's the Nifty target?
So
for December
2026, yes, I remember that.
Yesterday it was, yeah.
30,000 का view था, 30,000 का view in the best case scenario. Technically, there are reasons why we could head to that level. If you see the last 10 12 years of candlesticks, there's a very sharp sharp upward sloping channel जिसका जो upward target है वो 30,000 आता है. Incidentally, उसका जो lower band है that comes close to 22,000, 22,200, which the Nifty hit, and we're rebounding from that level, by the way. So there is an extremely aggressive positive case for 30,000. But maybe given how things are, and from today, if we see that levels, I think 28,500 is. Why can't we have a golden swan, I don't know, golden swan kind of an event, once or twice every quarter, right? So, and that's all it needs for the Indian markets to just spring up.
Yeah.
So I still remain very optimistic.
28,500.
28,500, very likely.
Okay. So we'll of course have these conversations many times till December, and then we'll see what
hopefully
happens.
By Diwali, right? So
hopefully by Diwali. Reason to celebrate as we open, but the other big factor, of course, is the Reserve Bank of India's Monetary Policy Committee, which is expected to keep rates intact at 5.2. Piyush Shukla joining in from outside RBI to tell us what is expected. Piyush, we did our poll as well, and what did we expect?
The expectation, like you mentioned, the consensus is that the RBI's MPC will likely hold rates steady at 5.25%. There are three major factors that markets will keenly eye. The first, inflation and GDP growth both. After the temporary ceasefire, the RBI's commentary will be keenly eyed with regard to both these aspects. The other main aspect is dollar. We need to keenly track what the RBI says, what level it wants the rupee at. The RBI's commentary with regard to currency volatility will be keenly eyed. The third the HDFC Bank incident which happened last month, wherein its former chairman, Mr. Atanu Chakraborty, resigned, citing differences between his personal beliefs and certain business practices at the bank.
So that's well put, Piyush Shukla, of course, looking at banking closely for NDTV Profit. And I think the post-policy conference is and CEO at Bajaj Alternate Investment Management. Lakshmi, very good morning to you, and truly is one, because we've seen the rupee also open stronger as expected. Bond deals
Yeah, hi, good morning. You are actually wearing the color of the markets today, and I think that is what will reflect in the markets. The RBI and more than the actions, I think the markets will focus on how much more liquidity, how much more on the currency arsenal. I think those are the whole host of commentary that the markets will clearly focus on because we do have a huge supply. fiscal slippage. I think all those things are not completely behind us. So I think that is going to be the key thing. Also, there could be a reasonably high chance that RBI would probably tweak growth a tad on the lower side. It could be just a few basis points and maybe put inflation for the bond markets today.
We've already seen, and very good morning to you, Lakshmi. As much as people might think that it was a serendipitous planning of color today, it was actually planned. It was saying, don't give me red today. But having said that, we've already looked at the market open, Lakshmi, and we've talked about a 40 paise improvement or appreciation in the rupee. Of a further cool off for the bond yields, or do you see it not moving too much lower?
So I'd say, Alex, I think this was an expected move, a much needed response. Movie 1947 Earth, which says Ruth aa gayi re, Ruth chha gayi re, which means the season is here and the season is dazzling. But the season color that they're referring to is yellow. So I would say from a market standpoint, whether it's bond yields or the currency, I think the red seems to be largely behind us, but we are morphing gradually towards the green. So it is still the yellow right now. So I think last month you had crazy monsoons, which was totally out of whack, unexpected in the country, which means some of the wheat crops also have been damaged or potentially damaged. And El Nino probably points towards a less than or below normal monsoon. So I think we can't completely ignore all these things. But yes, today we can cheer for sure.
Well, Lakshmi, thank you for joining in today. I was going to say that how is it that you didn't invoke Bollywood in your answers till now? I'm glad you did, because that just defines some of your interviews as well. But thank you so much for joining in today.
Thank you.
That's the key question.
Good question.
Yeah, the markets are showing a good sharp start thus far. So very quickly, right? I'm sure all of us have spotted it, and 9:15 will do it again. But seems like we'll have a 3.5 was about an hour ago. So is the mood improving? Keep in mind, US markets are actually doing well, and the usual suspects, BP, HP, IOC, Interglobe Aviation, all these should come up on your screen. Also keep an eye out for, look at that, 10% higher for HP, 10% for BP, 10% for IOC, I'm sure, maybe slightly lower. Interglobe Aviation would be 10% as well. Yes, no surprises there. So a lot of stocks are really starting off well. Keep an eye out for the Adani Group stocks as well. Very likely they could do well. Guys, what are you spotting? I'm sure everything is in the green.
I'm spotting 497 out of NSE 500 stocks are in the green.
Which are those loser threes?
ONGC, actually its decline is 2 and unchanged is 1. Pretty much it, maybe in Oil India and ONGC, that's it. That too less than 1.5% down. Everything else is up in the green.
What I'm looking at are the heavyweights on the Nifty 50. You have HDFC Bank, that's up 4%. You have Reliance Industries, that's up 3.5%. ICICI Bank, that's up 5%. Recent past when the stocks were looking a little bit worse for the wear, and we'll see if that continues, or if there's some profit being taken off the table as was suggested in some of these names as well. We'll see balance eventually. But let's talk about the big brokerage call of the day, and we've got HSBC that has initiated a buy call on ICICI Prudential AMC. Sharad joining in to tell you about what the rationale is there. Sharad, morning.
Good morning, Alex. And of course, over the last 2 to 3 odd days, we had seen some good value buying happening across the AMC stocks. Yesterday, Nomura had upgraded, and today HSBC has upgraded ICICI Pru AMC. They have initiated buy with a target price of 3,600 rupees per share. And importantly, they have stated that the company is leapfrogging peers where it matters. It's set to outperform the peers going ahead, especially on the key operating and the financial metrics which is being tracked, especially in the medium term. Now, their company is positioned to manage the yield pressure, which is of course plaguing the industry, and a positive operating leverages might kick in, especially with the growth coming in the core EPS. So there is bullishness in the AMC space, and of course now today's pick happens to be ICICI Pru AMC.
Thanks so much for that, Sharad. We're joined this morning by Chandan Taparia, who's Head of Technical and Derivatives Research at Motilal Oswal. Chandan, very good morning to you, and thanks so much as always for taking the time. We've got a bright smile on your face, or at least you will as soon as I'm done introducing you. Are you as positive as the rest of the table here on the equity markets this morning? And
you can't get a better the green color around or surround you than this morning. So I believe the market already seen a decent corrective move in last almost 8 weeks, corrected by more than 4,000 points. But the good part is I exactly took support near 38.2% of the entire rally of last 4 years, and now negated its lower top, lower bottom on the weekly chart. We were closely looking for chart to get the market bottom formation. One was USD INR, which negated the higher top, higher bottom, taken a pause, corrected below 93.5, 93. That is the first trigger for some relief in the market. Second, the decline of the crude below 105, 103. Third, index has negated its lower top, lower bottom on the weekly chart. And the hint about the bullishness bias of the market. But yes, after the positive opening, what to do? I believe higher base will be at 23,333. With that base, I believe the next momentum can extend to us 24,445 marks.
24,445 is what? Nifty by when?
So I believe it can happen in this next 1 or 2 weeks. And if market manages to hold 23,333, I think database as a major short covering. And the one good part is that even FIs are selling in the cash market, their long short ratio in derivatives has improved to 18 to 19%. So I believe they will come and do the short covering. And at the same time, Bank Nifty can also head towards 54,500 to 55,550 marks.
Okay. Any picks today, Chandan?
Yeah, so I think again, we have the same color and positive setup will continue to be in the market. I believe most of the metal, a few heavyweights, private banks, most of the auto name could be in focus. But yes, if I need to focus on few name, first will be Bio, National Aluminium. Metal counters are doing well. One of the strongest counter in the recent past already has been making higher tops, higher bottom on the daily chart, given a breakout on the weekly. So with support of 400, it can head towards 428 or even extended target of 440. MTAR Tech, we are quite positive on this name. After the long consolidation of last couple of weeks, it gave a massive breakout. It was 4,050 and even 4,200 level. And we can also look at the selective private bank, including Axis Bank or counter like Shriram Finance in the financial as well in this market scenario.
Okay. A quick note. They're remaining neutral on Nifty with a year-end target of 26,000, implying a 12% upside from current levels. They see the ceasefire as the beginning of an off-ramp, saying it's probably not the end, but is the end of the crazy period of escalations. Believe the end to hostilities will mark a gradual reversal in many areas. Areas beaten down by FII exits like financials remain specifically vulnerable to crude, chemicals, aviation, logistics, paints, and pharma, energy, OMCs. We still don't see a significant reason for FIIs to come back in droves, is the take from Bernstein. They still don't think crude will improve materially below $85 to $90. End of escalatory phases is a positive that should negate further deterioration. I think that's a tempering thought as we're getting into what is looking like an exciting opening. And just pull up how the pre-open session is also wrapped up with the Nifty about 700 odd points up. So thereabouts of what was expected. Everything will be up in the green. Two questions. One is Bora and Parag Thakkar at the start of our show and our conversation said that maybe if you have this big boost, it's time to take some profits off the table. Do you agree with that view?
No, I don't think so. PE point of view, that also gone to 18, 19 marks. So I believe most of the data set were giving the negative sign, and I think this is the time to U-turn. So I don't believe in taking some profit. Yes, if you've taken trade in 2-3 days, then you can do. But if you are an investor, I think you stay continue with the market. Once all the geopolitical concern is out, I think
averages, and the 50-day moving average for the Nifty 50 is still at 24,570, well above what we're opening at today. The 100-day moving average is above 25,200, and the 200-day moving average is 25,200, close to that amount as well. So it's still a while to go.
Yeah, so I think it'll get there gradually. The first hurdle is actually 23,800 to 24,000, that level. We're opening within that. Just remains to see if any kind of profit booking sets in or not. But otherwise, I think 24,000 is the key level.
Kush, if we can, one stock that stood out to you?
IMFA. 1345, 1375 targets. It's opening close to those levels, but maybe for the second target you could play with a commensurate stop loss at depending on your entry price.
Chandan, 20 seconds. What individual stock would you look at?
I'll go.
Well, just before Tamanna comes in and camouflages the screen, because it will be an all green, let's have a moment of triumph for humanity, if you will. This at least points towards that, and hopefully it will be all good. But here's how the equity VIX, you will see any red. Well, some declines maybe, but 2000 to 17, when did you last see that? 3% higher, really strong start for the Sensex and the Nifty. Banks are 4.26% higher. I guess IT would be underperforming, but that's okay. Mid caps 3%. Yes, the Nifty IT is lower than the screen. And look at the all green screen. Well, maybe Coal India and ONGC, the three people which are sulking, or two guys which are sulking about 3% apiece, but look at the gains there. Interglobe Aviation 8% higher, not surprised there. Larsen 7% higher, not surprised. Adani Ports 5% higher. Was the resilience people are looking at fundamentals right now. It's an everything buy screen. Adani Enterprises, Shriram Finance, Bajaj Finance up 5%. Banks are participating. ICICI Bank is up 5%. Bank up 4% as well. Tamanna, come in here. Frankly, it's just an all green screen. Pointless to point out individual names, but you can see some trends. The ones which are beaten down the most, and some of the crude sensitives are the ones which are bouncing or correcting respectively.
You know, I wonder. The real estate there, the fears of what's happening there, that also opens up, because Indigo's biggest pain point, apart from crude prices, was the fact that all of those flights were disrupted. So we have to see if that works out. But the broader markets is something that we should see as well. 3.5% of the Nifty up on the Nifty mid cap, Nifty index, the Nifty small cap up about 3%. So the bears have retreated entirely, 18% down on the VIX. I mean, you know, memes sometimes get very pinpointed and funny, and there was a response to the Trump morning, but that's on a lighter note. You're at 20 points on the India VIX. I want to pull up the sectoral heat map, and you'll probably see an all green screen there as well. Yes, there you have it. The CPSE just Because look at the conversations in the last couple of days saying March sales have fallen down. Two agencies, Anurok and Knight Frank, who track the space, saying March sales are getting muted. That is obviously reversing because the business updates weren't that bad. Autos, once again, components was a problem, crude was a problem, all of banks looking fantastic, everything between 3 and 4% up. Bank Nifty at 4.5% up, and that's really the important. Nifty CPSE also coming into a fully green screen. I think gainers and losers on the NSE 500 is what we can look at next, and you'll find maybe 2 or 3 on the losing side, because the last I checked there were just 3 out of 500. Okay, there are quite a few coming in. And ONGC won't, because higher crude prices is good for them, and you've seen this big push down on crude prices today. Coal India was actually benefiting from the scarcity premium that you were seeing, and which is why it's HPCL, AB Reality among them. Some of the financials coming in there as well. So overall, no point really going into too many individual stocks today, Alex, because it's all about a huge collective sigh of relief that the market is taking. That's what you're seeing reflecting on the screen right now.
Visit some of the calls that were taken before the market started, right? And I do want to go first to Kush Bora, because of the 3 stocks that he picked, Larsen was one of them. And do you avoid a trade? Do you buy into it right now? If you were holding before the conflict, do you take some money off the table? What's the view?
Yeah, so as things stand, if the call opens above the target for it, two sessions, this is a stock that we've highlighted, didn't turn into a call, but when we said, what do you buy, from the war affected theme, Larsen made that cut. So if you've bought it as an investor from a medium term perspective, you should very well continue. From a medium to long term perspective, definitely continue to hold. I won't be surprised, 4,400 thereabouts, the recent swing highs, very much on that.
Let me ask you this, and I will throw the question to Chandan as well. In this case, in Larsen's case, right, if you had now, if that is the case with a frontline stock, do you take some money off the table?
No, you don't.
You don't.
Because the risk reward ratio is massively favorable, the momentum's begun, and there is still an upside to be had from here on another 8.
Chandan, what's your opinion on this? Where if a stock like Larsen, you have gains of 10%, do you take money off the table, or do you ride this rally? And if you were to a cream off the top?
So it depends on person to person. If you are a trader and taken position 3-4 days back with the view of getting 5 to 10%, then obviously you have to take. But yes, if you are ready to hold for next couple of days to couple of weeks with the view that these counter have corrected sharply from higher levels due to the geopolitical. If I clearly remember, it made high near 4,400 at the beginning of or mid of the Feb. And that time it was all set to give the breakout, but suddenly the geopolitical concern happened and stock underperformed. I believe L&T is or Cummins. So I believe L&T has potential to move towards recent high or all-time high towards 44.40 and much beyond. But yes, if you've taken position just couple of days with the hope of 8 to 10%, I think good time to book. And again, look for 4,200 to 4,450 plus kind of levels.
Things can turn very, very quickly. So, couple more quick questions. Kush Bora talked about the possibility that some stocks you might want to take money off the table for. And I do want to go to Parag Bhai on a couple of stocks that he's been thumping the table and speaking with gains of over 4%. The question is, would he still talk about a buy at these levels? Because frankly, the price to book ratios don't look too bad even at these levels. Having said that, Kush,
off the table, right? I'll just go back to the initial conversation that we had before the markets opened. Sectors which had strength before the fall started because of the war, you continue to hold, maybe even add. So financials, auto, and realty and IT, I would take money off the table, especially if I bought it in this dip in particular, because that weakness might persist for some time. So realty, IT, if you've been holding, if you're making handsome profits right now for buying at lower levels, you should book profits.
Okay.
So basically, see, IT has anyway outperformed. IT is also going up with the market, and TCS result is anyway very close.
Tomorrow.
So in that, going into that rally, I might also book profits in IT.
Okay. So IT in the big ones, the big three. So, all right, should you book profits right now or just sit back and cheer is the question. Parag Thakkar Kushbora, thank you so much for joining us today. Gurmeet Chadda joining in on the conversation this morning. He's managing partner and CIO, Complete Circle. Gurmeet, this is the year that we became trade experts, then we became at everything that's going on. Are you in the camp that we have just turned a corner, at least for Indian markets, where we have a far way to claw back from the hits that we've taken?
Oversold. Just look at what MS.
Oh, we seem to have lost that line. We'll get him back in just a second. Hopefully the tech gods will be kind to us. But meanwhile, markets really showing that absolutely strong start for the morning. And it's, for the Nifty, and you will absolutely see how the big banks are coming to the fore. HDFC Bank and ICICI Bank. I found it quite interesting that Bernstein's view. No, I think it was noteworthy because it's not entirely wrong.
I think that it's relevant because a lot of the problems that existed before the conflict continue to exist. And if there is a bounce for the I think we should look at the Kospi very closely, even Japan, in fact.
Yeah, and Gurmeet is back with us. Gurmeet, can you hear me? I think we kind of lost your line in the middle of that first response of yours. All right, do you want to take it on? Yeah.
So Atoms has done versus India. It's 40-50% kind of an underperformance. FI still yesterday were like selling $1 billion a day. They are still about 80 to 83% short. So I think from a positioning point of view, I think we should have more legs, and I think technical people can tell you better. And I think some of the stocks in the broader market, the correction in small caps, you have stocks like 40-50% down. Look at something like an L&T that's moved like 15%, 20% in last week or so, went down to almost 3,200. Now it's kissing 4,000. The energy sensitive ones can make a good comeback in large caps like M&M, L&Ts of the world, auto ancillaries. Then even small and mid caps, companies, the chemical companies, the crude derivative segments, which got impacted. So I think if as you probably will see first a beta kind of an upside, could be 4, 5, 6%, we don't know. And then it would come down to again valuations, earnings, because we are starting earning seasons led by IT, and I hope IT delivers, because that's one pocket which is really underperformed. And then from sitting on something.
Morning, and so that's a good message to have. I'm just wondering though, those stocks beyond the oil sensitives, right? You had stocks that were reacting to a helium. Because there are clear avenues for you to deploy. Financials, for example, you mentioned a Larsen, where a significant portion of its revenue pool is still comfortable and where it could benefit from horses on those that could still be disrupted?
So not really. For example, supply chains. Anyways, as I said, you need to monitor the state of Hormuz in terms of the actual movement. Now, I think that's a critical one. Mind you, there is RBI policy today, and I think something more will be done to rupee. Right now, what they have done is more short-term measures, which is forced selling of dollars by bank. I think what we have not seen is scheme. I think maybe it's a little too early for it, but something would be done to encourage foreign capital inflows. And I think that to me could be another trigger. We already have so much FDI, which is supposed to come in BFSI space, almost to the tune of $10-11 billion. Second, I think huge inquiries on defense. Just to give you, for example, on ballistic missiles, India is just making about 120 to 130 missiles a year, the entire ecosystem. We need about 5,000, right? Similar. We have 21 regiments, just about 6-7 have got them. Same for, drones, anti-drone systems. We met and spoke to a lot of listed, unlisted players, including, for example, Solar, including Prima. So anything to do with defense, precision engineering, capital goods, I think India stands to be a big beneficiary, irrespective of whatever the supply chain disruptions have been.
Today, right? There would be crude sensitives, etc., all of them which were beaten down so much that there is a natural spring effect. But does, for example, a 10% up move on a interglobe, all right, and it was not damaged, the earnings were not damaged the way OMCs were, or hospital names which are down 30%. Do you buy any of them which have started between 5 and 10% higher today?
Not really, Neeraj. As I said, in energy, I would rather still buy refiners. Really look down the curve and see it has done nothing for 3 years. Geo IPO is around the corner. Already they've got an approval for 2.5% offloading. Somebody like a Chennai Petroleum, where, refining margins are good, and this is something which could be in scarce capacity. Then you can look at you got to be a little careful. We may still have something, right? It's just a ceasefire. I don't know what Israel does. So there's still bit of an if and but there, but something which is more structural, right? Where so on the have the segmental support with this coming in, and it's a solid structural stories coming from that. So I would prefer to be there rather than look at only pure bounce back names. And maybe metals. I think, what we are now probably going to see is, a hard asset being a significant part of our opportunity you get. Have that as a portfolio insurance in the portfolio.
Pankaj Murarka Johnson in the conversation as well. Pankaj, I remember a line from you earlier that don't confuse brain. Too soon to call that right now?
I would argue probably this is a beginning of another leg in this ongoing bull market. I count that we are macroeconomic fundamentals were challenged was in 2013 when we had the global taper tantrum in US. And as a consequence, Indian currency had gone for a toss. We had a significant current account deficit, inflation was high, and we had a significant macroeconomic challenge. What is relevant is that once the shock ended, over the next 12 months, index was up by about 45%. The point I'm trying to make is whenever India gets these kind of macroeconomic shocks, a week back when I was on your show, that don't look at the screen, because the screen might look frightening. The screen is expressing capitulation. You have to look beyond the screen when you are in the midst of a crisis. The medium-term, long-term story of India remains much in equities, because we're coming out of a cycle of significant underperformance in equities.
Yeah, today is a day to look at the screen, though, one would say, Pankaj. Great to have you on. Nirav, great to have you on. So welcoming Nirav Sheth, MK Global Markets Open, to talk about what's going on. Nirav, today is the day many will come and say, I always had faith in India. But there was a moment there which was looking fairly scary. The fact is that a lot of top brokerages have lowered their Nifty outlook. They've lowered their GDP outlook for India. They've increased their inflation outlook. Looking at some of those views?
Yeah, even without the ceasefire, right? So I think we tend to overestimate the impact of these short-term events. So this is not the first time that a war has happened in the world, right? So we've seen so many things. I don't think that last time we are going to see anything worse than what happened in pandemic, right? 3 days, despite the global headlines was obviously getting, the narrative was something else. And the markets are fairly resilient. So markets are very, very forward-looking. So 1 or 2 quarter cash flows are you going to consider when you try and value the cash flows of a company over a lifetime? Yeah, so to answer your question, you'll downgrade over the de-rating leading into the war. You'll see a re-rating now, even though earnings may catch up only after 2 quarters. And I'm fine with that.
Okay, so all right, so that's an important point, Gurmeet. On that note, policy, so there's certainly an action-packed morning. Pankaj, I want to come to you ahead of the IT earnings season as well, and at least for a short while, and I know that you track this with this right now, because it's not necessarily performed as some people might have anticipated. It got beaten down and got pulled back maybe amidst this conflict as a defensive buy.
Well, Alex, we continue to remain positive on IT as a sector. I think the sell-off that happened, let's say in February, was more out of the fear of unknown, where the market fear was completely mispriced. Some global software companies might get impacted or disrupted because of AI, and market has the case with IT services companies. In fact, we firmly believe, I'm a firm believer that AI will augment business for IT services companies. So I think while you're right that in the last few weeks or months, IT has been a great defensive in a market which was otherwise challenged. But I think from a slightly more now in the sector after a very long time are closer to where we had seen them during global financial crisis in 2008. Directionally, in terms of business performance, we clearly think that the has been very strong for the sector as a whole over the last 4 or 6 quarters. And probably at some point of time, as AI diffusion increases, the growth trajectory for this company will improve. So I think it's a great opportunity for investors having a slightly.
Would you look at financials favorably now? Financials and some of your, do you have a list in your mind of those stocks that were beaten down terribly because of the Middle East crisis? Very obvious to all, which will see an immediate rebound, because clearly the Strait of Hormuz is now going to be reopened and stay open in some form or fashion.
Well, Okay, having said that, I think financials is a must buy. What we've seen in the month of March was when you get and it's very logical that when you get a macroeconomic shock, financials is the first. Financials fell much more than the Nifty index. We don't see asset quality concerns in the sector. I think the balance sheets of banks and banking sector is probably one of the finest that I have seen in a very long time. Yeah, valuations are very reasonable, and we are already seeing signs of improving credit growth. Credit growth for year ended March 20. I think we are in the midst of a recovery as far as credit growth is concerned. So I think, and valuations are very reasonable in financials. So in that backdrop, definitely yes, I think financials is a must buy given the way the sector has been beaten. L&T because they have a large piece of business in Middle East, and probably autos is a sector which was again beaten down because of the fear of higher fuel prices having a demand shock. While we might still have some fuel price increase, but I think it's a shock which consumers and economy can absorb and we can sail through it. So autos have been beaten down as well, including auto anchors. So I see a lot of opportunities there as well.
Pankaj, it's a little tough to believe when Pankaj Murarka comes and says, I don't have money to invest. But
Because he's fully invested.
Yeah,
he's fully invested. That
It's a good time to be fully invested, I think.
It's a good time to be fully invested. I know. So I want to go to Nirav, but there is an interesting. Just before I get to. Yeah. Sorry, Pankaj. Yeah. Sure.
You would have asked this question to one of my ex-mentors, the late Mr. Junjunwala. He would have said, this is the time to borrow money and invest more if you don't have money.
I wonder if Nirav Sheth is telling that to his clients, but okay, there is some flashes on your screen which bring out what Donald Trump is saying, Tamanna, Alex.
Yeah.
An interesting point. So what? Is Donald Trump saying that?
he has already made it possibly. Okay, another thing that stood out for me, we're reading out what he's saying. Big day for world peace. Iran wants it to happen. They've had enough. Likewise, so has everyone else. Strait of Hormuz. There will be lots of positive action. Interesting that the line that Neeraj saw was big money will be made.
I'm not surprised.
Iran can start the reconstruction process. We'll be loading up with that it will. Just like we're experiencing in the US, this could be the golden age of the Middle East. I mean,
I'm surprised the one line is missing.
I know, I was just going to say, thank you for your attention to this matter.
There is more.
What do you make of, all the reconciliatory off-ramp statements that have now come in the last 24 hours, if you will? Israel did it 3 days back as well, that our objectives are achieved. Do you believe, and it's all a hypothesis, right, Nirav? Are you making that hypothesis that this is the market? Would you say the same?
So you're asking the wrong person, because I was wrong in my assessment. I would not have expected the war to last such a long time. Think of it. You are And absolutely, I have no doubt that if you want, US can actually bomb Iran to the Stone Age. There is no doubt about it. You're just trying to avoid any civilian casualties. So this has defied out logic, no matter what, right? So, and please, at least the way I look at it, right, is that Iran doesn't have a announced. You expect that you'll be able to rule the country post ceasefire. Because no one is going to try and come out of the streets once the war is on. But once the ceasefire is called, you can see a social unrest happening, and you need money for that, right? So this is a lot of this. Please think of it that the you have that kind of money, right? So these had to come to an end. I have no doubts about it. So I am completely in sync with what Pankaj says, that you should be borrowing and putting the money right now. And for all you know, the markets could again tank for 2 or 3% tomorrow, depending on what happens after the next 15 days.
Okay, interesting. So Nirav, Pankaj has given us a small idea of where is it that he's finding favor. Where is it that you, as somebody who's advising large institutions,
thing that I differ with Pankaj in my view is that I am still very terribly bullish on IT. So anything that gets disrupted, I don't even bother to look at valuations.
Nirav, I must say, sorry to so if that is indeed the case, then it's kudos. But yeah, please finish your point.
No, so I am happy to go wrong, but the sector is getting disrupted. That is something real, that is profound, that will change. It is very, very distributive over the next 5 or 10 years, right? And I'm not even talking about AGI. You don't need to go to AGI. So it is not that, they'll stop growing. But the fact of the matter is that they are running on a treadmill. So you'll have disinflationary impact and then you'll have some volume uptake. But they have become X growth as far as I'm concerned. So, right. So this is all, we're trying to focus the future. You can be bullish on almost everything, right? And please understand that you can also now try and start looking at bottom-up stories. As a matter of fact, L&T, I think, could get significantly because you would expect now bidder terms of what happens, right? So you will try and see that there are alternative pipelines and stuff like that, right? So there are a lot of reconstruction that is going to happen. In India, there is a lot of, I mean, how could you even conceive of a situation India?
So there will
so all these things going to come in.
There will be a lot of things that change in the interim. Absolutely. So good points that are being made. And of course, I know that Pankaj will have a lot to say about IT and artificial intelligence. The coverage of the Reserve Bank of India's monetary policy review, which we've kind of pushed to the back burner for a short while. Thank you so much, gentlemen, for taking the time. Pleasure speaking with you as always. We have to slip.
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics.
Welcome back. At the high point of the day for the Indian equity markets, ahead of the presentation of the review of monetary policy by the MPC of the Reserve Bank of India. And we're lining things up ahead of that conversation. Bond yields also coming off quite substantially, as much as 13 basis points for the 10-year benchmark, and the rupee coming off by as much as 43 paise. So it's all good this morning for the Indian equity markets as well as the capital markets as a whole. We've got a power-packed lineup before the presentation of that policy review. We've got R. Gandhi, former Deputy Governor of the Reserve Bank of India, someone that you'll all recognize. And we've got Garima Kapoor as well, economist and Senior Vice President at Elara Capital. Thank you so much to the both of you for taking the time. Let me go across to you, Mr. Gandhi, just to get a sense of what the Reserve Bank of India's tone and tenor is likely to be, not just on monetary policy, but also on currency management, because that has been absolutely key in this conflict.
Thank you. Thank you for having me. Of course, the general expectation is that there won't be any change in the rates. The most likely Reserve Bank will also continue on that basis, and they are unlikely to change the stance also, because whatever is the effect of West Asian conflict, it needs to be gone through. So naturally, pause will be the right approach. I would believe that's what MPC would also conclude. So on the MPC front, that's what we should be expecting. No rate action, no change in stance. Then about the growth and other thing, let us see what is their models predict for the next coming quarters, both growth and inflation forecast. And obviously, there are unlikely to be big surprises there. I don't expect big surprises there, to the extent that West Asian conflict will have some dent in terms of demand and supply disruption. And I think there could be some muted response to that, both in growth calculations and to some extent on the inflation forecast also. But they all will be in the range which can be managed. That's what I would presume there. Now, beyond monetary policy action, that's what you asked specifically, because rate and the currency management is not in the direct remit of MPC, that is in the direct remit of Reserve Bank of India. There is watchful, as ever, Reserve Bank would be continuously looking at the market on a day-to-day basis, not just day-to-day, within day also, at different points in time, they will take stock of the situation, emerging situation. Accordingly, they will react. So that they will be fully ready. The powder is really available dry.
Right, sir.
Nearly 700 billion reserves are available.
Noted.
So that's what a cautious, ever ready to be interact.
Got it.
That's what.
Okay. Well, I think, yeah, it'll be interesting to see that language, maybe more than an action too this time around, and whether the language is a bit tense or otherwise. Garima Kapoor, as we said, economist and senior VP at Elara Capital joins in. Garima, we know that crude averaging higher would have a big impact on growth, and the RBI would be cognizant of that. Also would be cognizant about the fact that liquidity at the current time cannot be taken out because a lot of companies and the MSMEs really badly need it. What do you think is going to be the most obvious course of action from the Reserve Bank?
Hi. I would reckon the policymakers so far, including RBI and the government, are treating this shock as an external shock and responding almost akin to what they responded during COVID crisis. They're trying to use the balance sheet strength to make sure the impact is fairly limited at the bottom of the pyramid, either on the consumption, and the pass-through hence to inflation and other variables is limited. In my assumption, because RBI started with a baseline assumption of 88 to the rupee in the monetary policy report and 70 to the crude oil, nearly these assumptions are now completely outdated in the line of the new reality. Even if you assume that the truce or the ceasefire extends into a complete stoppage of war, the normalization of energy markets is going to take at least a quarter. So we're looking at oil prices and gas prices settling much higher than what they settled in the pre-war period, even if the war was to escalation was to come to a complete halt from now. So I do see there is an upside both to inflation as well as a slight downside to growth. But remember, it is very difficult for a central banker to present an outcome basis one single scenario. So they're likely to use a more differentiated scenario and likely to give probably a forecast either in the range or with a baseline that if different assumptions were to be taken into consideration for both oil and gas, where would we stand in terms of growth as well as inflation?
Garima, hi, very good morning. Tamanna here. Do you see more, I would say, rupee saving measures coming out from the RBI? And what do you expect to hear from the governor in his speech, which starts in a few minutes, vis-a-vis the rupee? Because the rupee was in that trajectory even before the crisis made it worse.
Hi, Tamanna. I think the measures that RBI took early last week and then later last week relating to net open positions to curtail the speculative attack on the rupee, I would say they were fairly aggressive, far more aggressive than they have taken in recent times. If there is natural expectation that now the war is going to subside and de-escalation is the path here on, rupee has a natural floor. But remember, here we're talking about a new normal where current account deficit is no longer going to be 1% or sub 1% below. So we're looking at a funding which is going to be challenging. We were struggling with funding even 1% current account deficit. Now you were looking at a current account deficit in upwards of 1.5% to 1.7%, even if the war ends. We are going to probably look at whether FPIs and FDI resume as quickly as we anticipated. And there's going to be some earnings cut, which is likely in the first quarter as well. So there is going to be pressure on the rupee, which is structural. Just that the de-escalation keeps the range much more subdued. And hence, I think rupee should trade anywhere between 93 to 95 in the near term, even with the de-escalation scenario.
Got it. All right. We're also joined by Jayesh Mehta, Vice Chairman and CEO of DSP Finance. And Jayesh, very good morning to you. We're speaking about the currency as well, very prominently ahead of the presentation of the review. What's the view on the move today, though?
I think till 10th December, as the unwinding happened, definitely there is pressure on selling, and that selling will continue. And I think, as the previous speaker was saying, we will have to see, in spite of this respite, do we see FPI flows coming in or not, right? That, I think, if that continues, like before, which is just before the war, 3,000, 4,000 crores every day, I think that's a problem. That needs to be plugged at some point of time. It needs to be plugged somewhere.
Jayesh, in terms of measures that RBI can take to plug in that point, because from what we're hearing and the conversations we're having, that FIIs are not going to come back anytime soon. Maybe the outflows or the extent of outflows may come down, but the reverse process is not going to start anytime soon necessarily.
We don't need that. We just need to stop the outflow, right? It's like almost 3,000 crores a day, which is like almost $4.5 billion a month, which is more as equivalent to gold or maybe $50 increase in crude was $60 billion a year. This is like $50 billion a year. So I think that's something we need to see how we can at least stop it. We don't even need the flow, but at least that outflow needs to stop. And that's need to really looked into.
So Gandhi, just wanted to get a sense from you. I know we're speaking in the context of a ceasefire right now, crude coming off, but the fact is that crude is still closer to $100 a barrel versus $65, $70 a barrel. Inflation targeting is something that you're going to be hearing or hoping to hear from the RBI in terms of clarity?
Yeah, and just as Garima just now mentioned also, there will be a recalculation because the earlier assumptions were either on the higher price of oil or other things have gone a little different now. So they will definitely be recasting their forecast about inflation and growth. So in the immediate quarters, there will be some impact of that negative impact will be there. But because it is the only one that's unlikely to be persisting, so it should be manageable, and the inflation trajectory will also be well within the corridor that has been prescribed under the inflation targeting measure. So there is no risk as of now that inflation will be going much beyond the corridor. Obviously, no. It will be more trending towards the mid-range only, the target range only. So that way it should be all right for the MPC to have a stable look at and not being perceiving any serious damage so quickly. That is unlikely. So the inflation targeting will continue. That I don't think anybody will now there's an argument that we should have a different philosophy for managing inflation.
On the point of the currency, Mr. Gandhi, just wondering on the toolkit that the Reserve Bank of India has, it hasn't necessarily had to use tools that it has used, say for example in 2013 or thereabouts, right? Do you anticipate that that will need to take place?
Everything depends upon how far quickly we are able to restore near about normalcy in the forex market. As just now Jay also mentioned that if the outflows have been curbed because of the developments both in the political economic scenario and otherwise, then such measures one will not definitely be needing it. So if the situation worsens and if it has to be much more stronger action is needed, that's where RBI will dip into further tools within their kitty. As of now, whatever they have done in the past 2 weeks, based on that, rupee has reacted. It raised its strength. Volatility has come down. To that extent, it is responding. So I don't think immediately there is a need to further aggravating tools to be used. That depends upon further evolving situation only.
We have less than a minute left, but Jayesh Mehta, that one measure that you would want to be seen from the Reserve Bank, either in statement or in action today?
No, I think just the confidence. I think the growth focus is something what we should look at rather than everybody focusing on inflation. So maybe if they say growth focus, that should be good.
Okay, growth focus. Garima, very quickly, 10 seconds to go. Your top measure.
I think comfort on liquidity, because that is most crucial. You do not want the financial conditions to tighten.
Yeah, I think that's important, guys, isn't it? Because the MSME sector is clearly struggling for liquidity, and you want the Reserve Bank to not do anything untoward there.
And namaskar.
Yeah.
Let me welcome you all to the first policy of this financial year. At a time when the global economy is facing unprecedented challenges, from heightened geopolitical tensions, the conflict in West Asia, for which a temporary ceasefire was announced today, and the disruption in global supply chains. Before the outbreak of the West Asia conflict, India's macroeconomic fundamentals exuded confidence, with buoyant growth and low inflation. Conditions, however, turned adverse in March with the widening of the conflict zone and its intensification. The fundamentals of the Indian economy are on a stronger footing at the current juncture than it was in previous crisis episodes, as well as relative to many other economies, providing it with greater resilience to withstand shocks. Global growth faces increasing downside risks as the sharp rise in energy prices and shortages, some of which we saw a correction today in the prices of energy, and shortages of inputs for various industries have stoked inflation fears and pushed up the geopolitical risk premium in the oil markets. Heightened uncertainty precipitated by the ongoing conflict is weighing on the outlook. Safe haven flows have exerted depreciation pressure on currencies of major economies as the US dollar strengthened, while commodity prices such as of metal and gold have moderated. Financial markets have become more volatile. Equities registered a broad-based correction. Sovereign bond yields, already elevated due to long-run fiscal sustainability concerns, driven by inflation fears, have hardened across major economies. I now come to the decision of the Monetary Policy Committee. The Monetary Policy Committee met on 6th, 7th, and briefly today in the morning of April to deliberate and decide on the policy repo rate. After a detailed assessment of the evolving macroeconomic and financial developments and the outlook, the MPC voted unanimously to keep the policy repo rate unchanged under the liquidity facility at 5.25%. Consequently, the STF rate remains at 5% and the MSF rate and the bank rate at 5.5%. The MPC also decided to continue with the neutral stance. I shall now briefly state the rationale for these decisions of the MPC. The MPC noted that since the last policy meeting, geopolitical uncertainties have heightened significantly, headline inflation remains contained and below the target. However, upside risks to the inflation outlook driven by increased energy prices, pressures, and probable weather disturbances affecting food prices have increased. Core inflation pressures remain muted, although supply chain dislocations and the risk of second-round effects render the future inflation trajectory uncertain. The MPC further noted that high-frequency indicators till February of this year suggest the continuation of strong momentum in economic activity. Growth impulses continue to be supported by robust private consumption and investment demand. However, the West Asia conflict is likely to impede this growth. Higher input costs associated with increase in energy prices and international freight and insurance costs, along with supply chain disruptions that could constrain availability of key inputs for downstream sectors, would impair growth. The government has taken several measures targeted at supporting exports and protecting supply chains. This should mitigate the adverse impact of the conflict. The MPC opined that the intensity and the duration of the conflict, as well as the resultant damage to the energy and other infrastructure, add risk to the inflation and growth outlooks. However, the fundamentals of the Indian economy are on a stronger footing, providing it with greater resilience to withstand shocks now than in the past. It also noted that the economy is confronted with a supply shock. It felt, therefore, prudent to wait and watch the changing circumstances and the evolving growth inflation outlook. Accordingly, the MPC voted to keep the policy repo rate unchanged, even as it remains vigilant, closely monitoring incoming information and assessing the balance of risks. The MPC also decided to continue with the neutral stance, retain Before I provide an assessment of growth and inflation now, let me briefly elucidate on the channels of conflict. First and foremost, elevated crude oil prices could increase imported inflation and widen the current account deficit. Second, impact industry, agriculture, and services, reducing domestic output. Third, heightened uncertainty, increased risk aversion, and safe haven demand could impact domestic liquidity conditions, economic activity, consumption, and investment. Fourth, weaker global growth prospects may dampen external demand and reduce remittance flows. Finally, adverse spillovers from global financial markets could tighten domestic financial conditions and raise the cost of borrowing, some of which we have already witnessed. Overall, the initial supply shock can potentially supply chains is delayed. I now come to the assessment of growth. As per the new GDP series, real GDP corroborates the underlying strong momentum in economic activity supported by robust consumption and investment amidst supportive policy measures, ongoing structural reforms, and favorable financial conditions. Going forward, elevated energy and other commodity prices, as also shocks to availability of inputs due to disruptions in the Strait of Hormuz, are likely to impact growth this year. The government has, however, been proactive in ensuring supply of inputs across critical sectors to minimize the impact of supply chain disruptions. On the other hand, sustained momentum in services sector, persisting impact of GST rationalization, which was carried out last year, and the healthy balance sheets of financial institutions and corporates should continue to support economic activity. The agricultural sector's prospects are supported by healthy reservoir levels, business expectations remain optimistic, and leading indicators point towards continued resilience in manufacturing and services sectors. Moreover, the government's focus on scaling up domestic manufacturing in several strategic and frontier sectors augurs well for India's ensuing growth trajectory. On the demand side, private consumption this year is expected to be supported by discretionary spending. Rural demand remains robust. It should gain further traction on the back of favorable agricultural conditions and a healthy labor market. Urban consumption is likely to strengthen further, aided by the beneficial impact of GST rationalization and the buoyant services activity. While the government's thrust on infrastructure spending continues, the revival in private sector investment is expected to sustain on the back of high capacity utilization, strong credit growth, and benign financial conditions. On the external front, merchandise exports could be adversely impacted from disruptions to key shipping routes, the concomitant rise in freight and insurance costs, and lower global demand on account of the conflict. However, merchandise exports may benefit from the recent trade agreements, many of which were signed last year, and few of them are now in implementation, and others to become operational hopefully this year, while services exports are expected to remain resilient. Taking all these factors into consideration, real GDP growth for this year is projected at 6.9%, with Q1 at 6.8, Q2 at 6.7, Q3 at 7, and Q4 at 7.2%. Further escalation and wider spread of the conflict, as of now, of course, we have a ceasefire, heightened volatility in global financial markets, and weather-related events, however, weigh on the domestic growth outlook. Risks to the baseline projections are tilted to the downside, with uncertainty remaining elevated due to the ongoing West Asia conflict. Coming to inflation, in January, February, headline inflation continued to remain below target. It was 2.7% and 3.2% respectively, with food group recording inflation. It was in deflation mode, as you are aware, in the previous 4 months up to December. Inflation in fuel terms was modest, core inflation at 3.7%, and the underlying price pressures benign, as evident from the much lower core inflation if you exclude precious metals. Turning to the inflation outlook, recent spikes in energy prices due to the conflict have emerged as a risk, although retail prices of petrol and diesel have remained unchanged so far. The pass-through of higher global energy prices has resulted in some price increases in a few other fuel items. Food price outlook remains comfortable in the near term, with a robust Rabi production that we had, adequate reservoir levels which would help agricultural activity, and comfortable buffer stocks of food grains. The likely emergence of El Nino conditions could pose a risk. Considering all these factors, CPI inflation this year is projected at 4.6%, with Q1 at 4, Q2 at 4.4, Q3 at 5.2, and then going down in Q4 to 4.7%. Core projection is projected at 4.4%. We are doing this for the first time, as has been the demand from some quarters. And going forward, we shall continue giving our projections for core inflation too. Excluding precious metals, core inflation is even lower, indicating that underlying inflation pressures are expected to remain contained. The risks are on the upside. I shall now speak about the external sector. Global trade is expected to witness a slowdown in growth during 2026 as compared to 2025. This is due to the lingering tariff-related uncertainties, despite the Supreme Court judgment, ongoing West Asia conflict, and elevated energy prices. India's merchandise exports contracted by 0.2% during the first 2 months of this year on a year-on-year basis. This was a result of export contraction in key markets. Merchandise imports, on the other hand, recorded a double-digit growth of more than 22%. This is largely driven by higher gold imports. As a result, there was a widening of the trade deficit. Expected robustness in services exports and inward remittance receipts during Q4 last year, however, should keep India's current account deficit moderate and within the sustainable level last year. Rising global uncertainties and elevated prices of key energy commodities pose some upside risks to India's current account deficit this year. The recent bilateral and regional trade agreements with major trading partners are expected to boost India's trade and investment opportunities, while at the same time, they will also widen and diversify India's trading partners and integrate India into global value chains. On the external financing front, gross FDI witnessed a strong growth, almost about 20%. Net FDI also showed improvement on a small base of last year. India remains an attractive destination for greenfield FDI projects. FPI to India, driven by outflows, primarily in the equity segment, recorded net outflows of $16.5 billion last year. And even this year, till we have data till April 6, there were outflows of more than $5 billion. Flows under ECB and non-resident deposits too moderated as compared to last year. And as on April 3, for which we have data, latest data till April 3, India's foreign exchange reserves stood at a healthy $697.1 billion. These are adequate in terms of the standard metrics of reserve adequacy, whether one sees it from the perspective of import cover, we have about 11 months, as has been the case for some time, or whether one looks at it from the perspective of external debt. Reserve adequacy, whether one sees it from the perspective of import cover, we have about 11 months, as has been the case for some time, or whether one looks at it from the perspective of external debt. Overall, therefore, India's external sector indicators remain favorable. Nonetheless, elevated global geopolitical, trade, investment uncertainties require a continuous vigil of the evolving developments. Despite stronger macroeconomic fundamentals, the Indian rupee in the last financial year depreciated more than the average in the previous years. In this regard, let me reiterate, I've said it many times, our exchange rate policy remains unchanged. Specifically, intervention in the foreign exchange market is aimed at smoothing excessive and disruptive volatility without targeting any specific level or band of price for the exchange rate. This is consistent with our long-standing policy of exchange rates being market determined. And we in the RBI stand committed to this policy and would judiciously continue to contain excessive or disruptive volatility to ensure that self-fulfilling expectations do not exacerbate currency movements beyond what is warranted by fundamentals. I shall now be speaking on the liquidity and the financial market conditions. System liquidity, as measured by the net position under the LAF, stood at an average daily surplus of 2.3 lakh crore rupees since the last MPC meeting. The Walker since then has traded in the lower half of the corridor, except towards end March, which is a yearly phenomenon. Short-term money market rates, especially those of CPs and CDs, commercial paper and certificates of deposit, they remained elevated. G-Sec yields remained largely range-bound with a softening bias in February. But thereafter, on account of the ongoing conflict, they hardened, as did the global yields, along with the rise in the energy prices. Transmission in the credit market has remained satisfactory. To ensure sufficient liquidity in the banking system, the Reserve Bank proactively undertook durable and transient liquidity measures. Going ahead, we will continue to be proactive and preemptive in liquidity management and ensure sufficient liquidity in the banking system to meet the productive requirements of the economy. As for the financial parameters of the banks and the NBFCs, let me inform all of you that the parameters related to capital adequacy, liquidity, asset quality, and profitability of the scheduled commercial banks continue to remain healthy. Similarly, the system-level parameters of NBFCs too are sound, with adequate capital and improved GNPA ratios. As per the latest available data, credit from all sources, not only bank but also non-bank and others, grew at 14.3% YOY. This is in comparison to the 11.7% growth that was witnessed a year ago. Bank credit growth too maintained its upward trajectory. You are aware it had gone down to about 9% in mid-2025. Moreover, it has remained broad-based. I shall now, as has been the practice, announce some measures related to some additional measures. They relate to ease of doing business, capital adequacy for banks, and market developments for one of the segments. I have three measures for promoting ease of doing business. First, to facilitate better utilization of bank board's time. This has been a request from the banks. We have done a comprehensive review of all our extant instructions, which are spread over various directions and regulations. And we propose to now revise and rationalize the matters which require attention of the board. Hopefully, this will result in the board being able to divert more time on policy matters, leaving operational matters to the management. Second, you would recall that we had recently in 2025 done a detailed exercise to consolidate over 9,000 regulatory instructions into 238 master directions. Now, a similar consolidated exercise has been completed for all our supervisory instructions, and we shall be issuing the consolidated instructions in this regard. Third, to facilitate ease of doing business by MSMEs, we propose to dispense with the requirement of due diligence while onboarding them on to various TREDS platforms. For capital adequacy of banks, there are two measures proposed. First, it is proposed to remove the condition regarding NPA provisioning for inclusion of quarterly profits in their CRAR computation. Second, in view of the developments in prudential framework over the years, it is proposed to dispense with the requirement which was laid down a few years ago to maintain an investment fluctuation reserve as an additional buffer to hedge against depreciation in the value of investments. For further development of the term money market, there is one measure, as I mentioned. We have decided to permit certain additional categories of non-bank entities in this market segment. You would be aware only banks and standalone primary dealers or SPDs are today eligible to participate in this market. We are also enhancing the borrowing limit of the standalone primary dealers in the term money market. To conclude, global economic conditions and sentiments have soured after the outbreak of the West Asia conflict. These have adversely impacted the growth inflation outlook. As reiterated before, we shall remain vigilant of the evolving situation and put in place policies that prioritize the best interest of the economy. Thank you, Namaskar, and Jai Hind.
All right, so I wonder if there was any last-minute tweaks to that speech because of the ceasefire that was announced by the RBI Governor, possibly in just one line where he says, okay, now we have a ceasefire. On expected lines, no changes in the repo rate, stance remains at neutral. What stood out for me is that the growth targets have actually been upped, and it's at 6.9% for FY27. Which was earlier 6.5. So it's actually gone up 6.4, I think. FY26 GDP growth at 7.6% versus 7.3. So all growth targets have gone up. Inflation projections have also gone up as expected. So you've had one up move over there, and maybe inflation targets you can't completely compare because the series has also changed. The CPI series has been changed. I wonder if the growth targets are a bit optimistic, but especially Q4 at 7.2 is looking exciting.
Yeah, and for FY27 as well, Tamanna, you're right, 6.9% versus the optimistic estimates were 7%. And I remember Pranjal Bhandari telling us that if crude were to average higher, 6.4. Just one very important line to my mind. He mentioned that we'll ensure sufficient liquidity to meet product needs of the economy and to be proactive and preemptive in liquidity management. So important at the current point of time.
Yeah, there's a fund that has been like cooled off for banks as well, so that is also important and quite necessary. Basically, there's an investment fluctuation reserve that banks have to keep, and the RBI has proposed to dispense with the bank's requirement to maintain that reserve. So a little bit of ease being given to banks as well. I mean, the Bank Nifty was already doing well, but now about 5% up. So a lot to cheer over there. Tanvi Gupta Jain joining in, Chief India Economist at UBS Securities. With us on the conversation now, Anurag Mittal, Senior Executive Vice President and Head Fixed Income at UTI AMC with us, as is Radhika Rao, Senior Economist and Executive Director, Group Research at DBS Bank. Welcome to all of you. Mr. Rao, I'm going to start with your first comments. Expected as neutral, but just the growth projections which came in, how did you see that?
Hi, good morning. I think, certainly. I think it was a sign of judicious policy approach, I would think, given developments are changing by the day, if not by the hour. And in terms of the forecast, I think in the last fiscal meeting, the new GDP series and the new inflation series were expected to be announced. So they really didn't give any specific numbers. So from that point of view, I think they are looking at, so if you see fiscal 26 is at 7.6, very much in line with what the GDP numbers were announced by the government. And the second one being for fiscal 27, they are at 6.9. So they are kind of reflecting a bit of a slowdown between the year that's gone by and the new year. If you look at the quarterly numbers, I really don't see that much of an impact in the first quarter, but looks like the second quarter, they could see up higher inflation and lower growth. So kind of, expecting price pressures to show with a bit of lag. So overall, I would say not too far from, I think they're trying to give a sense of an impact, but not too much. At this point, our inflation numbers kind of match what the central banks are at 4.6 for the full year of fiscal 27. On growth, we are a bit more conservative at 6.5. We are assuming that the first half of the year, oil prices will stay high. And as a concluding thought, I think we need to remember that the markets actually behave on a very different beat compared to what the commodity prices do. We've seen that in the past experience of 2022. Commodity prices can stay high if supply does not get sorted, while financial markets kind of move on, so to speak. As you've seen today, where it's a ceasefire, but the reaction at least looks like this is like kind of the end of the war in Strait of Hormuz. It's going to reopen soon after.
Well, that's true, of course. And by the way, this is the stance of the RBI Monetary Policy Committee as well. I mean, most have unchanged and neutral stance. So I don't think there is any dissent there, unless I'm very wrong. But I don't see any dissent there. So it's a unanimous call taken by the entire MPC. Tanvi, how do you read into it? I also thought 6.9 for FY27, maybe a tad optimistic, but the RBI, of course, knows more than what I do. How do you think of that? And any other measure, particularly on the liquidity side, where the RBI seems to have assured the street that enough measures will be taken to ensure liquidity stays?
So I would say the overnight good news on the ceasefire would have definitely, gave some guidance to the RBI, because the policy I thought was quite balanced. It was more like a wait and watch approach. The RBI definitely sounded cautious because the situation keeps on unfolding. I mean, today we are talking about a ceasefire. Now we need to see how things are moving from here. Is it up and down? But if I look at their growth forecast, 6.9% have not really laid out at what oil price scenario they are building in. But I would say before the oil shock happened, we were at 7% GDP growth for India. And if oil would have been at $100 a barrel, my GDP growth was more towards 6.3. So 6.9% GDP growth that RBI seems to be assuming looks like is based on a very reasonable oil price assumption and not definitely any big supply side shock that we are seeing on either the LPG or LNG. So definitely very balanced and more in that wait and watch approach. Inflation forecast, I think, again, looks 4.6%, taking into account some oil price risk, some concerns about weather disruptions. Again, not very, I would say, over the top. Before the oil shock, we were at 4.3. We were looking at number can even go at 5. So I think RBI is somewhere in between. So not at $100 barrel oil and not at $70 barrel oil. Looks like in the assumptions. But clearly, I mean, right now liquidity is comfortable, but we all know what we are or what we were seeing in the last 2 weeks on the external situation. And external vulnerability indicators have kind of come to the forefront. Obviously, today things are looking much better, but I would say till yesterday we were all discussing how much pressure on INR could be coming because of this oil price shock and what are the geopolitical uncertainty seems to be holding up. So definitely the question is RBI has to be supportive of the liquidity in the money market. We were hoping that they would announce something more today. I mean, not for a situation what you're seeing right now, because liquidity right now in the system is very comfortable, but whether that kind of liquidity situation remaining comfortable is going to last for longer. But I think as of now, because of the ceasefire, and definitely hope is that the capital flows to India might recover. I think they have more in that wait and watch mode and didn't really announce anything which was significant enough without really having clarity on how things are going to shape up.
No, just to follow up there, Ms. Jain, what were you hoping for when you say we were hoping for a little more when it comes to flows?
So I would say till last night before the ceasefire got announced, my biggest concern for India was not liquidity, was not inflation, was not GDP. It was actually the external situation, the weakness in INR, because the funding, not the current account deficit, but the funding of current account deficit was a bigger problem. Even before the oil shock, we were looking at a current account deficit of $60 billion and a BOP deficit. With oil shock, current account deficit could be $80 or $100 billion. And where are we going to get that much funds to be able to, ensure that the current account deficit is well funded? Which means that at some point you should have seen liquidity in the system getting tighter as RBI intervenes in the FX market, especially in the spot market. We would have expected, not for the near term, but some more clarity whether RBI will be supporting the market through OMOs and FX buy-sell swaps to ensure that, the currency as well as the liquidity conditions, not only from the near term, but also from a 3-month point of view, or at least from the next policy point of view, are actually taken care well.
Okay, just before we go to Anurag Mittal, I think there is a news bit. Just want to mark this. The US courts have accepted Adani's plea to dismiss the SEC case, and I think as a result of that, you're seeing a very sharp reaction in those stocks. So watch out. Adani Enterprises is up 10%, Adani Green is up 10%. My guess is that some of the others too would have gone up substantially. Watch out for Adani Ports, 8.5%. I think there is a concerted move in all of those stocks in the session today. So keep them at the back of your mind. So that's the set of stocks you want to keep an eye out for. And we will, of course, give you details about this in a moment. Standard disclaimer, of course, the Adani Group owns NDTV. Anurag Mittal, Senior Executive Vice President and Head Fixed Income, UTI AMC, with us as well. Anurag, the conversation until yesterday was how much further on the currency, pressures on liquidity, so on and so forth. Things seems to have changed a little bit. I quite like Tanveer's quip that maybe the overnight developments might also have played a small hand in the commentary of the Reserve Bank of India. But did the policy come as per your expectation, or did you expect something else that has not happened?
No, I think the policy was on expected lines. Largely, the central bank had refrained from sharing their inflation and the GDP forecast because of the new series. So we were anyways expecting them to revise their forecast for the full year. And I think, of course, they have taken probably some impact of the recent oil price hike in their inflation numbers. Of course, we'll wait for the MPR to see what kind of crude and USD INR projections they have done. But largely, I think they have assumed a certain normalization in the second half of the fiscal year for the inflation. But largely, it's on the expected lines. I think also RBI's governor's statement on the proactive liquidity approach that they will provide liquidity proactively. I think that should also give comfort to the bond market. But the biggest, of course, comfort from the bond market came yesterday after the ceasefire, because there was a certain apprehension that probably next 15 days retail fuel prices will be hiked, and that would lead to a higher inflationary pressure. if crude probably stays around these levels between 85 to 90, the concern of the retail fuel price hike at least subsides for now. So that's a major relief for the bond market.
How do you see the rupee responding, Anurag, now that the ceasefire has come into place? And I take the point that was made on this conversation before that all asset classes are celebrating the ceasefire as if the war has ended. But having said that, what is the extent of recovery that you see in the rupee?
Largely, we give directional views on the rupee. See, RBI, after really removing the speculative bets through the NDF ban, I think now it's largely rupee is a function of pure demand and supply. And if you look at assuming $80 to $85 oil, you're looking at a current account deficit of probably a 1.6% of GDP. With this kind of inflation, probably our FDI and FPI flows outlook improves slightly. So we're still looking at a BOP deficit, but I think the gap that we were looking last week, or at least till yesterday, that's reduced meaningfully. So I think with this kind of situation, we don't see a material pressure on INR.
Just want to come to Radhika also on the part of the inflation projections. Do you think that the inflation projections could see some upward revision? Because at the end of the day, crude, while right now compared to 110, 112 is looking much better, but the fact is that we are not clear whether crude prices will retrace to earlier level. Do you see inflation as being that one factor which is most volatile among everything that the governor has talked about?
So certainly, I think in the commentary, what caught my eye was quite a bit of time spent on inflation particularly, and I think rightfully so, right? Because the central bank policy is on price stability. He did mention about weather, he did mention about oil, he did mention the risk of second round risks, across industries as well as across fuel products. And if you see the 4.6% at this point, and I was looking at the MPR very quickly for what are the revised numbers. So the baseline oil, which was at 70, is now at 85. And if you see the rupee, which was at around 88, I think, which is now at 94. So they have assumed about 20% increase in oil throughout the year. And I think that's why you can see that the growth numbers and the inflation numbers have been trimmed a bit, but not too much. Growth numbers trimmed and inflation added on. So coming back to inflation question, our number is also at 4.6%. Again, we should remember that this is the first month of the new fiscal year. So we are making a lot of assumptions in terms of how far oil prices will stay high, how far this will last. But I think a good assumption is that at least for 2 quarters, we will feel price pressures because supply does take time to adjust. It's not really as easy as switching off and switching on an oil rig, for example. So 3 to 6 months of disruption is very likely before you can assume that oil prices would probably come down towards the $90 mark. And now coming back to so inflation, I would say projection is right at this point of time. I think they're trying not to be extremely cautious. And an important assumption in inflation is what happens to fuel prices. Does that get hiked or not? Because right now we have really only seen an excise duty cut. We haven't seen. So back in 2022, for example, the first move was to hike fuel prices. But at this time around, this hasn't been done as yet. So until that happens, I think giving a 5% number for inflation would certainly not make much sense. So that's why I think at this point, given all the assumptions that in front of them, I would think 4.6% for fiscal 26 is very reasonable.
Okay, reasonable. Fair call. 4.9 is the RBI's assumption. 4.6 is the RBI assumption. 6.9 on growth is the RBI's assumption as well. We have Piyush Shukla from our team reporting from the RBI headquarters. He went through the whole page with the eagle eye, I'm sure. Piyush, what has stood out there?
Yeah, so the inflation, like you mentioned, is slightly projected upwards. GDP growth has, the forecast is slightly lower than the last financial year. Governor did mention about the fact that the elevated conflict in the Middle East region could result in a rising of crude prices. Our CAD also may widen because of the ongoing conflict externally. With regard to rupee, some very important comments that the governor made was that we enter and intervene intervene in the forex market only when we see excess volatility. We do not target any certain level. The governor has clarified that. There were also some measures have been introduced for the banking sector as well. Important ones being that the non-bank entities can participate. Few of them can participate in money markets. They have also enhanced the borrowing limit for primary dealers in money market. They have dispensed, like Tamanna earlier mentioned, with requirement of maintaining the investment fluctuation reserve, which is also equally important. One announcement that caught my eye was that they will revise and rationalize matter that require the attention of a bank's board. We have seen the developments happening at the country's largest private bank, HDFC Bank, in the last month, wherein its chairman resigned, citing differences between his personal values and certain business practices at the bank. So under this context, this is very important, the governor's measure that he has introduced. Of course, we will wait to get the fine print of what are these measures that the RBI will take.
Piyush, let's just reiterate the point of the measure that the governor has mentioned and its implication in the context of what we've seen with HDFC Bank. Can you underline that point again?
He has... Tamanna, that is the understanding that we get, at least from the initial remark that he has made in the statement, that they will revise and rationalize matter that require the attention of a bank's board. And as we understand, the former chairman had flagged certain issues that were discussed, and he was not content with certain business practices. So we need to see the finer print, Tamanna, but the broader context, I believe, is with regard to this, and we have seen other private banks also, some of the board room dramas in IndusInd as well. So this is one of the things that is major that was spoken about today.
So as I'm understanding it correctly, it's the RBI saying that they will rationalize what matters should be taken up by the board of the bank. Am I correct?
That's right, Tamanna.
Okay, so that is crucial, because the bone of contention in this case was also about why none of this has been brought to the bank's board, what is the role of the bank's board, and all of that. Today, though, of course, HDFC Bank about 5% up, as is the entire market, because of what we're seeing. Tanvi, just want to come to you on the possible headwinds we could see, which could spoil the picture. And the obvious one, of course, is a sliding back to a situation where the ceasefire doesn't last, and any of this could happen, that we come back to an escalatory tone, which is quite frightening, like we saw last evening before things seem to have eased up. But as far as India is concerned, how big a part does monsoon also play? What are the other factors that we need to look out as potential headwinds for our economy?
Valid. So I would say this time there is a 62% probability of El Nino, which has been laid out by a lot of international weather-related agencies. Reasonable water level in the reservoirs, but where it starts to hurt is the demand, because the consumer sentiment in the rural economy gets affected. If the monsoons are not good, maybe the crop yield is still okay, but that again could be a headwind, both from a food inflation perspective. Policy, and RBI Governor said that the rural demand is strengthening. But I think when I'm looking at the lead indicator for our rural activity indicator, it is telling me that the rural demand seems to be peaking out. And there are more headwinds than tailwinds from a rural demand perspective at this point in time, because last year we were seeing that the real rural wages were quite positive. There was a lot of freebies which were being transferred in the form of free cash transfers. And lastly, the monsoons, back-to-back 2 years of very good rains, were really helping boosting consumer sentiment. But all these three factors are kind of peaking out. I mean, we are talking about inflation going back to 4.6%, what is the RBI's estimate, versus less than 2% or around 2% number average inflation which we were seeing in FY26. So that's the first big headwind, that maybe even if the monsoons are not that great and the 1 year of bad rains is not such a big headwind, rural demand is definitely something we do see signs of peaking out. That is again something we are looking at. And second is the private corporate capex intentions. We have normally seen that whenever the geopolitical uncertainty goes up, corporates are cautious in increasing investments.
Yes.
And right now, we still have heard the good news of a ceasefire, but there are still a lot of uncertainty on that part. So that is again something that I will be looking or watching out very closely, because any uncertainty means as a corporate, I will be cautious. And at this time when there is offloading of China's excess capacity in India, that again is a headwind that I will be watching out.
Sure. Please stay on with us. I want to welcome Ashwini Kumar Tiwari, MD at State Bank of India. Mr. Tiwari, thank you so much for your time to us here at NDTV Profit and for taking out the time. Very important policy measures. Just want to get your first take on what you made of some of the points that the governor made.
So first of all, the policy was on expected lines, because with so much of uncertainty and the announcement of ceasefire came late in the night, the speech perhaps would have been ready by that time. So therefore, there was no way that any steps could be taken on either side. So I think in that sense, it was an expected lines policy. The other things regarding announcements, the governor has highlighted the risks which are there, the uncertainties remain. At the same time, clarified that the Indian economy has strengths much better than earlier, and therefore it should be able to cope up. And also the RBI is ready to step in with liquidity measures or others as and when required. Now with all this, the other announcements which are normally made at the end, and which normally as bankers we look at with a lot of interest. The first one, of course, was on the board matters, and I think it's a very important area, because over time, both due to LODR and also due to RBI requirements, the board agenda had become heavily compliance driven. And therefore, we will see what relief comes in. This will really help us to actually discuss strategy and the issues which are more relevant today than just the compliance which is required for multiple agenda items. So that was one. Second is, of course, the investment fluctuation reserve. It's a very important item again, because there'll be a lot of relief to the banks in this year, and will help make up to some extent with the MTM due to higher yields in the last few days of the previous financial year, though that hit has been taken in that previous year. And of course, it is also in line with the ECL norms, which may come in maybe this year or next year. And therefore, the build-up which will be required for that, this will be also go some way in terms of that. So I think some of those announcements were good. And of course, there were some other announcements which we still have to analyze. Primary dealers and all are also important announcements, but in the limited sense of those activities. So overall, I think, again, the policy is consistent, and the RBI has said that it remains on watch and vigil, as they said, in terms of handling any issues which may arise due to these uncertainties which are still playing out as per your economists. And we see this, that we have to see whether the ceasefire holds and whether the things revert back to normal and to what extent.
Mr. Tiwari, the RBI went out and explicitly assured that they'll be proactive as far as liquidity goes, and there'll not be any constraints. If anything, there will be measures taken to ensure that sufficient liquidity is there. At the current point of time, that was a good assurance, because we've seen that Q4 banking updates have been very strong as far as disbursements go too. Do you reckon that the fact that the conflict seems to be nearing an end, or at least as of now there's a ceasefire, plus the measures taken by both the government and the Reserve Bank of India, ensure that the banking system-wide liquidity and the disbursements continue as near normal as possible? Or is it difficult to say right now, sir, what will happen in Q1?
So my sense is that the credit demand continues to be strong, and the liquidity which will be provided and which is being promised will be really helpful towards that, because the Q4 towards the end, the deposit rates had really hardened, and hopefully they will moderate to some extent, which will help us in terms of both margins and also laying out credit. The thing which we have to watch out is now that hopefully the ceasefire will hold, but there has been some supply side shocks. And earlier these things go back to normal is what is important. And therefore, we are in discussion directly. And hopefully, once some measures are announced both by government and RBI, the temporary difficulties any MSME or any corporate might face could also be taken care of. So that's something which is being under which will continue.
Mr. Tiwari, just a ground feel of any distress from MSMEs because of the situation so far, because you've had 5 weeks of a standoff and conversations like that or feedback like that from key MSME customers?
So most of them, so far no impact in terms of the bank's asset quality, in terms of irregularity. Give you some examples, which were using gas directly, LPG especially. They were impacted and their activity level had come down significantly. So all of these companies are able to tide over a I said that this temporary support, which might be announced shortly, may help them and similar units to tide over this temporary issue of lack of cash flow, because if they are not able to run at that, hopefully will be taken care of if the war continues to have the ceasefire and other conditions revert back to normal. And we will be supporting them to the extent possible under the current circumstances. So everybody can tide over a small disruption, but on a longer term, it makes things difficult.
Fair enough. And we'll wait for those relief measures that you're talking about. Thank you so much, sir, for policy, just adding to the cheer in the market. Another important corporate story that we want to focus on, the US court has admitted Adani Group's plea to dismiss the SEC lawsuit. Remember, promoters had asked the US court to dismiss a securities fraud lawsuit brought in by the Securities Exchange Commission. Nisha joining in with more details. Nisha.
Yes, thanks for that. It's an important development because the US court in which this particular dismissal plea was filed, that US court has admitted the plea. That is the first step, but it also opens a very important legal opportunity for Adanis to present their case and also seek for the complete dismissal of this particular aspect. Now, let's go to the case that is in question here. It is an important development which pertains to the group company in the renewable energy space, Adani Green Energy, and Adani Group promoters moved a US court seeking the dismissal of the SEC lawsuit, which pertains to, remember, a US securities fraud case on the bond sale by the group's renewable energy company, Adani Green Energy. Now, remember that the dismissal of the lawsuit is sought on two grounds: lack of jurisdiction, and it argues the failure to establish any wrongdoing. Now, SEC had sued the failure to disclose bribery scheme which was tied to the promoters group while issuing this $750 million bond issuance by Adani Green Energy. Now, challenging this particular allege any investor losses, adding that the bonds matured and were fully repaid with interest in the year 2024. Dismissal plea also disputed the underlying bribery allegations, saying no credible evidence is really presented in this particular matter. On jurisdiction, Adani's dismissal plea really claims that the court lacks the personal jurisdiction, saying they neither had sufficient contacts with the US or direct involvement in this particular bond offering. And the $750 million bond sale, remember, was conducted outside of the US jurisdiction to non-US underwriters and only later resold in part to the qualified institutional buyers there. So dismissal filing really argues that SEC's case is impermissibly extraterritorial. Also, Adani Group promoters are seeking dismissal of the SEC case in full and prepared to really appear for the pre-motion conference if required, and this is a pre-motion letter filed ahead of a planned April 30th motion, and the US court has admitted the plea, and now the legal opportunity for Adani Group to present their case in terms of hearing, and then the US court can decide finally.
Okay, thank you for that, Nisha. Standard disclaimer here, you're watching this report on NDTV, which is part of Adani Media Group and part of the Adani Group as well. You're seeing all of the stocks react there, but not just one group. It's actually a market-wide reaction and a momentum that has sustained. Neeraj, I must say that profit booking is dur tak nahi dikh raha hai. I think people who have been sitting on the sidelines and wondering what's happening are maybe coming in now, and we'll wait and see if those FI figures show any excitement or not.
Just stole my words. Nothing more to add. Watch out for the FI numbers today evening. But the best show, Tamanna, that I've had in a lot of days. So happy.
Yeah, nice long one as well. All right, so we're leaving you with the markets doing very well. From Neeraj, me and the team that put this show together, thank you so much for watching. Stay tuned. All the action continues on the other side because we come back with Ask Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया
बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories.
I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets financial choices. And here's where you can watch us.
To understand the Tamil Nadu twist, join me in the midst of people, language and politics. Vanakkam Tamil Nadu, here we come.
हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार
I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, no. That you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed.
Up and raring to go. The stories that matter, the stories that shape your life.
Hello, welcome to watching Prime 5 with me, Aisha Sehgal. What's happening? How
Queries. My name is Puneet Zaveri. With me is Mahima Vachujani, and while we may not be appropriately dressed, the market's definitely taken a lot of positive cues today from the global ceasefire essentially between the almost 23,800 is something what we were watching out for. It's breezed past that, very close to the 24,000 mark now. So we're at 23,996 and
Just 4
inching
points.
upwards and onwards. We've reached that network, but overall, let's quickly look at the heat map also for the Nifty 50. It's a beautiful screen to say the least. Indigo, L&T, all beaten down names have seen a massive comeback in today's trading session. So has Adani. 7% gains, now up over 10% for this Nifty stock. Tata Motors PV is up 8.6%. Bajaj Finance, Ultratech, M&M are some of the other gainers. So is now, but the gainers up overtaking that momentum close to that 24,000 mark now for the Nifty 50. In terms of the benchmarks and the sectoral heat map also, you'll see that the Nifty Auto index was down 20 to 25% in this year in FY26. So hence a very strong move. Financial services, PSU banks, the Nifty Bank of course is doing very well, up over 5%. So infrastructure as well as what we are seeing in the Nifty MNC and media index as well. But overall in the advanced decline ratio, Mahima, yet again a very good day, just 3 digits in terms of that sense for the broader markets too.
Absolutely, and that's maintained, right, since the start of the trade. I think that's the one thing that's probably the street should keep in mind, because overall not was a slight change in terms of where the GDP for FY26, slight raise there, of course. So that's also something that is worth noting. But both the mid cap 150 and the small cap 250 are nearing that BSE 500, because a lot of names buzzing there as well in terms of where all of these names go. Travel industry, which was beaten down because of war. So you have Easy Trip. As well, but you have Adani names also doing fairly well, on the back of the news flow coming in with the US court allowing Adani to seek dismissal in the SEC case. You have counters like Shriram Finance from and of course, ONGC, Nalco are some of the stocks which are seeing just profit booking today. But with that, let's kind of welcome in our guests for the day and kick in with your queries for the day. We're joined by Ajit Mishra, SVP. Of you gentlemen, Ajit, before I start taking the queries, your quick view now, considering that we've seen this significant rally today, do you think it's time to book profits or stay invested?
Yeah, good morning, my today, this move include roughly around 8% cut in Brent, and the India VIX, which was holding strong around 24, has also witnessed a substantial decline around 20%. So this gives us resistances when it comes to the price action, but broadly the sentimental improvement that we are seeing in the market today, with which is clearly reflecting in the market breadth as well. Gradually the index can inch lower end, but remain invested, stay invested with 23,600, 400 being the support zone now. So risk reward is still favorable. 1:1.5 is still there, so one can continue.
First caller for today, it's dialing in from Gurugram. Manav has a stock query for us. Manav, good morning. Welcome to the show. What's your query?
Hi, good morning to everyone. So I have for the past 17-18 months at an average price of 150. So since this Middle East conflict has impacted the crude prices, we have seen quite a bit of since last evening,
Right.
after Donald Trump's
the ceasefire, yes.
Yeah. So, what impact could be seen in the Q4 earnings of the this counter?
Well, Manav, firstly, very pertinent in what we've seen today. Of course, the stock is up 5.8% as we speak. Given the ceasefire now, you could expect some volatility in crude on the downside. The Brent slipped below KC Securities. Mahesh, very good morning. Welcome to the show. Manav has a very important question, right? Because you'll see those losses coming in Q4, maybe some under recovery. But would you recommend him to continue?
On Punit and Mahima and Ajit also. So I think it's a time the number could come moderate, but yes, if you're looking from a crude perspective, I think that area could be edible, and things are changing on over a day. So I think it's a positive sign for OMC companies. I think OMC company can rebound from these. 165 level could be achievable in medium to longer term. So hold from my side.
Right, so that's the view coming in on IOCL. The next one is coming in on Container Corp. This is from Chandan. Continue to hold it further or book loss today? Ajit, I'll come to you on this one. The stock is currently trading at 470 levels. Do you think any recovery is possible on this one?
During the declining days, and now we are seeing attempt of recovery also. So I feel that the damage has already been done, and hence is bought it at very higher levels. You can that area he should review his position. In the interim, he should maintain a stop at 430. So that area will continue to be the key support in the coming weeks, and around 550 he can review his position, because it's a very strong
view, Ajit, but go across to the next caller now from Bengaluru, and Mohan has a stock query for us. Mohan, very good morning. Welcome to the show. What's your query?
I want to know.
Do you have any other defense name in your portfolio now at this point of time, Mohan?
Yeah, I've got Masgon and Cochin Shipyard.
Okay, so you already have some exposure there. Got 1 year?
The stock has done a lot of from lower side in a very short time of period. So any cool down nearby 3,400, 3,500, that I think some cool down can become in stock. So from my perspective, wait and watch could be better idea from MTAR technology perspective. But yes, you can look on GRSE, Cochin Shipyard.
GE Shipping. Suman from Kolkata has bought 11 shares. Her view is from a really long-term perspective. 3 years is what she's looking at, and wants to know if she can go ahead and I'll stick with you for this one. Your view?
I think the stocks can be hold from with a stop loss. The stop loss of 1,300 can be kept on this level. If any upside nearby. From my side, hold with a stop loss of 1,300.
Got your view, Mahesh. But the next question coming in is on Hindustan Zinc. Again, a very interesting counter in the near term, Ajit, because we Sunil from Pune actually is holding shares at roughly around 257. So he's almost sitting on a profit of 88,000. Would you recommend him to Book out has almost 290 shares right.
A decline in the bullions. The stock also pulled up substantially from its highs of around 750 to roughly around 470, 480 area. And now again, with the recovery in silver, we definitely can be booked in case if it's the major part of his portfolio, or like since he had bought it at very lower levels, because medium to short term looks sideways to me. In silver also means on the every uptake around $78 to $80 mark, we are seeing a bit of a pressure coming in. So from that perspective, partial profit can be booked at current levels. And for the
Zinc. The next one is coming in on Nalco. Our viewer, Mr. Kondala Rao, is asking about this counter. He's got 100 shares at the levels of 400. Wants to know if he can hold or exit. Ajit, I'll stick with you for this one. Up, but what's the view for charts for Nalco?
So Mahima, in fact, if you see that the middle counters were the top performers in this recent rebound, today after this news that they easier passage of commodities across the globe, and maybe because of that we are seeing a bit of profit taking. The overall trend on short, medium term, long term is still intact on the positive side. If the view is short term, we believe that 380 is going to be the area where we have multiple supports based on the short term moving averages and the price action also, and gradually.
Yeah, all right. So that's the view coming in on Nalco. We've got our next caller. I think Dipender ji is calling us from Chandigarh. Dipender ji, a very good morning to you. कैसे मदद करें आपकी?
हाँ जी मैडम, अभी गुड मॉर्निंग। व्यू 1 साल का।
ओके।
इसका बड़ा फ्यूचर था, अपना पता करना।
ठीक है, ओके। बहुत ही छोटी कंपनी है ये, 300 और करोड़ के मार्केट कैप की है। Moltech Technologies is what Dipender is talking about.
तो दीपेंद्र जी देखिए, यहाँ पे करेक्शन काफी शार्प हुआ है। मीन 360 पे ये स्टॉक था, जो कि मैं देख पा रहा हूँ 2023 में हाईस के तक गया स्टॉक, बट वो सस्टेन नहीं हो पाया। दोबारा से आप उन्हीं लोस के पास, जहाँ पे कि प्रीवियस लो बना था, उन्हीं लेवल्स के पास अभी आप ट्रेड करके एक रिबाउंड देख रहे हैं। तो ओवरऑल शॉर्ट टर्म का अगर आपका बायस है और मीडियम टर्म को भी बायस, जैसे कि आपको थकता नजर आएगा, तो अभी के लिए बने रह सकते हैं 100 रुपए के एक स्टॉप लॉस के साथ, और 160 के पास दोबारा से आपको पोजीशन रिव्यू करने की जरूरत पड़ेगी।
Got your view, Ajit, and thanks so much for that. Reached past 24,000 and now back below that level. So now we are at 24,300 as we speak. So up 3.8% today on the benchmark index, up almost 880 points. We showed you all those indexes doing well as well. So we are building on to those gains and hopefully can sustain that at least in today's session as well. But let me go across, take the next question. Again, very topical at this point of time. And there you go. You've also seen the consumption names being rewarded for good updates. Titan was the latest one which came in yesterday. But the banking names continue to be in focus. Result season starts from next week. And today, at least for most of those nifty names today. But go across to the next query coming in on GAIL. Again, a very, very topical today. Let's pull up the counter and see what it's doing today. Prashant from Bengaluru is holding. again one more beneficiary of the ceasefire, and his question largely is what he should do with his shares going forward as well. Mahesh, let me come to you. You saw Petronet having a larger impact there, but should he continue to hold on GAIL since he's already bought it at 139? What would be your view?
If your view is a very shorter term, then you can go 165 level could be achievable in immediate term. After that, we can review. After that, we can see 180 level odd also. So from my perspective, if very shorter term view, then you can.
So that's the view coming in on GAIL. The next one is coming in on Indigo. I'm guessing this is Interglobe Aviation that our viewer is talking about, and not Indigo Pay. Aviation, especially today, cooled off a tad bit, of course, but still trading around 9% higher. One of the stocks which is really beaten down on the back of the war. Ajit, I'll come to you on this one. Of course, it's just good today. Do you think it's good to trade into this counter right now?
So Mahima means the stock has retraced considerably, and now we are seeing a relief rally. We major averages, so maybe close to around 4,900, 5,000 area. The stock might again witness pressure, and today, in fact, it was like a similar kind of a move that we were very close to 4,800 mark. Continue to hold their longs as of now, with 43, 4,400 being the immediate base. But around 4,900, 5,000 zone, one can look to at least taper down the position in case if the view is short term.
It's been again one stock which has seen some pressure, and this is Babu from Chennai who's asking this question. Stock's up 9% now for Amber Enterprise, and that over the last half an hour or so has seen. After today's move also, he's down a little bit, Ajit, but the momentum was very strong on this counter, right? Almost 8,000 is what it also touched, and then the retreat till 6,200. What would be your view on the stock now?
Stock has been hovering in this band 8,000, 5,500, and of late the kind of decline the stock has witnessed. It was a higher high. So, and again today we are reclaiming the long. Retest the previous swing highs close to around 8,000 and probably make an attempt of a breakout also. So since he has a long position around 7,300 mark, he can continue to stay put. Can see the stock inching toward 8,000 mark. So around 8,000, he can consider booking his profits.
Okay, all right. So that's the view coming in on Amber Enterprises. The next one is on JB Chemicals and Pharmaceuticals. This is from Ramesh. Whether he can continue to hold at the current market price or exit. Mahesh, I'll come to you on this one. What's the view on JB Chemicals?
I think they can hold the same. Company is really doing very well, and further adding, I think the stock can touch 2,150, 2,200 level easily in the near term.
Okay, so that's the view coming in on JB Chemical and Pharma, but it's time. National. This is from Ramesh, who's writing us from Bengaluru. He says he's 80 shares at the levels of 125. Can he continue to hold? Ajit, your view?
Yeah, hold and use recovery to reduce.
Laurus Labs bought at 6.
Plus 2,050 and hold.
Vodafone Idea bought at the levels of 8 rupees. Can I continue to hold? Is our viewers' query. Mahesh, your view on Vodafone Idea?
You can hold the same.
Shankar from
Upside he seems capped with 45 being the immediate hurdle. Let this stock surpass this zone, then probably you can add.
Okay, Time Technoplast bought 95 shares at the levels of 243. Can I?
Company's fundamentals are good. I think stock can touch 250-60 level easily.
Madhusudan from Hyderabad wants to enter into Force Motors. Ajit, we've seen the stock being under pressure over the last couple of
Performance likely to continue. Hold with stop loss at 19,000 mark.
Okay, United Spirits bought at a level of 1460. 720 shares is what Lavanya is holding. Can she continue to hold this one? Ajit, your view?
Yeah.
$200 shares.
Hold, but review around 30.
Okay, ITC bought at the levels of 316. This is 40% of Pratibha Parthiba.
Hold the same.
Prishi Kumar wants to know the future of Vijaya Diagnostic for the next 2 years. Mahesh, what would be your view?
With a diagnostic perspective, I think they can hold the
Ajit, your view?
Very volatile. Maintain stop at 360 and review around 420, 425 zone.
Okay.
Ajit, a space that you're watching, which is in today's day.
See, short term, the rate sensitives which were beaten down badly are likely to witness strong recovery. So, banking, auto is something that you should definitely focus. Metal stability is likely to continue.
That can be bought today and can be hold for next 2 to 3 years. Mahesh, your view?
In Coal India, already stock has run a lot of from lower side. Profit bookings are visible.
Motors PV is what Sunita is asking if it's a good time to add now, Mahesh.
Yes, they definitely. If anyone have, they can hold, and further fresh position can be added on Tata Motor PV.
Okay.
Like recommended earlier, with stop at 1050, one can continue to hold 1150, 1170 positional targets.
Okay.
Shankar wants to know between PFC and REC for the next 2 years. What would you recommend?
PFC can be hold easily. From longer term perspective, PFC looks good. Also, merger on cards, so PFC looks preferable.
Okay, Apollo Microsystems.
Hold.
All right, okay, so that's the view coming in on Apollo Microsystems. But with that, completely out of time with this edition of Ask Profit. But viewers, if you've missed your query, of course, do tune in at 2 o'clock to ask related queries. Like I said, viewers, completely out of time on this edition of Ask Profit, but do stay tuned. KYC up next.
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence.
Mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा
केसरी त्योहार विमल बोलो जुबान केसरी.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
And motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life.
Tech has changed. So should your tech show.
Join me in the midst of our people, language and politics. Vanakkam Tamil Nadu. Here we come.
When others are warming up that shape your life.
Hello and welcome to watching Prime 5 with me, Aisha Said. What's happening? How
The show that sets the prime time agenda.
we'll be deep diving into this topic to tell you what's
Hello and welcome to KYC. I am Sharad. In the Know Your Company segment, I get you very much interesting companies which are buzzing and why. It's a very good story on that. It's a Raipur-based company. The first hint I'd like to give you, it's in steel tube manufacturing setup. Also, the company was recently listed, you could say not much, that it was listed in 2025, July 2nd. So, ek saal bhi pura nahi hua hai. But let's see how the stock has reacted. And interestingly, some good HNI and funds are there. The Q4 numbers have been really very strong, especially in the value-added segment. But the spike which we have seen from the month of March, stock is up more than 30%, and that is where the interest has come for retail regarding this company. But कंपनी क्या है? रायपुर की कंपनी है, स्टील ट्यूब वाली कंपनी है, बट कंपनी का नाम क्या है? वेरी इंटरेस्टिंग. कंपनीज नेम इज संभव स्टील ट्यूब्स, एंड इंटरेस्टिंगली आई लाइक दैट टैगलाइन आल्सो, सब संभव है. नाउ विल दिस मैटर फॉर द स्टेक होल्डर्स एंड द प्रोस्पेक्टिव स्टेक होल्डर्स इज समथिंग. Let's talk about that. The first key reason is definitely going to be decoding what led to the strong growth in the operational numbers in Q4, and we'll decode this in value-added product as well as the companies see alpha being made, and of course the ecosystem as well in which the company is operating, the timelines for their commissioning facility, especially the Kesda facility. Remember, most of the facilities minerals, and that is why it's apt for a steel tube company to be made there. And the capex allocation plans for FY27. Remember, there's a caveat to this. The company is under the silent period, so we won't be able to talk a lot about benefits for the PLI Specialty Steel 2.0. That is something which the company has done an MOU, And recently they announced an acquisition in Vajra Alloys deal. What is the synergy in this? The company is focusing on the coastal states across the India. They are expanding. Remember, Chhattisgarh is right in the middle of India. So they do have a locational advantage, and that is why the company Sambhav Steel, where he'll give us all the details regarding the growth plans for the company. But let's understand how different this company is if you compare that with a steel tube. Welded steel pipes and structural tubes across this segment. Thoda sa technical, I'll explain you in a very simple manner. Don't worry about that. The product includes pre-galvanized coil, pipes, and categories which we are dealing with. But remember, both the manufacturing facilities are located in the state of Chhattisgarh, Raipur to be precise. Also, 3,50,000 million. Move ahead and see the other categories also where there is a strong capacity coming up. This is the pre-galvanized GP coils, we call it. Little bit technical, but I'm going to get you all the abbreviations. Because of that, there is some alpha in the counter. Stainless steel coils, that's around 58,000 million tons per annum, but enough of installed capacity. Let's look at the expansion plans, how things are going out. They have 43 distributors in 15 states and 1 union territory. It'll be interesting to see if they are focusing on international expansion or not. And they have enhanced the finished product capacity. That's the target coming in to almost 1.2 million in the next 4 to 5 years. This is what the management stated in the third quarter. But let's look into some more details about Sambhav Steels. Of course, there was a lot of noise during its IPO, but after that the stock went into correction and now the interest is back. And that's why I've come here to explain you why. This is the Indian steel industry, ERW, and the demand, how things have panned out. And if steel use is there, then you need steel pipes, you need structures, and that is where the company comes in. But you must be wondering, it's not difficult kyun hai, Sharad? It's not. Electric resistance welding, of course. Pipes. This is what is the simplified product which I am explaining you. One is galvanized pipes. Pipes hota hai, pipe ke upar zinc ka bas coating lagate, and that is what it's called GP. So do not worry, it's a type of a coil. It's a full hard pipes are there, both processes are there. So these are the key abbreviations you should note down. Note कर लीजिए या screenshot ले लीजिए इस वीडियो का, आपको समझ में आ जाएगा. So this is the overall setup, but Q4 numbers overall YOY growth. But let's break these things down. Structural pipes, however, जहाँ से this is the old, you could say the value-added product, but this is one of the key products that was up only 7%. But other products 2 times. Let's look at the other category also where we saw significant jump in the sales. Stainless steel coils saw 2.5 times of jump coming, and this is where the alpha started coming in. But concern definitely there. On your basis. This is how we have actually calculated with the Q4 numbers, but let's get into more detail where the news flow has been really strong. There has been stake acquisition in Vajra Alloys, especially what benefits scheme for the specialty steel. This was also recently announced. So what are the key timelines? How much will the company be putting the money? So this is something which everybody is interested about. But it's entering into new products, and the channel checks are suggesting they're entering into such projects where only 1 or 2 players have that capabilities. Secondly, the operational updates remain strong post the IPO also. The which is good. The debt and the working capital issues, they are improving as well. We saw that in the numbers as well. And also the valuations do turn attractive if you see the correction from the 2025. Street is still bullish on the backward integration theme as well, and very few players have that. It's an unorganized industry as well, but the organized players with the backward integration facilities do have some alpha left. But let's talk about the rating parameters where we'll judge the company in KYC, and of course we talk about the income statement, balance sheet, cash flow. This is the most of the core numbers to look at. Has been listed, एक साल भी नहीं हुआ है, so there will be a limited data on shareholding in street cred, but return ratios is something which we will talk about, but that's on the valuation front where I'll compare that with the peers. I see. But let's talk about income statement, what should be there, and there's definitely the top line has been growing, but the bottom line numbers and the PAT numbers have been a bit dejected. So there seems to be a little bit of pressure coming in when it comes to the overall margin impact. Now, why these margins are on the lower side, we'll get that numbers in the Q4 update, because today management won't be talking on that. Is the Q3 numbers, it was rock solid, and we just mentioned about the Q4 operational update, so that means the H2 numbers are going to be strong, and that is where I feel that a good momentum down to 9. Is this bottoming out, or is there more pressure on that? So that is also a big question to be asked. So a lot of conflicting views are coming in when I do my analysis on the income statement. Check the 9-month numbers. I just have the FY25 numbers, but that has improved. The working capital cycle has improved. These are my two positive points, but of course the borrowing levels, it must be looking a bit heftier on this. Backward integration, and they are going all out. So for that खर्चा लगता है, debt भी लगता है, और थोड़ा ब्याज भी लगता है, and that's why the PL and L also gets impacted too. But net the cash back about the third one, and that is the cash flow segment. Has the cash flow improved? I'm just going to check the FY25 numbers, 9-month numbers. We need to give it more time, and yes, the numbers have improved. The cash flow from operation moves coming in. So the first 2-3 parameters have been strong, so I'm going to give a thumbs up when it comes to the overall cash flow segment. But a little bit of concern comes for me when I talk about the return ratios, because but the ROC numbers seem to be coming down. Now, why is that? Is there a change in the business model, or is it something else? That's something which we'll ask Bikash all about. But right now, the ROC number bit of concern, but is this bottoming out? Because I feel there is a change in the business model, and there might be other reasons also why these ROE and ROC numbers are under pressure. So we'll try to ask Bikash. Tubes. Also, apart from this, let's look at the shareholding, and shareholding, it's been decent. The promoters have kept their stake, it's unchanged. A little bit of sell-off has happened in the markets. Not changed much, but seems like DIs who had come, especially during the IPO, seems to have left the company in support, and that's also one of the reasons why the absorption was not there. If you're a student, concern for me as well. But net they are not fully sold it off. 3% are there, and if operational parameters improve and stock momentum comes back, we might see DI participation again. But as of now, it's a new the street cred. How much money has been made? I mentioned to you that from March lows, स्टॉक 30% आपको कमा के दिया है, बट nevertheless after the DI sell off happened, the anchor lock in happened, the thing was very strong. So from IPO price, still the stock has made money. If you have invested, the stock is up 37%. So there is definitely mixed cues for this stock, and just to keep this perspective balanced, the last 12 months P ratio, I've taken APL Apollo, Sambhav and Hariom Pipes. Hariom Pipe seems to be totally out of the race. It's just 14 times P it's trading at. Apollo is at the highest side, but the company is competing in the top 2 to 3 category. There is a good up move recently which happened, so now the valuations have come up. It's 47 times. Of course, the listing pops value. There might be other peers as well, but the overall numbers right now, I still find it neutral. And APL Apollo does command premium, let's be honest, but nevertheless you should be looking at Sambhav Steel also. Good and more as we speak. Let's talk about the outlook after this neutral rating coming in for Sambhav Steel. They are commissioning the greenfield unit at Kesda. That's the important point. Products, that is what we'll be looking at. And also the third important outlook is they'll be increasing the distributors in the states of Kerala, Tamil Nadu, Andhra, Maharashtra and Goa. These are the coastal facing products. Now the question is, which are these products, and is Apollo Pipes or the biggest players making that? So that is where the story happens, from small cap to mid cap, and that's the story which was sold in the IPO as what benefit does it come in, what are the key details about it. We'll understand a little bit that from Bikash as well. But net the outlook remains strong for Sambhav Steel, so I've given a thumbs up for it. But let's revise. Of course, the management commentary is still left. Income statement, balance sheet has been neutral. Return ratios have been falling each year. Why it is there, that's a big question. Definitely we'll be asking about the silent period, and we respect that, and we respect the SEBI guidelines. Shareholding, street cred and return ratio largely neutral coming in, but the outlook is something which has caught my eye, and that out of it, it's largely in line with the average numbers which we give to the companies which come in KYC. But to put things more in perspective, we are joined in by Bikash Agrawal. He's the CEO Ratan India, RBL Bank, and also he's associated with the company since November 1st, 2024. And joining us is Bikash. Good afternoon, Bikash. It's always a Q4 updates coming in the value-added product segment, which you have announced. But intermediate product, definitely year-on-year basis, there was a downtick. What are the key takeaways from the Q4 numbers? What led to this growth?
I think you have elaborated about our company in a very detailed way. First of all, thank you very much, NDTV, for giving me this opportunity to explain about our company and about our. We have reported our volume numbers, which looks promising. I would like to highlight that in November 2024, we have started our 2 new business line. In Q4, we achieved our peaked utilization for both our products. Both the products are well received by our consumer and the market itself. which we have seen during our COVID days. Because of that, there is some supply constraint from stainless steel and pre-galvanized product into the market by large players. Because of that, we utilized our production efficiency very well. We cashed in on this opportunity to the market. So if you see our product utilization, our product growth perspective in terms of sales number, it looks promising to us, and Q4 is where we picked our that's what I would like to say about our Q4 number.
See that some kind of a relief is coming in the geopolitical tension, but your industry, which I have studied also, it's not going to finish in just 2. Generally, what happens is these transactions or contracts happen for 3 to 6 months, and maybe Q4 also would be giving the same, I mean to say the Q1 would be giving the same good performance as in Q4.
Volume number of value-added product in Q1 itself, but nevertheless we don't want the war situation to continue, because we would not like to be seen making profits when the an opportunity. Because of the energy crisis and because of the supply chain breakdown, large players are not able to fulfill the demand of the market and the benefit of that particular we are very much hopeful that the numbers we have shown in Q4 is going to be repeated in Q1. Nevertheless, we do not want war to be continue, and we hope that this war,
One more question on this MOU you have signed for the the specialty tubes. What is it all about? What are the key timelines? Any money allocated for it?
A company called Bajra Alloys Private Limited. This company is a subsidiary of another listed company called Kriska Strapping Solutions Limited. This company, Bajra Alloys Limited, based alloys, pH, high strength steel, and certain speed steel that is very niche in the market. Very high precision requirement is there. Bajra Alloy is a company which is in a very nascent stage. We are, providing them technical know-how. We are providing them all our capabilities and strength. Going to make the raw material, so raw material making risk lies with them. We will act as a forward integration for those raw material being made by the Bajra Alloys in future. We will make value. I believe there is a good amount of synergy between both the companies in terms of making alloys and their value-added products. So this in going forward, we believe this acquisition or this investment of 15% in Bajra Alloy is going to make both the shareholder of both the parent company beneficial, and we are going to enter into a market which is very niche in India, very nascent in India, and more or less it is import driven.
So you are entering a niche market and an import driven market. Now this EV, defense, semiconductor, where is it?
So all the industries that you have named, that is semiconductor, defense, marine, critical infrastructure, nuclear power plant, all this is their primary requirement. And going forward, if you see, there is a submarine making in India going on. There is nuclear power plant based nuclear power plants based planning is going on through Santi Bill of Parliament. So there is defense manufacturing domestically is growing very fast. There is semiconductor industry that is growing very fast. So the product that Vajra is going to make, that is titanium based or let's say cobalt based or whatever steel, alloy steel they're going to make, is going to be used in all the sunrise industry that India has started looking at very seriously currently.
All right, so new investments, new sunrise industries, and that's a good news story as well. But Bikash, apart from this, just wanted to understand a little bit. See, we cannot discuss the numbers, but of course the ROC, ROE numbers have been coming down. I just saw your presentation as well. Is it a change of business model? Give us a strategic view, or is it something else?
If you see, the number in 2022 was a perfectly abnormal number. I would say it's an outlier number. The number looks, above 60%. In fact, the ROC number doesn't give you a true picture because the property which were generating this profit were actually dated back 2017 and 18. So we were calculating profit based on the investment that was done in 16-17. But going forward in 2024, the benefit of the capex start accrue from the next financial year itself. So if you see on a particular that year, my old investment and my new capex doesn't give you a right picture of ROC and subtract the new investment number from the from my total capital invested, then the ROC number looks promising. But if you add my new capex, the benefit of which is going to be accrued in the next financial.
On your expansion plans for the Kesda facility, what are the timelines and the addition of the output fast?
As we have said, we are executing this 1.2 million ton of capacity of final product. Ton of installed capacity. We are well in time on executing timeline. So we believe in Q4 2027 we will be financial year, we will have the plant up and running.
Okay, so the plant will be up and running by the next financial year. Thank us a lot,
No, it's
Vikash.
not next financial. It's Q4 2027. It will be up
and coming in. Thanks a lot, Bikash, for giving your time, giving the entire perspective about the
Thank you
business
very much.
and what's the growth outlook ahead. So that's the management of Sambhav Steel Tubes, and definitely that investment which they have announced. Developer mode, but remember, lot of gestation period is there in this setup, so the benefits won't come immediately. So these are some interesting companies which I get for you in KYC, where we try to get alpha for you. So that's all.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
To understand the Tamil Nadu twist, join me in the midst of people, language and politics. Vanakkam Tamil Nadu. Here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's at stake? How to
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5 only on NDTV 24/7.
Will the rising sun win with a hand in hand? Will the tulips and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of politics and people. Vanakkam Tamil Nadu. Here we come.
Okay, thank you. So with your permission, shall we start? Yeah, let them just leave and then we can start. Okay, we can begin.
Thank you, sir. Good afternoon, everyone. Welcome to this post-policy press conference, first for the financial year 2026-27. We have with us Governor, Reserve Bank of India, Shri Sanjay Malhotra, along with Deputy Governors, Shri T. Ravishankar, Shri Swaminathan J. and Dr. Poonam Gupta. We also have with us Executive Directors, Shri R.L.K. Rao and Shri R. Kesavan, along with Dr. Ajit Ratnakar Joshi, Shri Sanjay Kumar Hansda and Shri Indranil Bhattacharya. I also welcome my other colleagues from the Reserve Bank. Before we begin, we have a few housekeeping announcements. So there are totally 27 participants from the media, and I'll request the media persons to please stick to one question so that everyone gets a chance. I also request everyone to switch on the mic while speaking so that those watching the live telecast are able to hear clearly. And once you have finished speaking, please switch off the mic. Sir, with your permission, I will now call out the names. Thank you, sir. I will request Ms. Lata Venkatesh from CNBC TV 18 to please ask the first question. Lata, please.
Thank you, Mr. Bridgeraj and Governor. So what looked like the structural shift in this policy is that you all have started giving us core inflation number. So a couple of questions attached to that. Core is non-food, non-fuel. So if you are giving us that number, are you indicating that even if inflation headline goes up, but core doesn't, because that could be because of a change in fuel, you will not be moved? Are you trying to give us a message? And in that case, can you also give us the quarterly core breakup at some point in time, maybe from next time? The more important part is, if you look at your second half, while the full year average is 4.4, even then 1 percentage point above last year, the second quarter, second half average core goes nearly to 5%. So should the market be prepared for a rate hike in the second half? As well, a word on liquidity, will be RRR return.
So first of all, let me compliment you to be, to have been, very nimble in your question. You have noted the change that we have made in this policy statement. I'm very happy, that you have noted that. This has been a request which has been there from the market participants, and so we thought that this was while this has always been a factor. So in that sense, I would not say it is a shift. It's not a shift, in terms of monetary policy decision making, but it's only we thought that this was the right time to do it because we did, the 5-yearly review. So there was a second 5-yearly review, which was completed, and so we thought that this is the time, if we have to do something about it and and give our projections on core, which we have been doing internally, and so that's why these numbers have been given. Monetary policy is not preset course of action. As I have stated even earlier, even in the last statement, I think I made a mention of this, and even otherwise, that it's not, while, for us, it's the headline, which is the target, and we have to ensure, that it's headline that remains at target and within the band. That's the goal. That's the primary goal for us. But at the same time, the various components of inflation and where they are emanating from are also very important. And so that has been the consistent policy of the Monetary Policy Committee and of the RBI, and we'll continue to look into all components and then take a call as to how we need to respond to the various components, while keeping in mind that the ultimate target is headline inflation and it's not anything else.
That should, if first of all, there is an adverse scenario.
So as I said,
inflation you have increased by 50 basis, growth you have brought down less. So it can be interpreted
so
as...
So that's why I said it's not a preset course of action. It's for the Monetary Policy Committee to decide, to take a call. These are the factors, which go into it, how, they are going to play out over a period of time. We will take a call. Things are evolving, so drastically, and so frequently every day, you yourself mentioned, 5:30 a.m., we got a pleasant news, maybe not a complete surprise, but we got some pleasant news. And so we have to, be prepared. And so we will not be, in a position to say what the MPC is going to do in the next meeting.
Thank you, sir. We'll take some more questions from our left side before we come to this side. So for the next question, I'll request Shri Manojit Saha from Business Standard. Manojit, please.
Thank you. Thank you. 1 year ahead, inflation forecast is 4.7%. You have given it here. So the real rate is just 50 basis point, while the neutral rate is seen around 1.5, 150 basis point, 120. So are you falling beyond below the neutral rate? Number two, if you can also throw some light on the recent RBI steps to curb the rupee depreciation, the NOP cap, or banning banks offering contracts to clients. Are you satisfied with the rupee's behavior in the last few days? And now the scenario has changed completely. Is there there's a case to withdraw those limits and caps?
A lot of questions.
Two questions.
2-3 questions. So your second question first, which is, on the recent regulatory measures that we took with regard to the foreign exchange markets. You are all aware, and you may not have witnessed, but we did notice that in the last few weeks of last month, March, there was heightened volatility in the forex markets. We saw that positions were being built up, leading to arbitrage positions between the non-deliverable forward markets and the deliverable markets. In normal times, these linkages are important for an efficient price discovery, and that's why it has been our endeavor to widen and broaden, and make more liquid these markets. But when there is excessive volatility, when there is excessive building up of positions, which is only increasing volatility and perhaps not helping in efficient price discovery, such kind of measures are taken. Whether and these are reactions to the specific market movements. These are not in any sense they are not signaling any structural change. We stand committed long term. We stand committed to the development, broadening, and deepening of these markets, to the internationalization of the rupee. And so obviously, these are not measures which are going to remain there forever. As and when, we see that, and you have seen, so much of fluctuation. You can yourself see, how, the rupee has been so volatile. So it's basically, arising out of that. With respect to your first question on the neutral rate, while, first of all, we do not have, very precise numbers on the neutral rate, but there have been occasions when the real rate, because, first of all, you don't have a neutral rate, so, what is the neutral rate, but so it's difficult to calculate, what the actual rate, should be. But real rates as of now are still high as of now. Looking ahead, as I said, there is so much of uncertainty to be acting on those today, and especially when the MPC noted, that when there is so much of uncertainty, number one, and moreover, it's coming from the supply side. Having noted that, that's why the MPC thought that this is a time to pause, wait for more data, and then take a call. Real rates today are still about 2% or so. They are not low. Going forward, how it happens, so much of uncertainty, we need to wait and watch.
Thank you, sir. I will now request Anup Roy from Bloomberg to ask his question. Anup, please.
Thank you, sir. Sir, thank you for giving an elaborate answer on this rupee thing. So going back to your date call, the guidance in February policy that rates will remain low for longer, 9 to 12 months, barring any shock. The shock has come, but today we have some clarity also. So would you give that comfort again that rates will remain low if the shock is dissipated?
See, we are in a neutral state. Possibility either ways, anyways, cannot be ruled out. So it is quite possible that these low rates continue for a long time. As I mentioned, structurally, Indian economy is very strong, very resilient, very robust. Despite shocks, we are projecting 6.9%. Despite such a big shock, 6.9% real GDP growth when you look across, independent of what other economies are growing, but if you look at relative to them, even better. So structurally, long-term macroeconomic fundamentals, because of various measures which the government has taken, which the RBI has taken, which various institutions have taken, remain to be very strong and continue to drive growth on the one hand, and at the same time keep price pressures contained. So it's quite possible that even in the short to the medium term, we will continue to have low rates. It's quite possible.
Thank you, sir. Thank you, sir. I will now request Ms. Hamsini Karthik from Money Control to ask her question. Hamsini, please.
Thank you. Good afternoon, Governor, and DGs, everyone. I'd like to drift a little from some of the macro points. And as your speech was concluding, the bank stocks really cheered your monetary policy today. You came up with a lot of leeway in the way that they can operate, etc. A couple of things I would like to understand from you, Governor, is you're open to reviewing the computation of net profit back to CRAR, and you're open to letting go or not, consider the 25% threshold on 25% increase threshold on GNPA. I'd like to understand what triggered this review process within RBI, and do you believe that you will see a reasonable amount of capital flowing into banks as a consequence to this? And the reason I'm also asking this question, I'd like to get a good answer to this question, is because in the last 6-8 months more so, we've seen a lot of banks, almost like every 2 weeks, we've had some bad news or the other from banks, largely private banks. I take your point that this is not a systemic risk, but with the way banking is changing globally and also faster in India, do you see a need to enhance, or rather, do you see a need to possibly tweak more on regulations, or you believe supervision can take care of these nagging pains that come up every few times?
Broadly,
connected questions.
Two quite different questions, but connected smartly. You have connected the two.
No, banking questions.
Banking questions. So the first one is on capital related measures, that we announced today, 2 of them. The first one, I think both of them have been in the works for some time. They are not that way, surprises. The banks have been requesting us, and I think, NBFCs already had similar provisions. So it was time, that we aligned it with regard to the first change that has been made with regard to the calculation of CRAR. It does not change the calculation of net profit. It only changes the calculation of the capital adequacy. It is a better reflection of the capital that the banks have. Similarly, the second measure that has been announced with regard to the investment fluctuation reserve, that also does not, there has been a checkered history, if I may say so. It was there, then it was brought, it was withdrawn, then again, it was brought in. This is something which not been there, it's not there in any other jurisdiction. And there was lack of clarity also, with regard to it. And moreover, as I mentioned in my statement, number of prudential regulations that we brought in, we did not feel, that there was a need with regard to it. On the second part of your question, which is perhaps relating to, some of the episodes that we witnessed in some of the private sector banks, I want to assure everyone through the media present over here that the banking system is very resilient. It's very safe, strong. Number of regulations, whether it's relating to conduct, governance, prudence, liquidity, all of them, along with, our supervisory framework, they keep the banking system very healthy and robust. These are episodes there are, these will, unfortunately, these are bank specific, not even bank specific. These are, these are more, in the nature of, crimes, or in nature of crimes. And while, we have to be vigilant and alert to them, the law enforcement mechanism, obviously, in our country will also take care of these. Not to add anything?
I think it's perfectly fine, sir. In terms of these are entity-specific developments, do not pose any systemic risk at this point in time. As we have clarified that as they play out, we deal with them on a bilateral basis as this play out. But as Governor said, that banking system as a whole remains resilient, and we continue to focus on improving the conduct related matters and governance related matters. And banks are by and large run on very professional lines. And any material supervisory concerns as and when it arises are dealt with on a event specific basis. If anything requires at a system level or a regulatory tweak, as you were alluding to, that we are not averse to taking such measures, but at this point in time, there is no event that warrants a macroprudential measure or a regulatory tweak. These are episodic. We will handle it on an individual basis.
Thank you, sir.
Thank you, sir. I will now request Ms. Ekta Suri from Z Business to ask a question. Ekta, please.
Good afternoon, sir.
एकता, आपने बात मान लिया, आपने उनको जो है, you have raised her of the order, huh?
Thank you, sir.
Yes,
I thought so, right?
Yes, sir. Thank you so much.
आप खुद इतना अच्छा हिंदी में बोल रहे हैं, आप अच्छा हिंदी में बोल रहे हैं।
सर नहीं, हिंदी चैनल नीचे आ जाते हैं, फिर वो सारे इंग्लिश वाले ऊपर आ जाते हैं, तो इस बार सच में रिक्वेस्ट सर आपने मान दी। थैंक यू सो मच सर।
आपको ब्रिज को धन्यवाद देना पड़ेगा।
थैंक यू सर, थैंक यू ब्रिज सर। सर मेरा सवाल सर, अभी हम बात कर रहे थे गवर्नेंस के ऊपर, सर उसके ऊपर है सर। अभी हाल ही में अगर हम फ्रॉड्स को साइड में कर दें, मैं नाम भी लूंगी, कोटक महिंद्रा बैंक या IDFC फर्स्ट, लेकिन अगर हम HDFC बैंक की भी बात करें, इस्तीफे ने बहुत हेडलाइन बनाई, वहां पर साफ लिखा गया कि ये एथिक्स और गवर्नेंस से रिलेटेड मैटर है। लेकिन जब उसके बाद पूछा गया जिन्होंने इस्तीफा दिया चेयरमैन जी से, तानू जी से, कि क्या इश्यूज हैं, वो खुलकर नहीं, उन्होंने कुछ भी नहीं बताया। यहाँ पर मेरा सवाल ये है, लेकिन हाँ इंटरव्यू में ये जरूर बोला कि मुझसे क्यों पूछे जा रहा है कि क्या इश्यूज है, आप खुद आत्म मंथन कीजिए। यहाँ पर मेरा सवाल ये है कि पैसे की बात पैसे से होती है, लेकिन यहाँ पर आपने इस्तीफा दे दिया, जो शेयर होल्डर है उसको नुकसान हुआ, उसकी शेयर की वैल्यू जो है वो नीचे गिर गई। बैंक का जो कस्टमर है उसके दिमाग में एक बीज बोया गया कि पता नहीं क्या ऐसे एथिक्स और गवर्नेंस वाले इश्यूज चल रहे हैं, मेरा पैसा सेफ है या नहीं है। तो सर अभी जैसे सर ने बोला कि इसके नियम थोड़े हम और सोचेंगे, तो क्या यहाँ पर क्या RBI ने कोई मिनट्स में कोई ऐसी चीज पाई है जिसमें सच में एथिक्स और गवर्नेंस के कोई ऐसे इश्यूज हैं, लेकिन हाँ मीडिया तक नहीं पहुंचे, शेयर होल्डर और कस्टमर तक नहीं पहुंचे। दूसरा, अगर नहीं ऐसा कुछ पाया है तो क्या कोई ऐसा नियम आएगा कि कल को कोई भी बोर्ड से रिलेटेड अगर इस्तीफा डाल रहा है और वो एक वेग भाषा का इस्तेमाल करके वो अगर जाना चाह रहे हैं तो जाए, लेकिन वेग भाषा का इस्तेमाल करके एक कस्टमर के दिमाग में मिसट्रस्ट का डाउट ना डाले, और दूसरा एक शेयर होल्डर जिसका कोई लेना देना नहीं इमोशन से, उसके शेयर की वैल्यू को गिरा कर ना जाए।
नहीं, जो पहला आपका प्रश्न है, देखिए हमने पहली बात, हम किसी बैंक स्पेसिफिक प्रश्न को हम यहाँ पे उसका उत्तर नहीं देते, लेकिन आपको मालूम है, ये सर्वविदित है, सबको मालूम है कि हमने प्रेस में अपना एक प्रेस नोट दिया था तब, जिसमें हमने ये कहा था कि हमारे हिसाब से कोई भी मटेरियल कंसर्न हमें, चाहे गवर्नेंस या कंडक्ट से संबंधित हो, वो नहीं है। तो उस बात को मैं यहाँ पे दोहराना चाहता हूँ कि कोई भी मटेरियल हमें कभी भी अपने सुपरविजन में या उनके रिकॉर्ड को देख करके ऐसा कोई गवर्नेंस और कंडक्ट से रिलेटेड मैटर हमारे सामने में नहीं आया।
You say that after checking the minutes of the board meetings, or
जनरल जो हमारा सुपरविजन रहता है उसके अंदर में मिनट्स भी देखे जाते हैं, मिनट्स की प्रति भी हमारे पास में आती है, तो उन सबको देखने के बाद में ही ये हमने जो वक्तव्य जो हमने अपना प्रेस नोटिस जो दिया, प्रेस नोट जो जारी किया, वो सभी चीज़ों को ध्यान में रखने के बाद में ही दिया है। क्या इसके लिए कोई और दिशा निर्देशों में, गाइडलाइंस, डायरेक्शंस में कोई और बदलाव करने की आवश्यकता है? आज के दिन में हमें ऐसा नहीं प्रतीत होता, लेकिन यदि ऐसा महसूस हुआ कि कहीं भी आगे जाकर के कोई बदलाव, कोई नया नियम, निर्देश, सेबी के निर्देश वैसे इस संबंध में आप लोगों को मालूम है पहले से ही है, उसके ऊपर यदि कोई और निर्देश की आवश्यकता यदि हुई, महसूस हुई, तो उसके अंदर हम कभी भी पीछे नहीं हटेंगे।
कंटिन्यू वन मोर सर, क्योंकि एक बड़ा बैंक था, आपने स्टेटमेंट भी दी कि यहाँ पर बैंक स्टेबल है, लेकिन अगर कोई छोटा बैंक होता और इस्तीफे के बाद लोग डरकर अपने पैसे विड्रॉ करवाने निकल जाते, तो सर उस समय तो अनस्टेबल सिचुएशन आ जाती। तो मेरा एक ये भी सवाल था कि आपने किसी को भी रिजाइन करना है तो वो रिजाइन कीजिए, लेकिन इमोशंस पर गोलमोल बातें कर वैल्यू गिराना शेयर की, मेरे दिमाग में ये मिस्ट्रस्ट डालना कि मेरा पैसा सेफ है कि नहीं, सर वो किस हद तक, सर उस पर आप क्या कहेंगे?
देखो, जैसा मैंने कहा, मैं किसी एक स्पेसिफिक बैंक या वक्तव्य के बारे में नहीं कहूँगा। मैं कहूँगा कि जो भी कानून है वो बिल्कुल स्पष्ट कानून है और उसमें हमें नहीं प्रतीत होता कि आज के दिन में कोई बदलाव की आवश्यकता है। यदि हुई तो निश्चित रूप से हम उसके ऊपर में विचार करें।
धन्यवाद सर। Sir, we'll now take a few questions from the right side. I'll request Sangeeta Mehta from the Economic Times to ask a question. Sangeeta, please.
Thank you. Sir, what is the crude oil price assumption that RBI has taken to arrive at the inflation projection of 4.6%?
For this year, $85 to a barrel.
For the full year?
For the full year, on an average, $85.
And so
it's now, and next year is, I think, 75. 75.
And sir, how long is your assumption of the crisis to last, West Asia crisis? Because one of the
it's very difficult, there is no, assumption that what feeds into is the price, the price is more important for us, and some of the supplies, some of the critical supplies. So, and the war, actually it is more, the supply disruption. The war, you are aware, that the Ukraine war is going on, but it is having, one can't say that it is having no impact, but it's having negligible impact. So what's important is that how long, what are going to be the prices of some of these commodities which are important for us, especially energy, and what is also important is how long, this supply disruption is going to be there. It's very difficult to say so. Now there is an announcement that it will be the Strait of Hormuz, for example, will be opened.
But because one of the comments, the statement you have said that is if initial supply shock can potentially transform into demand shock over a medium term, if the restoration of supply chain is delayed. So this medium term is referred to what time frame?
This will be many months, many months. Okay.
Thank you, sir. I'll request media participants to please stick to one question so that everyone gets a chance. I'll now request Jasprit Kalra from Thomson Reuters to ask his question. Jasprit, please.
Quick question on the FX side, the measures that were taken. Of course, they've helped stabilize the rupee and the arbitrage positions that you highlighted. In some corners of the market, especially amongst foreign investors, it's also been interpreted as a soft capital control, with more could be coming down the line that could hurt returns. And they've also raised concerns about how it makes it harder for them to hedge their currency exposures in the local market. When you take these measures, what sort of impact assessment is done on that level? And has the RBI reached out to or communicated with any investors to reassure their concerns, or do you plan to do that?
No, see, that's what I just mentioned, that these are specific to the market movements that we observed. These are not structural changes. We stand committed. I am repeating, I don't have more to add, unfortunately, to what I said, but I'll still repeat, which is that we stand committed to the further deepening, widening of these markets and the further internationalization of the rupee. These should be seen as actions which help, I would say, in better market development rather than because this we found, was quite speculative and in some sense, bordering on speculation, right? So it was more of speculation leading to higher volatility. So that's why these measures have been taken. And yes.
Thank you, sir.
Anything?
Yes, these measures have to be seen in the context of this event, this episode, which, as most of you probably know already by now, was leading to disruptive volatility. More importantly, this was leading to a artificial drying up of supply in the market, which was affecting prices. Although the transactions were arbitrage transactions, they were affecting local prices. Our objective of doing this was to cool that phase down. So the long-term commitment still remains to rupee internationalization, to having one global market and all that. On the issue that you raised, whether foreign investors can hedge here, nothing has been done which disables them from hedging. They can all hedge. So those things are also well in place. We will look at how the market responds to this. You would see that we initially just announced that these positions need to be wound down, right? By limiting the position. Then we studied the market behavior, and we understand that in a market, market makers or authorized dealers have privileged position, right? And they behave responsibly. We have seen how much they have added to the depth. Sometimes you get carried away. So we thought an indication should quieten things down. We did not see that. We did not see that. We saw that these positions were, being assigned here and there. So we took the remaining measures to contain those. This is a very specific, specific measure that is intended to contain this particular episode.
Thank you, sirs. I will now request Ankur Mishra from ET Now to ask his question. Ankur, please.
Continuing with the same topic, many of the banks have been complaining about MTM losses due to the measure which you had taken. I want to understand when you see particularly when we spoke to the market participants, they also mentioned that till 2020, NDF view was different for Reserve Bank of India and it later got changed. Now, if you're saying this is specifically to arrest the rupee volatility, is it a fair understanding that in very near term, once you can see the currency stabilizing, the limit may be once more revised based on the situation? And also, the NDF view remains the same from Reserve Bank of India. Also, today you have announced about the IFR requirement of the banks. Wanted a little more elaboration on the thoughts behind that.
So first question, I think, we answered. Only repeat that, this was in response to this particular episode. This is not permanent or structural. So going forward, we'll see how the markets are behaving, and appropriately, a call will be taken at an appropriate time, to review them. Second question, IFR, I'll request Swaminathan, Mr. DG Swaminathan, to throw more light on it. Basically, changes in the investment, like, now the bond yields are very high, and sometimes they can go up, they can go down, and so that has implications for their profitability. Then the banks come back to us saying, please allow us to stagger these losses. So we had come out with the concept of an investment fluctuation reserve, which to some extent, mitigates. But then we feel that it is, the market prices, mark-to-market prices, should be factored in, because that's the correct position of the banks. And so that's why if they price it as per the markets, then the very need of this fluctuation reserve, goes away. You can probably, throw more light on some of the historical details of why this was first introduced and removed, and then again, it was brought in.
Now, as Governor earlier mentioned, also this had a checkered history. It was introduced under a certain context, withdrawn, reintroduced, and there was also a lack of harmony across the bank types. Different banks had different guidelines that were applicable to them. Essentially, it was required or thought to be relevant because it is better to keep some reserves in good times. So this was to be created as a below-the-line appropriation item out of the profits that would have been generated during the year by sale of investments, so that it can be used up when it is necessary. Subsequently, two significant developments. One is that in terms of our capital adequacy norms, guidelines have been completely revamped, and also that, as you are aware, 2 years ago we issued a comprehensive guidelines in terms of valuation and disclosure of valuation of investment book. So having implemented that, this IFR is considered no longer relevant. It does not in any manner change the value at which investment book has to be reflected in the accounting books, and also it does not change the profit calculation in any manner. This was an appropriation item considered no longer relevant in the given circumstances. So has been done away with more in the nature of a simplification. And third thing is that there was also a different level of compliance across the banks. It was not uniformly complied with as well. And there were supervisory observations arising out of difference in compliance levels. So by removing that particular requirement, we are making it a little more easy in terms of complying with the applicable norms. So it's at this point in time considered no longer relevant. Maybe we can offline clarify to you more in detail. No, because this was a below-the-line appropriation item, so it wouldn't have made a significant difference. 2%. Requirement was 2%. Yes.
Thank you, sir. I will now request K. Ramkumar from Hindu Business Line to ask his question. Ramkumar, please.
Thank you. Are you seeing any kind of signs of incipient stress build up in the banking system because of this supply chain disruption, high energy prices, and weak external demand? And another question is about whether the transmission of the earlier rate cuts is complete into the lending rates and deposit rates. Yeah, thank you.
So, insofar as from the bank side, we are not seeing any systemic concerns with regard to their profitability and their health. Yes, there will be pockets, there will be sectors which will be hit because of the present crisis. Again, it will depend on the extent. The government has done a wonderful job as of now in trying to secure these inputs and reduce the supply chain disruptions. It will all depend on how long this continues. In the meanwhile, you are aware that we have already extended the time limit from 31st March to 30th January for the longer period of exports proceeds to be repatriated to 450 days. Till 30th June we have done that. We'll see going forward, but as of now, there is no systemic risk. What is the second question? Transmission, I think this there, in my statement as a footnote perhaps, against 125 basis points, about 90 basis points has been, is the transmission, that we have seen on the lending side. Similarly, on the deposit side, it's more than 100 So there's been good, satisfactory, as I mentioned, transmission.
Thank you, sir. I will request media persons to please stick to one question. I will now request Piyush Shukla from NDTV Profit to ask his question. Piyush, please.
Good afternoon, Governor, DGs. Thank you, sir. Sir, one payment bank CEO was jailed and he's been released, and the bank is in transition to SFB. Does this development affect their SFB? We have given an in-principle approval to them. Does this affect that progression? Will the bank have to? Has the bank sought reappointment of the CEO? CEO's reappointment. Has the bank sought that? Also, in terms of the upper layer category of NBFCs, when will be the next list updated, and will Tata Sons be a part of it?
See, specific, regulated entities specific questions, we don't ask. The next list, we are coming up with a framework. We are coming up with a new framework for the NBFCs. Very soon, you should see that. New framework for categorization of NBFCs into upper, middle layer, etc. You'll see.
So just this bank.
Very soon, very quickly we should do it. Hopefully
this payment
month.
bank has received in-principle approval for conversion to SFB since he's a KMP. Just some clarity, sir, whether this affects that.
I'm sorry, specific bank questions we don't answer.
But that draft norm, that will be a draft norm or final circular, that NBFC?
Generally, we do a draft. I mean, this case we will see. We'll take a call.
Okay, so that's the RBI Governor speaking to the media in terms of the press conference. But let's also cut across to Karan Adani, who's speaking at the inauguration of a key project in Odisha, underlying the group's commitment to infrastructure-led growth in the state. Let's listen in.
Thank you. Jai Jagannath, Bande Utkal Janani.
Thank you so much, Mr. Adani, for your golden words. Odisha Prasasanara Shirsa Stamba, Drudha Prasasanika.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Haisha Saigal. What's happening? How to
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5, only on NDTV 24/7.
Will the rising sun win with a hand in
Welcome back. You're watching Trending Stocks with me, Hiral Dadia, and Sharad Dubey, who's standing at the market pit with all the action. Sharad, the ceasefire, which has given that support to the markets, and then you had the RBI Governor come in and maintain a pause. The stance has been maintained as well. How are the markets taking it?
Well, the market, you can see I'm just mirroring the entire market right now. It's both green, Nifty is 3.5% up. Let's pull up Nifty Bank. That's much more better setup coming in. Of course, I mentioned the interest rate sensitive stocks, RBI MPC, very strong commentary coming in from the RBI Governor as well, and there is no systematic risk. Interesting commentary coming, but the street is taking it on a good gap up opening, and it has sustained. Last 3 trading session also there was a good technical strength, but Hiral, we call this a wonderful Wednesday. Benchmark, broader indices, you pick anything that's in the green, and a good up move is coming in. Hardly any reds are there in the market right now. Also, let's pull out the other triggers which should be in your radar. It's a 2-week Iran-US war ceasefire. Of course, Israel is also likely to be a part of that. So definitely it has actually helped a lot. The global yields have cooled off. The risk on sentiment, we can see at least for the next 2 weeks, it's still back. But remember, there might be a sell on rise strategy also for some traders. But nevertheless, right now, the up move is being held. RBI MPC, the status quo has been maintained across the rates and the stance as well. Nothing major has changed. Brent crude below $100 per barrel, of 20% up, down move coming in just one single day. That is one of the biggest falls we have seen so far. Rupee has shown a good strength in the opening, and the India VIX, significant fall. Look at that, it's down 20%, and that is where the volatility comes down. And we can see some good institutional buying, delivery-based buying, and I won't be surprised if the FI short covering comes today. Sharp fall in the dollar index also is below 99 levels. The dollar is getting weaker. That's why the rupee, metals all doing well. But the market now will be moving towards the Q4 earnings, and tomorrow IT earnings start. TCS would be in focus. But as of today, everything you touch is green.
Absolutely. Everything that you touch seems to be green right now as we speak. But I think let's quickly look at all the rapid fire stocks as well, Sharad, and take up the rapid fire with Kunal Rambia off the street.
Right, Kunal, good afternoon. It's always a pleasure to have you. We'll start our rapid fire round. Aditya Birla Real Estate, that's in focus. Interesting corporate development announcements coming in. Your views on that?
See, thanks, Sharad, for having me on the show. As you mentioned rightly, everything we touch is green today. And this counter has also shown good strength and recovery, but at the same time, it has really given up for the entire day's gain. So if the counter consolidates near this 1275, 1280 levels, then I think we can consider this to be like a beginning of a new rally, but otherwise we need to turn cautious on this.
And Kunal, Titan has come out with a really strong operational update as well, and folks who have been holding the stock, good time to book a little bit of profit, or do you see a little bit of up move coming in from here as well?
See, again on Titan, Sharad, the trend has been really strong. In fact, in this recent correction, this counter did not really come down much, and now it's hitting the all-time high again. I would prefer to trail the stop loss and hold the position rather than booking the profits. The trailing stop loss can be 4,300. Hold with that particular stop loss and ride the rally.
Kunal, for the last 2 to 3 days, AMC stocks have been doing well, and today also a broking upgrade has come in for ICICI Pru AMC as well. A flight to safety also coming in. It's a good positional trade right now. Also, they have seemed to have run up a little bit from their bottoms, but is there more fuel left for this rally?
I'm a bit cautious on ICICI Pru AMC, reason being the counter is hitting the previous highs itself, which was around 3,170, 3,200 levels. So ICICI Pru AMC, I'm a bit cautious. If there is a further buy side upside, then yes, we can consider that. But otherwise, time to be a little cautious on it.
It's time to be a little bit cautious also. But another stock is Arvind Smart Pace. Q4 numbers are very strong, but there's of course a cash counter. At times these moves do happen, but then of course the volumes also dry up. Any views on that?
No, in fact, we shortlisted this counter on during March because of extreme volumes near those 550 levels. Counter is consolidating well near the support level, but the breakout is pending. So yes, in-house we have kept the breakout level of 620 in mind. In fact, today's high itself was 618. So wait for the closing above 620. The rally can be till 725, 730 after that.
Okay, the Q4 updates have started coming in. Ashiana Housing, Tata Steel, as well as Phoenix Mills. Three companies I have given you, Kunal. Out of these three, which look good in the charts for a better trade here?
Ashiana Housing is a clear no for now. It's been a year this counter is not able to cross 360 mark. In fact, today high also was near to that level, but slipped significantly lower. So be cautious on Ashiana Housing. Tata Steel is overall been in a positive trend on the weekly chart, but on the daily chart, the consolidation breakout was seen today at 200 levels. Counter is trading at 203. If it holds on to these levels for a day or two, it can be a good buy with the stop of 195. And for Phoenix Mills, is a clear thumbs up. Counter is extremely strong, even on the daily chart as well as on the weekly chart. So with the stop of 1600, one can certainly buy Phoenix Mills, and the targets can be 1900.
All right. Thanks a lot, Kunal, for the rapid fire segment. Over to you, Hiral. What are you gathering?
Thank you so much for that. Let's quickly look at the stocks which are trending on Google right now, because it's very interesting to see on a day like this what everyone is searching for, and that will tell you the trends that we should be watching out for. In terms of stocks, LIC, and that's again on the back of the bonus issue that they're mulling. PC Jewelers, Adani Green for obvious reasons, Adani Enterprises, and this is on the back of the SEC, which has admitted the plea put out by the group and a Titan. So these are the stocks which have been trending on Google as we speak. But moving on, Royal Orchid Hotels, that's one stock to watch out for, and this is on a very interesting news wherein they've gone ahead and they've signed a pact with Hilton for 125 hotels in India. That's a big number coming in there. In fact, this is what they're targeting by 2035. So you're looking at almost an 8 to 9 year period. Amit Jaiswal, CFO at Royal Orchid Hotels, joins in. Amit, welcome to the show. Always a pleasure to speak to you, and happy to speak to you after a really long time. My question coming to you is, if you could help us understand more details in terms of 125 hotel pack. Currently, where does it stand with the Hilton, or is this an absolutely new contract?
See, this is absolutely a new contract we have signed with Hilton, a brand called Hampton. We will be developing in basically in southern India and western India. We have an exclusive right to develop, and these all hotel will be in the range of 150 rooms, bigger, larger properties. And next 5-6 years, 8 years, we have to develop and take it to 125 hotels across South and Western India. And we will be taking hotels on management, and we will be giving the brand of Hilton to those hotels. So it will help both Hilton as well as Royal Orchid to develop the market in India, and we will be able to compete with the foreign brands, which we will, to some extent we were missing the bus at a lot of places. So now we will be able to compete with all the foreign brands with Hilton into our portfolio.
Okay. So what is the kind of revenue generation that you're expecting out of this, say in the next, on a yearly basis, and by the time you reach or hit the 125 hotel mark?
See, it is very difficult to, really on a ballpark figure we can always think of, but it will be very difficult to say, because it will all depend on what size of the hotel, what market. See, every market has got a different ADRs. The average rates of every market is different. So it all depends on a host of factors, but overall, it is a very good move for the company Royal Orchid Hotels. They will be able to develop this hotel with the brand presence of Hilton, which is a very strong brand. 3,100 Hamptons are there across worldwide. So with this, the very segment which we used to miss earlier was the foreign hotel segment. We used to miss. So that we will be able to capture and develop it, and we will be doing it. And we have a franchisee contract with Hilton. So we'll be using that brand, and we will also learn from from them. Foreign brands, we learn a lot of stuff. So we will learn, and maybe we will be able to, do better as far as the market is concerned.
Right, learn and earn, that's very much important. But Amit ji, good afternoon, this is Sharad here. I just have a query on the domestic demand front right now. What's happening? We have seen that the global travel plans are getting cancelled, but the Indian hotel industry, the hospitality industry, there seems to be still an acute shortage as compared to the demand which is there. Summer holidays are in. Are you seeing the overall rates going up, and what's the overall action looking like right now, especially for the summer season now?
See, Sarath, let me tell you very openly, I'll like to share the data with you. See, with our leisure market is doing very well. As far as the leisure destination concerned, we are doing very well because we are only dependent on the domestic travelers. Our group of hotel, we don't depend on the foreign travelers. So our leisure segment was doing very well. As far as the business segment is concerned, so we definitely saw a decline in the business post 15th March, primarily because of two reasons. One, as of overall, also every year after 15th March, there is a decline. Okay. But with the war coming in, there is a little tough situation as far as the rates are concerned in the business hotel. Leisure, no effect, absolutely going very well. And April, May, it's a holiday season, schools are closed, so we are doing very well. Business, we got impacted, definitely we got impacted because, the larger and luxury hotels, they were trying to eat into our pie. So there was a rate constraint there. But with the war coming to an end, a good news today, I think we will again bounce back.
So, Amit, tell me one thing, what is the kind of impact you're seeing in terms of pricing? Because average rate, how is that getting impacted?
So it has got impacted right now because nobody knew how long the war will go on. Okay, so there was a constraint because the upper brand segment, the big boys like Marriott and all, they had reduced the rate to pick up our domestic business. Okay, so we also had to reduce a little bit, almost 10% to pick those business. So that was the situation, and we were not very sure about what's going to happen. But as the good news coming in today, so I think they will bounce back again back to the square. And overall, the domestic market in India is doing very well. There is absolutely no issue as such.
Okay. Got it. So, Amit, my last question to you right now is, if you have to look at FY26 the way it has ended and getting into FY27 with all the situations around it, when you're talking about the war, you're talking about the summer season, you have the wedding season that will be coming in as well. What should investors actually watch out for in terms of FY27 for a Royal Orchids and the industry?
If, as we discussed, if the war has stopped, FY27 will be very good for Royal Orchid hotels. We are opening so many hotels during the year, and with this tie-up, we will be, very good as far as the market is concerned. And overall, our 122 hotels are doing very well, and we will be adding a lot of hotels during the course of the year. So the year looks very promising for the company as whole and also for the industry.
So everyone is watching out for and is ambitious and is positive and optimistic when it comes to FY27 and hoping things remain as status quo, at least when it comes to the war situation. But thank you, Amit, so much for joining in. Always a pleasure to speak to you and get you on NDTV Profit. So that was the management of Royal Orchid. The stock trading near the day's highest levels with gains of little over 6% coming in there. But completely out of time. With that, it's a wrap on this edition of Trending Stocks from Sharath, the team that put the show together, and myself. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to Watching Prime 5 with me, Raisha Sehgal. What's happening? How to do?
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's happening.
Join me, Raisha Sehgal, on Prime 5, only on NDTV 24/7.
Sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu, here we come.
Bulls roll on the last street with Sensex above 2,700 points, Nifty near 24,000 mark. All sectors are in green. Nifty, Auto and Realty lead the charts. And RBI's Monetary Policy Committee keeps the repo rate unchanged at 5.25%, retains its neutral stance, signaling a wait-and-watch approach amid global uncertainties. The RBI has projected inflation around 4.5% for the next financial year, but flagged the rising risks from global uncertainty and higher commodity prices, with pressures expected to build in the second half. And Interglobe Aviation see its biggest single-day gain since February 2022. The surge comes after a 25% cut in parking charges for domestic flights announced by the regulator, aimed at easing costs amid the Middle East crisis. In a key legal development, a US court has allowed the Adani Group to seek dismissal of the securities case, offering a potential boost to the conglomerate's position. Good afternoon, you're watching Lunchtime Trades with me, Shreyansi Singh, and this is the show that gets you a roundup of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But before we do that, a very quick look at what the markets are up to. So it's Nifty that's up with that decent uptick of about 830 odd points coming in. When you talk about Sensex, look at the way that the Sensex has zoomed really about 2,800 points at this point in time, holding up very much above that 77,000 level. When you talk about the sectoral picture, that's completely tilted in the favor of green right now. It's a sea of green that you're looking at. So realty leading the charts, autos zooming as well, and PSU banks, bank, consumption, media, oil and gas, all of these sectors in great shape right now. What's lagging behind is IT, but still managing to hold on to a little bit of green at this point in time. When you talk about the top gainers, something like an Ashok Leyland stands out. The entire Adani group is in focus. Shriram Finance is one counter that is buzzing away with that 10.5% uptick also coming in. And when you talk about from within the Nifty 50 pack as well, Interglobe Aviations also makes it to that list. Tata Motors, PV, Eicher Motors, Maruti Suzuki, as well as L&T in great shape right now. When you talk about the entire list of losers as well, a bunch of those counters that you're looking at in terms of Coal India, Tech Mahindra, something like an ONGC, Wipro, Nestle India, as well as Dr. Reddy's making it to that list, and something like a Sun Pharma and Power Grid as well. But with that in mind, let's also quickly take a look at the entire list coming in for oil prices and the entire setup that you have when you talk about this entire region. Now, when you talk about this particular region, you've been looking at a blank canvas for the last 40 days, and that picture has very drastically changed. Let's take a look at Bandar Abbas. Close to that, you can see all of these tankers right now that are close to this area. The red ones, in fact, those are some of your crude tankers that you're looking at. This is an oil products tanker. And when you just zoom out a little bit, take a look at the entire Hormuz area. So this island here, this is Hormuz for you. That's one port that you're looking at. Close to that as well, at the very bottom, you can very clearly see some of those big tankers also. So there's a lot of traffic that you're seeing as opposed to what happened really previously. And a reflection of that is something that you can very clearly see when it comes to Brent as well as WTI. So for WTI, you're looking at the sharpest fall coming in the last 6 years. That's largely the kind of setup that you're looking at, but good to see all of these marks coming back when you talk about this entire region as well. But let's also try and get you the entire focus coming in from the guest perspective as well, try and get you some more insights as well. And let's also take a look at that as well. This is, of course, the entire setup that you're looking at when it comes to the entire Hormuz Island, but also Bandar Abbas. That's the entire setup that you're looking at this point in time. But with that in mind, let's also connect with Vandana Bharti, Head of Commodity Research at SMC Group. Vandana, a very good afternoon to you. And thank you so much for taking time out and joining us this afternoon. First things first, something that we were just discussing right now, that entire block, when you take a look at close to Hormuz, you do have a bunch of ships and a lot of them crude oil tankers that are very much there right now. So you do have that entire disruption that has really rattled the oil market, and how I wanted to get a check going in terms of what you think about it.
Hi Shamsi, for having me in this show, and it was a very great clip you were showing in a very interesting manner. So if we do the comparison, 136 ships, usually they cross the Strait of Hormuz per day. It came down to number 10 only. Now it is somewhere near 20 to 30, as you shown in the video and all. So yes, the things are changing, but it will take at least 2 weeks to get the normal traffic there in the Strait of Hormuz, because insurance company is already there. They are in fear that whether it is actual ceasefire or whatever this is. So their intention towards giving the insurance coverage to the ships, these are very important things, and it will take at least 2 weeks to get the normal traffic in the Strait of Hormuz. But this was really a sigh of relief in the market. But if we consider the cash market, spot market, which is a real concern for at this time, it has not seen that kind of fall in the prices. It is only the futures prices in WTI, which is showing a more than 12% of decline. When we consider the cash market, it is somewhere near, we can say that $110, $105. But still, the trend will catch up sooner or later. And if we consider the option chain, it is showing that very soon we are going to see $90 to $85 kind of level, because there is high concentration near the option strikes of $85 to $90. So we are going towards slowly $85 to $90, but I'm not expecting a $75 kind of level, because we have seen many times that the ceasefire has been broken by both sides.
No, absolutely. And that's something that still remains a little bit of a concern right now. This is a fragile ceasefire, even if it is a double-sided one that you're looking at right now, Vandana. But, just days ago, we were really discussing where, how high oil prices can go, or are we looking at higher for longer oil prices? But right now, what really is a very prudent question to be asking is, where do you see the bottom when it comes to oil prices, given the kind of plunge that we've seen? They're back below that $100 a barrel level. And when you talk about WTI as well as Brent, for WTI, you've seen that sharpest fall in about 6 years that you're looking at. And one of the sharpest single-day declines that you're looking at when it comes to oil prices. All of this considered, all things said and done, where is the bottom for oil prices?
I will consider this time it should be near $80, $85, because some permanent damages they have done. It was already done there in many plants and oil will, and it will take 6 months to 1 year to 2 years to get fully recovered. So it recovered or repaired, I can say that. So this time bottom is higher between $70 to $80, $75 to $80 kind of level we are expecting, because this time they will charge for shipments. This time the insurance premium will be on higher side, and they are charging $1 per barrel from Iran side. So ultimately the cost of shipping will be higher for entire 2026, I suppose, and Iran will charge higher for for funding as well. So this time bottom is higher between $75 to $80 kind of level we are expecting on higher side. Literally, this is a much relief for the market that we are below the 3-digit number, and soon we can expect a $90 kind of level.
Absolutely, and that considered also, Vandana, when you talk about oil prices, given the way that the 40 days of war thereabout have really shifted fundamentals when it comes to supply, they've really sort of thrown all of the previous calculations out of the window when you're looking at oil prices right now. So when you do take a look at the entire trajectory, do you think that higher for longer oil prices is something that you could still be penciling in?
It will show in the data of, say, second quarter of 2026 and third quarter of 2026 as well, because higher prices, every $10 of higher side in crude oil prices, it dent the GDP by 50% and increase the inflation by $5 increase in crude oil prices. It increased inflation by 20 basis points. So the growth pattern, it will deteriorate for 2 quarters. And if we consider the inflation, it will be on higher side. And when we do the historical calculation historically backed data, if crude oil moved upwards for 2 quarters, then it will take 4 quarters to get the actual recovery in the market. So the timing is really double. So second quarter is already going to be see weaker data on GDP front, on PMI front, manufacturing front, export, import, every front. From third quarter of 2026, we can see some kind of recovery in the economic data, and the impact is already across the globe. Even if we consider the US inflation number, earlier it was in February, it was 2.4%. In the month of March, it is expected 3.4%. So 1% jump is really painful for the US economy, where they were expecting 2% kind of inflation in the 2026 and 2% kind of unemployment rate in 2026 to get the interest rate lower towards the level of 1% to 1.2%. So this crude is giving a pain to US economy as well. But they are showing that they are immune to this crude oil higher prices.
No, absolutely. And given all of that has happened, when you take a look at gold on the flip side, it's doing quite well for itself right now. And you're seeing some of those levels that we were wondering if we're going to see them anytime soon really come back into focus when you talk about gold prices. What is the setup that you're keeping in mind when it comes to gold then?
Yeah, Shanshi, whatever happened in gold and silver, it was mechanical selling. It was not fundamental selling. It was liquidation, it was margin call. So it was totally a mechanical selling. Fundamental triggers are already there. And because of that, China, they have bought gold for 17 consecutive months. So it is showing their faith, the world, their faith in gold or silver. And as soon as the situation get better, ultimately the demand in gold and silver will return. And it is reflecting in today's price action. Silver is up by 6%, gold is up by 3.5%, and it is back on the track. So even option data is showing that next target for gold is $5,000. If we consider the Indian market now, the rupee is thank God it is appreciating. So it is also going towards a level of 1,61,000. And the all economic activities, if it comes to the normal, again, silver is going to get the level of 90, 85 or $90 very soon. So fundamentals were strong. It was only supply disruptions and crude-based inflation. We can say that because of that, we have seen a correction in gold and silver prices. So these two commodities were the first to react on the crude oil prices crash, and they are back on the track.
Absolutely, and first to really cheer that in such a big way as well, Vandana. Thank you so much for taking time out and joining us. So there you go, that's the entire setup as far as oil prices are concerned. Strait of Hormuz is reopened just as we showed you a few minutes ago. The energy war premium is something that is unwinding rapidly and weighing very heavily when it comes to oil prices. Gold, on the other hand, the ceasefire is going to be lifting gold despite risk on rally going forward as well. And that's the key insight that we're picking up for you at this point in time. But let's also get you an NDTV Profit exclusive. Sources, in fact, are saying that the government is not in favor of scrapping the existing bids for the IDBI Bank stake sale. And the government is exploring ways, in fact, to move forward with the current bids. Shrimi Chaudhary is joining in with all of those latest updates.
Well, that's right. Government is not in the favor of scrapping the bids they received for the IDBI Bank, stake sale. And instead, it's exploring ways to revise and move ahead with the existing bids, sources told NDTV Profit. And the issue came up in a meeting chaired by Cabinet Secretary earlier this week, where officials discussed multiple options to keep the transaction on track. Now, at the core of the discussion is valuation. Departments, both DPAM and DFS, are of view that deal should factor in unaffected market price, which essentially means to smoothing out the current volatility and to arrive at more realistic and fairer valuation for the bank. Now, there is also some fresh thinking around the structure of the deal, and one of the options being discussed whether LIC could perhaps step in to buy out government's proposed 30.48% stake. Now, this is still under at a discussion stage, but it signals that government is flexible in how the stake sale could be executed. As things stand, LIC holds 49.24% stake in IDBI Bank, while government owns 45.48%, and the plan is to divest a combined 60.72% stake, along with the management control. So, for now, the government appears to be in no rush. A final call is likely to be taken once the market volatility eases, but they're willing to tweak the approach as far as IDBI stake sale is concerned.
No, absolutely. And thank you so much, Srini, for getting us that highlight. Let's not lose sight of the market, though, because you do have markets close to days high, whether you talk about Nifty or Sensex. When you talk about some of those gainers as well, the entire Adani group of companies is actually doing quite well right now, about 8% uptick coming in for something like an Adani Enterprises, Adani Ports, Adani Green, all of them in great shape right now. The US court has admitted Adani Group's plea to dismiss SEC lawsuit. Remember, Adani Group promoters had asked the US court to dismiss the securities fraud lawsuit brought by the US Securities and Exchange Commission. In fact, Nimit is joining in with some more details.
Yes, Shreyansi, the Adani Group's plea to admit its case to dismiss the case against Adani by the SEC has been accepted by the court. Now, this is not a decision on merits. This is simply a decision by the court in the US to allow Adani to make its case in court. Now, what it's been ordered is a pre-trial conference, which means that before a trial, parties will get together and decide a schedule for the conference, for the trial, and present that to court. What we actually want to get into today is what were the arguments made by Adani as part of their filing, asking them to dismiss this case. The biggest one being the jurisdictional claim. The Adani Group claims that the SEC has no jurisdiction over the dispute it's claiming, the bond issuances. What it says is that Adani Green is not a US listed company. The SEC failed to show domestic security transaction linked to Adani Green, and also Adani calls this impermissibly extraterritorial. Now, what this means for the structuring. Now, structuring, Adani says that all these bonds were issued to non-US underwriters, again highlighting the fact that it's not a US transaction at all. They also said that any US resales of those bonds were downstream. That means were without any issuer involvement. Again, highlighting the point that nothing was related to the United States here with Adani. Now, another important argument that the SEC makes is on DTC settlements. DTC is a clearing corporation, and the SEC says since the trades were cleared by DTC, then the US will have jurisdiction because the DTC is based in the US. Adani says that the DTC was merely a procedural fact. It was not that the trades were conducted there. It was only cleared there. And this does not establish a connection. In fact, the Adani Group has cited US case law that favors them here. They also again said that the actual allegations of bribery are false, and also even assuming for the sake of argument, those allegations, the alleged allegations, were not connected to the United States. Of course, on investor harm is going to be another big point. The Adani Group says that there was no investor loss and the bonds were fully repaid with interest in 2024. So essentially now we're going to have a pre-conference trial between Adani and the SEC where they're going to decide on a timeline and go back to court and argue this on merit.
No, absolutely. And thank you so much for getting us that entire roundup then, Nimit. So there you go. That's the entire set of arguments that were presented from the SEC side, also from the Adani side as well, in terms of the DTC settlement being a back-end mechanical process. That's something that you're looking at. No investor loss from bond issuance, also something else that was highlighted. So that's something that you're looking at in terms of that entire set of companies. But something like a Titan is also in focus. In fact, the stock is up more than 6% thereabout, currently about 6.2%. And that's after the Q4 updates. Mahima, in fact, is standing by with some more details when it comes to Titan.
So Shreyansi, strong update most certainly coming in for Titan. This has been the case for all these jewelry retailers, right? We saw Senco Gold also flying on the back of that, PN Gargil also doing very well. But for Titan, overall consumer business has seen an uptick of 46%. Domestic business has grown by around 42%. Jewelry, overall strong growth of 46% is what we've seen. Like-for-like growth at that 48% mark is very impressive. Secondary sales has also grown by around 52%. Tanishq, Mia, Zoya, all of these brands have grown at 47 odd percent. High single digit buyer growth after 3 quarters of having flat growth is something that they've seen this quarter. Studded growth is also in 30s, plain gold growth in mid 30s, and coins have nearly tripled as compared to where they were in Q4 FY25. Watches overall division has seen some impact this quarter. Overall growth at 7%, 16% uptick in analog, but smart watches is where there was 53% decline. Eye care growth at 16%. Emerging business fragrances has seen a good growth of 30%. Women's bag has grown by 47%, but Tanera is still a pain point, which is degrown by around 1%. International business overall, North America is doing very well, grew 50%. The Damas store conversion has happened this quarter, so all those Damas stores are now have incorporated. They've incorporated them in Titan books, and 4 Damas stores were converted into Tanishq. Overall, March did see disruption because of the Middle East conflict and has impacted both sales in Tanishq and Damas stores in the Middle East. Even though overall GCC business has seen a growth of around 37%, and overall Titan International, including Damas business, has seen a growth of around 156%. So this is the overall view of how Q4 has panned out for Titan.
No, absolutely, and thank you so much, Mahima, for getting us all of those highlights. So there you go. That's something like a titan that is in focus. Let's also not lose sight of the markets as of now, because it's Nifty and Sensex that are in great shape right now. In fact, if you're wondering where to go from here, let's also take a look at some of the insights. Before we do that, of course, you did have some of those flashes at the bottom of your screens in terms of the 2-week deadline as well, where the IDF is actually ready to be responding to any sort of violations coming in from Iran, and that's also something that's quite important to take note of right now. But like I said, going forward, how should you be approaching markets? Let's also go across and listen into the commentary coming in from Richard Harris, Pankaj Murarka and Ajay Bakka.
People were looking at the Fed, for instance, they were looking at a bias of interest rates going down. Now the bias is very much a hold and maybe even looking to go up. So that is a major change from January. I think, as I said a moment ago, the consumer and concerns about spending is a major change from January. So yes, we are likely to see, the old dead cat bounce in equities.
What we've seen in the month of March was when you get and it's very logical that when you get a macroeconomic shock, financials is the first sector in any economy to get hit, and we saw very sharp underperformance where financials fell much more than the Nifty index. We don't see asset quality concerns in the sector. I think the balance sheets of banks and banking sector is probably one of the finest that I've seen in a very long time. Yeah, valuations are very reasonable, and we are already seeing signs of improving credit growth. Credit growth for year ended March 26 or FY26 at about close to 14% is much higher than 11% that we saw a year before. I think we are in the midst of a recovery as far as credit growth is concerned. So I think, and valuations are very reasonable in financials. So in that backdrop, definitely yes, I think financials is a must buy given the way the sector has been beaten down.
They tried to come back from September 2020 onwards, and nobody had the guts to come back. The SIP holders made the maximum money. So Indian retail makes the maximum money because they are not timers of the market. So the SIP route is the best. That is the only free lunch that you have in finance apart from diversification.
All right, and there you go. So more than a dead cat bounce, it's actually a roar that you're looking at on the Lal Street right now. But let's also talk about some of those counters that are in focus apart from Titan on the back of their Q4 updates. So something like a Zota Healthcare is standing out on the back of total stores that have increased by about 11% on a year-on-year basis, about 5.6% uptick coming in on this particular counter as well. And when you talk about company-owned, company-operated stores as well, they've grown about 15% on a year-on-year basis. And when you talk about franchise-owned, franchise-operated stores, they've grown about 3% on a year-on-year basis. When you talk about something like an Ashiana Housing, and both in terms of the Q4 as well as FY26 business update, in the fourth quarter, you saw the book area that was close to about 11.1 lakh square feet as well, and the sold value was also, you did see quite an uptick coming in on a quarter-on-quarter basis. The FY26 sales value, that is something that's very important to highlight because it's the highest ever FY26 sales value that you're looking at for something like an Ashiana Housing. The stock is doing decently for itself in trade, but what's really soaring away in trade right now is something like an Indian hotels company. When you talk about the portfolio update, the total hospitality portfolio has expanded to 628 hotels. When you talk about the stock, that is about 7% up right now, including 373 hotels in active operations. You do have that portfolio expansion that is in focus, and the pipeline of 255 hotels is also something that is under development. And the stock seems to be really cheering this kind of update that you've seen coming in. Something like a Tata Steel also on our radar right now, because you do have Q4 that was quite a strong quarter. The Q4 crude steel production was up about 15% on a year-on-year basis. Deliveries also edged up about 10% on a year-on-year basis. And it's the best ever crude steel production in FY26 that you're looking at, with that 8% uptick on a year-on-year basis. Lastly, when you talk about the India deliveries, they also reached a record. Domestic deliveries as well crossed about 20 million tons for the first time. So that's the entire reason why this particular stock is in focus, about a 3% uptick coming in here as well. Lastly, when you talk about something like a Phoenix Mills, you do have FY26. So that was quite a milestone year here. Retail consumption hit an all-time high, up about 21% on a year-on-year basis. Retail consumption led by existing mall portfolio. So that's really the key growth lever that you're seeing coming in. Office portfolio also scaled up sharply with that 70% occupancy. Lastly, when you talk about residential sales, more than doubled to 471 crore rupees. So on the back of that, look at that surge coming in when you talk about Phoenix Mills, 7.8% uptick coming in on this particular counter. But with that, it's a wrap on this edition of Lunchtime Trades. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
To understand the Tamil Nadu twist, join me in the midst of our people, language, and politics. Vanakkam Tamil Nadu. Here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello, welcome to watching Prime 5 with me, Raisha Saigal. What's happening? How to
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Saigal, on Prime 5 only on NDTV 24/7.
Will the rising sun win with a hand in hand?
Good afternoon, you're watching Small Cap Buzzers on NDTV Profit with me, Somit Sarkar, and my co-anchor, Varsha. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade either on the back of price or volume action. But firstly, let's see what's on the show today. Firstly, we'll be speaking with the management of Garuda Construction. Now, it's a debt-free company and it's positioned well for a long-term scalable growth. But from where the growth will come in and which will be the key factors that will aid this growth is something that we'll ask the management today on the show when they'll be joining us. Apart from that, we'll be discussing about a host of companies. Firstly, it is the oil explorers and the ancillary companies like HOEC, Antelope Salan, Jindal Drilling and Deep Industries. Now, because of the fall in crude oil prices, we are seeing a downtick in these companies as well. What could be the impact? We'll discuss on the show. SEPC is one counter. That stock has hit an upper circuit of 20% in trade, and in the last 5 trading sessions, the stock is up nearly 30%, and it has been gaining for the last 5 consecutive sessions. When it comes to Ashiana Housing, strong Q4 update has led to a big uptick in the share prices. How does that help the company? Something that we'll discuss on the show today. And when it comes to Stallion India, the stock is up around 28% in the last 5 trading sessions, and it has been gaining on the back of AC sales, which could lead to more demand for fluorochemicals, which is the key product for Stallion India. So this is what we'll go discuss on the show today. Now, if you look at the benchmark, that's Nifty 50, that's up nearly 860 points. It has come off from the day's highest level. In fact, we had crossed the 24,000 mark at one point of time. It has come off a bit from that level, but still we are up nearly 860 points in trade, and this is the 4th trading session. In fact, the 5th trading session where we have been gaining. Now, if you look at the sectoral indices, Nifty Real Estate and Nifty Auto are the top sectoral gainers. When it comes to Nifty Auto, it's largely led by Ashok Leyland and Tata Motors CV. While on the flip side, no sectoral losers, but Nifty IT has gained the least, followed by Nifty Pharma. Both the indices are up anywhere between 0.1 to 0.6%. But Varsha, when it comes to the small cap space, what has been buzzing in trade?
Well, you know, a lot of small cap stocks are actually buzzing on the back of news flows and, of course, order volumes. And of course, considering the market situation, every small cap stock is gaining today. You have, you know, Kirti Industries. Let's pull up that stock. The stock is up. This is on the back of volumes, though. Well, the stock is up almost 5% in trade. You have SEPC. You have Chamanlal Sethia, which is buzzing on the back of volume at 3x. Then you have Liquidity Infra also. Well, this stock, if you see, is up 53% in the last 1 month. Strong gains we are seeing in Liquidity Infra as well. Man Industries is one such company which is again buzzing on the back of volumes. You also have Vikran Engineering, which is, you know, buzzing on the back of volumes, although decent order book when it comes to discounter. On the losers side, though, there are losers. You have DC Infotech, you have Confidence Petro. We are seeing some kind of profit booking over here. Even Bombay Seed, the stock has gained in the last 5 sessions a lot, and we are seeing profit booking today. There you go. The stock is down almost 2.3%. So, you know, a lot of stocks are actually buzzing on the back of volume. But one stock, which is a debt-free construction company, which is positioned for long-term scalable growth, and its future growth will be led by higher value project execution, which is, Garuda Construction. The stock is up almost 7.4% in trade today. But to speak more about the order book going ahead and, of course, what's the outlook when it comes to next 2 to 3 years, here you're joined by Mr. Praveen Kumar Agrawal, who is Managing Director at Garuda Construction and Engineering. Mr. Agrawal, hello and welcome at NDTV Profit. Always pleasure to have you. You know, let me start with your order book. What's your order book as on date, and what are the execution timelines?
Hi, this is Praveen Agarwal. I'm the Managing Director of the company. Currently, our order book is approximately around 5,000 crores. We are just touching nearly 5,000 crores. We have not signed a new contract in the last 2-3 months because of the we're just being safe. So we have new orders in pipeline, which we are just going to sign after this opens up. So just now we are at 5,000 crores.
So what are the execution timelines of this 5,000 crore order book?
Yeah.
What are the execution timelines of this 5,000 order book? If you could, help us, or you.
This we have to. These are all mostly 40% of these are government contracts. So we have to 40-50% are almost government contracts. So we have to finish everything within 3 years. We'll complete. We are known to execute. We don't delay projects. So we will complete them on time. Within 3 years, all this has to be completed.
Understood. And sir, talking about the expectation of your order book by the end of FY27, what's the target that you have set when it comes to order book outlook for overall FY27?
Yeah, so we have been very cautious. We can increase our order book, can double it from here very easily, but we are choosing our contracts very, very cautiously. And we don't, first of all, we have a lot, just now this year we will be crossing around a double what we did in the last year. So execution is very important. So we are not just looking for order book expansion. We are looking for implementation very importantly. So every year we double our book, then we can complete in 3 years. So that's important that we don't run after the order book. We just do implementation of good projects at the margins that we are sustaining all these 5 years. So our EBITDA margins, you are seeing what EBITDA margins we work on. So we have to maintain them. So we choose our projects very carefully. Still that being said, we will definitely grow our order book by 30-40% this year.
Okay, and margins would remain in the 27 to 30% range, or is there some scope for expansion there as well?
Yeah, we'll better them. We are trying to better them. Yeah, so that is our ethos. Yeah.
So in FY27, the margins could be better than 30%?
Yeah, we will be there. Yeah, better than all these years.
Okay. Also, given the fact that we are on the order book topic, if you could just give us a sense for how many, what is the worth of orders for which you have already bid, and in past, what has been the success ratio for Garuda Constructions?
Yeah, so we are very choosy about our bidding. So we don't bid at too many projects. So we are now doing private contracts. So very soon you will hear a big private contract which is in our pipeline now. We are not bidding for government contracts on a large scale now, because we have already have our plate full as of now. That is what we feel, that we should look at implementation very strongly and just not increase our order book. That is important.
In the past 5 quarters, if I look at your financials here, from a profit of 13 crore that we had seen in December 2024, this number has jumped to 33 crore in December 2025. Yeah. Say by December 2026, by how much can this number increase?
So this run rate will remain. That is what I am saying. So we closed FY25 at around 225 crores. We will more than double 26, and we have to double it in 27. So accordingly, the EBITDA margins, the ratios will remain. Because we are maintaining them. We will be maintaining them surely.
Right.
That's our endeavor.
Right. Sir, just reiterating, for FY26, you're expecting to double your revenue over FY25. What about FY27?
Yes, we have to. Then only we'll be able to. So our speed will be growing, so we can complete our order book. So we are expecting to double it from 27, or at least 80-90% above what we did in 26.
So 80 to 90% growth in FY27 over FY26. Got that view. And also, what about, sir? There was a time, when you used to enjoy like 25% of PAT margin, but now currently it hovers around 22 to 23% when it comes to PAT margin. What are the expectations for the same in FY26 and FY27? If you could give us range.
Yeah, that is what I'm saying. We are very focused on our bottom line. So we'll not compromise on that. We'll be around that range always.
All right. Got that view. Also, your roots are in MMR. Are you and you're also executing some of the projects when it comes to Arunachal Pradesh, Punjab and Rajasthan. What percentage of revenue are you expecting from non-Maharashtra in next 2 years?
Yeah, so our non-Maharashtra has grown, so we'll be approximately 50% from non-Maharashtra.
And also, sir, what types of projects are likely to dominate further order flows? Will it be development, infrastructure or institutional?
Yeah, it will be more of commercial development and residential development. So we are not going into road projects or anything like that. We are doing structures. So mostly malls, hotels, residential complexes, all such. We are doing a sports city. So we'll be expanding into sports infrastructure. So basically all this, yeah.
And one thing that I wanted to understand, sir, given the fact that we have seen a sudden surge in a lot of cost items like be it crude, be it metal prices, any impact that you are seeing on your raw material cost?
This is all a little bit volatility is there, but I don't think there is any big major difference. So I don't see we are factored in. Actually, all these small things are factored in, and they are not beyond the general average. I think there's nothing to panic.
And so lastly, you have always maintained asset-light business model by relying on third-party subcontractors. As you scale towards higher value projects, is there any plan to bring labor in-house?
No, we will be working on similar models. Actually, we are asset-light and we will maintain it like that.
And lastly, you being a debt-free company, do you plan to take debt going forward or any kind of fundraising in plans?
No, we don't have any such plans as of now. Our cash flows are well managed. So I don't think we'll need to get into debt. As far as possible, we'll try not to do debt.
All right, got that view. Well, thank you so much, Mr. Agarwal, for joining in and having a conversation with us. All the best for the business.
Thank you so much.
Thank you.
Thank you so much. Yeah. Nice.
Well, this was Garuda expecting 80 to 90% of revenue growth in FY27, maintaining the similar kinds of margins. But moving on, let us invite the guest for the day, who is Narendra Solanki, Senior Vice President and Head Fundamental Research Investment Services at Anand Rathi. Well, Narendra, hi and welcome at NDTV Profit. You heard the management of Garuda Construction. What's your view when it comes to this counter and what advice would you give to investors?
Yeah, good afternoon. So first of all, disclaimer, we do not have any active coverage and recommendation on this stock, but we are very positive on the sector, construction and infrastructure especially, and looking at the growth requirements of the Indian economy and the kind of investments the government is keen on making in improving various infrastructures. And not only government, even the private sector is also investing heavily for next 5 to 10 years. So the sector is definitely having a good growth outlook. Plus, whatever the data which I have heard right now, the order book is very strong, and it's now only the execution part that has to be demonstrated by the company. And if they successfully demonstrate the kind of execution which they are talking, so I think the stock is very interesting and should also bring good returns for the investors looking to invest into it.
Well, before we move on to our next small cap stock, let's get in Sharat to understand how the F&O market is shaping when markets are already up over 3% in trade.
Well, that's right, Somit, and we're largely to see a lot of short covering happening, and tonight's evening data is something which we'll be watching out for, especially on the FI front. Yes, net looking at Bankex and Sensex, there's nothing much to talk about. Everything is in the green, and largely we see this momentum to sustain going ahead as well. Amongst the losers, only 3 losers are there in this Sensex heat map, which is there on your screen. But let's look at the stocks which should be in your radar. The first one, the long build-up stocks, which should be in focus. And you pick up any, actually, 85 to 90, actually not even 95 to 90, 95% of the F&O market is in the green. Ashok Leyland, Adani Green Energy, they make it to the list. Of course, there's a good news flow coming in the entire Adani Group pack as well. That's why you're seeing good volumes coming up. Short covering for Force Motors and PG Electroplus. PG Electroplus, definitely we are talking about the EMS space where the sell-off was there even in the month of April, but now those positions are reversing. Long and winding, only one company is there, that's Tech Mahindra, which should be in your radar. And short build-up, definitely there, but not very much convincing also. That is Oil India and Coal India as well. Little bit of profit booking coming off Coal India. And we know there's a big reversal in the crude prices, and that's why ONGC, Oil India are under pressure. So these are the important stocks in the F&O space.
Thank you, Sharath, for that. A host of companies that are related to oil, be it HOEC, Antelope Celan, Jindal Drilling and Deep Industries. All these counters are weak in trade, down around 5%. And this is largely because we have seen a sharp drop coming into crude oil prices. Oil prices, in fact, have plunged below the $100 mark after Iran has agreed safe passage of crude and other products through the Strait of Hormuz during the ceasefire period of nearly 2 odd weeks. Now, Brent crude dropped as much as 15% in trade, and do remember that nearly 20% of global oil passes through the Strait of Hormuz, and a clean pass will help ease out the pressure that we are seeing overall in the market because of lower crude availability. Now, in fact, post this drop, crude prices are now trading below its lowest level that we have seen in the last 1 month. So how does this impact these 4 companies? When it comes to HOEC and Antelope Celan, both these companies are oil explorers. Lower oil prices lead to lower realizations. Lower realizations mean lower earnings for them. And when it comes to Jindal Drilling and Deep Industries, both these companies are oil drillers, and usually lower crude prices lead to lower offshore rig rates. Now, when it comes to HOEC, they have multiple oil fields in the northeast of India. When it comes to Antelope Celan, they have 9 oil fields across Mumbai and the Mahanadi field. When it comes to Jindal Drilling, they have offshore jackup rigs, which they have total 6 of them. 3 of them are owned, while 3 of them are rented. Currently, they are operating 5 offshore rig rigs with ONGC, and one was under refurbishment and will be deployed right now. So this rig could be deployed at a lower rate if crude oil prices continue to fall. And when it comes to Deep Industries, they have around 18 operating rigs, and all are onshore rigs deployed in Gujarat, Tripura, Assam, Andhra Pradesh and Jharkhand. And of these 18 rigs, 2 were supposed to be deployed by the end of FY26. So if they were not deployed by the end of FY26 and they are supposed to be deployed right now, then they might get a lower rate compared to what we had seen earlier. And that could be the reason why these counters are down in trade today. Let's get in a view from Narendra. Narendra, how are you looking at these 4 names? Obviously, it's a sentimental impact that is coming in, specifically when it comes to the drilling companies. But what about HOEC and Antelope Celan as well?
Yeah, again, disclaimer that we do not have any active recommendation on these stocks. But yeah, definitely, if you it's a sentimental impact. And if you look at the lessons learned from this West Asian episode, is that India must diversify its energy sourcing. And the best strategy would be looking out for the energy sources which are very near to the shore, or better is to be within the borders of our own country. So I think the long-term perspective for the sector is definitely looking good as far as the government strategy is concerned, which is that to develop more onshore and even near shore capacities for oil and gas exploration, etc. So I think 3 to 5 years down the line, the sector looks promising, and the growth should be at a very decent pace. And the near term, the reaction which we are seeing is mostly a sentimental impact.
Right. Well, moving on, let's put our focus on the stock SEPC. If you see, the stock is up almost 20% in trade today. This is buzzing on the back of course, volume. But what's the reason behind this rally? We are here joined by Jasmeet, who will let us know all the details.
Well, Varsha, thank you for that. If you look at this particular counter, as rightly said, it's buzzing on the back of those heavy volumes. But before we understand more about the company and do a deep dive, let's quickly understand what does the company do. Well, the company was formerly known as Shriram EPC, now it's known as SEPC. While company operates as a turnkey solution company where they provide end-to-end engineering, procurement and construction solutions to a lot of infrastructure companies. Now, if you look at the other key aspect of stock performance, the stock though is buzzing in trade up 20% odd, but if you look at over last 5 days, it's up 30 to nearly %. But but the thing reverses when you look at a 6 month and 1 year figure. Over last 6 months, the stock is down 40% and Y20 versus the stock is down 30-odd%. So we do see a lot of volatility in the stock price movement. Now, in terms of the recent news, the company recently got downgraded in terms of the overall credit rating. They got downgraded to the rating D, that's a default, while this got triggered by the delay in the interest payment in the month of Feb, where the company delayed the interest payment of over 30 days, and that's why we saw a pressure on the stock, and that's why stock has been tanking since the news has come. But today it sees a recovery in trade of 20-odd%. Now, if we look at the other key recent news, as we do see that the company is constantly expanding its base, and for the same case, the company has acquired an entity called Avenir International, where it's an entity based out of Abu Dhabi. With this particular acquisition, the company plans to finish it in next 6 months, and they acquire 90% stakes in this particular counter. If we look at the few key financial details of this particular counter, that's Avenir International, we do know that the company is valued at 1530 crore, and the overall order book for the company stands at 1287 crore. While with this acquisition, company increases its spans in Abu Dhabi for sure, but also increases the stance when you look at overall oil and gas engineering sector as well. Now, if you look at the key financials, it's quite interesting given that the top line of this particular counter peaked in the FY19 and FY20 year, where it touched the 1200 mark, but in FY25 it settled down to rupees 598 crores. So we see the top line nearly getting halved in last 4 years. Now, in terms of the margins did saw a peak in FY25 at 11-odd%, and currently it's trading at 8-odd%. While the Q3 was a great quarter for the company, given the overall top line jumped nearly 156%, touching the 340 crore mark, and the margins were 500 basis point. So all in all, we do see strong fundamentals, which have been slightly volatile in the past, but companies are picking up. It's a wait and watch of how does the overall Q4 pans out with the company going ahead.
Well, Narendra, the stock is up 20% in trade, but it has had a sketchy past, given the fact that in the last 1 year, the stock prices are down nearly 46%. So should investors avoid these kind of stocks whenever we see such kind of moves?
Yeah, definitely. And I think the space in which the company is operating, there are a lot of better options available in this particular space. So definitely investors should look out for the other better options which are available in this space.
Okay, moving on to Ashiana Housing. A strong Q4 update has led to a big up move in the counter. Let's get in Puneet to understand what has worked well for Ashiana Housing in this quarter.
Well, thank you for that. Definitely a strong Q4 update for the company. Higher Q4 sales vis-a-vis Q3 of FY26, as well as on a YY basis also has been very strong growth. Stocks up 4% as we speak because of that. Total area book for Q4 at 11.19 lakh square feet with the value sold at almost 1289 crores for Q4 versus 397 crores in the previous quarter. So it's been almost a 3 to 4x jump. There's also been in the whole year of FY26 almost 2400 crores of area sold. So Q4 has come in at almost 50% of what the last 3 quarters have done, and hence a positive figure nonetheless. In terms of the company, of course, it's in premium homes, kid-centric residences, but the senior living aspect of the portfolio is very interesting because currently forms 25% of the pre-sales, and the company has guided that to increase to 50% in the near term. They've also had a couple of key land acquisitions over the last few months. One has been of a 22-acre land parcel in Chennai of Mahindra World City. This will be a potential sale of almost 1200 crores. And another one in Vavel, Maharashtra, where 8 acres will be acquired and a 4.5 lakh square feet could be the expandable area. What's also interesting, just before this quarter itself, the company passed its pre-sales guidance for FY26, a target of 2,000 odd crores, and hence there's a lot to watch out for in Q4 in terms of growth for the coming year.
Right. Narendra, how are you looking at Ashiana Housing? Would it be one of your top picks in the mid-cap or the small-cap real estate space, or there are other stocks as well?
We do not have any active recommendation on the stock, but looking at the updates, I think it is one of the best numbers posted by the company in a very long time. And I think if this performance continues, then it would be generating decent returns for the investors. But we do not have any active recommendation on this.
Well, moving on, Stallion India Fluorochemicals, let's pull that stock up. Let's see what that stock is doing. The stock is up almost 13% in trade. Now, if you see, the stock is up 28% in the last 5 sessions, and the stock is in focus because of peak AC season which is approaching, and refrigerant gases are actually used in the ACs, and Stallion India Fluorochemicals makes those refrigerant gases. On to FY26 medium targets, if you see, is revenue is expected at 430 crore, PAT at 40 crore, management targets 30 to 35% CAGR over the next 3 years. Long-term margin expansion of 3 to 4% will be driven by backward integration and new products. They're also going for capacity expansion when it comes to R32 manufacturing gas. Then you have environmental clearance secured for 10,000 MTPA R32 plant, which is a key backward integration step for this company. And onto the competitive position and market tailwinds, they are operating 4 facilities with 2 under development, which includes 40 gases and blends. Backward integration into R32 is one of the refrigerant gas, is expected to bring price parity with leading manufacturers, and the structural shift from low price HFCs to higher value HFO will support margin uplift for this company. Narendra, coming to you on this, what's your view when it comes to Stallion India? Because we have seen that huge run up in the stock, but now the stock has seen lots of pressure overall. What's your view when it comes to this counter, and what should investors do?
See, on chemical sector, we are having right now a neutral to cautious stand. I think today's move is more because of the West Asian ceasefire, wherein it is expected that the Strait of Hormuz is going to be open now. And earlier, if you see, apart from the oil and gas, the chemical sector were the major ones which were impacted because of the West Asian situation, because a lot of feedstock, oil is actually feedstock to a lot of various derivatives, and in this industry is another one which should be having a feedstock in terms of which is related to oil. So I think today's reaction is more related to that, but in the fluorochemical space would be more comfortable going with much diversified established players like Naveen and Gujarat Fluorochemicals kind of names in comparison with the Stallion.
Right. Thank you, Narendra. Thank you for joining us and giving us your views on the stocks that we discussed. Well, with that, it's a wrap on this edition of Small Cap Bazaar. Stay tuned and keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with Haisha Saigal of Sanjay. How
The show that sets the
Welcome, you're watching Ask Profit, the afternoon edition. I'm Mahima Vatsarajani, and with me, as always, is Puneet Zaveri. Before we start taking all your stock-related questions, let's take a quick look as to how the markets are doing. The Nifty 50 now trading, up by about 3.7%. I think almost at its day's high point, slightly off, but trading 850 points higher as we speak. And consistently, the gains have been maintained for the day. The Bank Nifty is also trading 5% higher, above the 55,400 levels for the Bank Nifty. The Nifty 50 has, tried to touch that 24,000 mark and has come back from there, but just 30 odd points away from that 24,000 levels. Let's try to pull up the heat map to see if things have changed there in terms of where the gainers and losers are concerned. You have Shriram Finance topping that chart now, up 10%, followed by Adani Enterprises, Tata Motors, PV, Interglobe Aviation, Ultratech, L&T, Eicher Motors. So a lot of auto names doing fairly well, and counters which were beaten down doing fairly well. But on the flip side, you have Coal India, which is down 3% now. Tech Mahindra, Wipro are some of the IT names which are slightly under pressure, and Nestle also down by about 0.7 odd percent. Let's try to pull up the sectoral heat map to see as to how sectors are doing at the hour and whether there's some relief seen in the Nifty IT. Yes, there is. It did turn into red, but now has charted back to the green territory. But Nifty Realty still continues to be up 7%, followed by significant gains coming in Nifty Auto, Nifty Defense, Nifty Bank. All of these counters. I don't think the last time I saw the screen where you would have seen sectors gaining above 5% at such length, right? And let's quickly also pull up the advanced decline ratio because that gives us a picture as to how the broader end of spectrum is looking like, and it's looking as strong as the benchmarks go. Has still, Puneet, maintained the 3-digit figure in declines, and it's so good to see that.
Well, most certainly, and you're seeing with rigor today move in, because almost 4 months of pain in the realty index and just 1 day of move up almost 7% today. What's also interesting that the benchmark is up 3.6%. Look at Nifty Bank though. Nifty Bank is up 5% in one trading session and just needed a one trigger as well. So that momentum has clearly shifted for the Nifty Bank, and it's the fourth one if you're wondering from the top. PSU Bank Index also up 5%, but continues to be a very strong day for the markets. Mid-cap, small-cap also showing you that performance today as well in terms of market moves. The mid-cap index up 3.8%, small-cap too has been up with a similar trajectory, so outperforming the benchmarks. And the BSE 500, it's a pretty screen, so let's look at that one as well, because you're seeing individual movers, Easy Trip, Jindal, Chola Holdings, Ashok Leyland. Biggest FNO gainer for today, and we'll put focus more on Ashok Leyland in India market close, but a very strong screen. Adani Green, Shriram Finance, Chola Finance. So the CV makers, all of them within different sectors also showing you that momentum. Let me welcome in Tapan Doshi at this time of CATapan.in. He is of course the fundamental expert, and Rahul Sharma, Director and Head Technical and Derivatives Research at JM Financial, also joining in. Gentlemen, both of you, thanks so much for taking out the time. It's a big important session, but let me go across, take the first query. This one's coming in on Samman Capital, and Biswajit from Kolkata holds 300 shares at 155. Now he has a 2-year view. Tapan, since the long-term query, the open offer will probably be at 139 because the company has now had a new majority owner in terms of promoter change. How do you view this counter now?
Good afternoon, Puneet. Yeah, talking about Samman Capital, no, there were earlier the corporate issues. Now this open offer is there, but somehow no, the financials are not great. And no, last few quarters, if you see, the NBFC sector is doing well, but this stock is actually not doing well. Honestly, looking at the long term angle, I think there are much better stocks available. So I'll go for something like PNB Housing or Aadhar Housing instead of Samman Capital if I want to go for long term.
All right, so that's the view coming in on Samman Capital, but we've got our next caller. I think Pradeep is calling us from Visakhapatnam. Pradeep, a very good afternoon to you. What's your query about?
Yeah, very good afternoon. Thanks for taking my query. I have 40 shares of HDFC bought at 770. Can I add more at this price?
Are you looking at it from a long-term perspective, Pradeep, or is it the short-term chart?
No, it's a short-term, 2 to 3 months, medium-term.
Okay, all right. Then I'll take this up with Rahul. Rahul, good afternoon to you. Your view on HDFC Bank from a 3-month perspective?
Yeah, so we think that at least in the short term, the bottom is formed for HDFC Bank, and we may see the stock head towards 850 and even 900 in the time to come. So from a 1 month perspective, I think we should be looking at a target of somewhere around 900, which is where the broke down started or began, or when the war began. And once markets are also into comfortable zone, we may see 900 being taken out and higher levels being tested. So as of now, it's best to have a target of 850 and 900. Post which if the broader market setup is positive, we may see higher levels in HDFC Bank.
Got that view, Rahul, and you've seen HDFC Bank touched that 740 mark, and then of course today's move being a majority of them, but was an interesting level just a few days ago as well. But next question is on Transtrail Lighting. Ranjit from Hyderabad has invested 500 shares at 695. Now stock's taken a beating post that today, of course, up over 500 rupees. But Tapan, what's your long-term view on this stock? Would you recommend Ranjit to average down at this point of time?
Yeah, hi. See, if you see this stock has been already beaten down, and no, if you see the financials overall are okay. The guidance is also okay, but there is some execution part where this stock is laggarding actually. But I think in future this will come up here from here. I think the execution will be much better. So my take is I think one can hold this stock. If he wants to average, he can average at this level also.
So that's the view coming in on Transtrail. I think the next one is coming in from Shankar, who's writing us from Bengaluru, asking about Tenneco India. Wants to know if we can add more at the current price levels or wait for further dip. Tapan, I'll stick with you for this one. What's the view like?
Yeah, one can hold this stock for a little bit longer, no, because I think there will be a rally from here, and 1 or 2 quarter one can wait. See, the sector is promising, but still no execution part we have to see. The guidance is okay, even the management is also quite optimistic for the future, so you can hold this stock for now.
Okay, all right. The next one is coming in from Chennai. Raghu Raman is writing in and asking about a fundamental view on IndusInd, if I'm not wrong. His average buying price is 629. Wants to know if we can go ahead and add more if this is the right time. Tapan, your view on this one?
No, actually not at this level, and also I'm not at all bullish on IndusInd Bank. No, still the last time whatever corporate governance issue and the accounting issue was there, and still it is not sorted out.
I think we seem to have lost Tapan. Sorry, I think we seem to have lost your connection, and we'll just come back to you in just a bit. A quick one here, Rahul, before we go back to Tapan, actually, because IndusInd went down yet again in before this whole market moved to 777. Since then, of course, I've seen a bounce back. Do you think that these levels are sustainable in the near term?
Stock did fairly well in the months of January and February, and we saw the stock heading towards the 4-digit mark. Now the current correction, at least in the smaller scheme of things, looks like an opportunity to play the bounce back. Now this bounce back could be very well heading towards 860, 870 on the upside. Having said that, it's prudent to take profits since the particular investor is sitting on a profit. And with the kind of volatility that we've had in the markets, I think if it stretches another 4-5%, it is advisable to take profits and wait for re-entry opportunities at lower levels.
Tapan, if you can hear me and if you're back, I think you were giving your view that you're not very constructive on IndusInd. Please continue.
Yeah, actually, I'm not too much constructive for the long term. I think in private space, a lot other banks are available at much more better valuation also, and now the correction already happened. So IndusInd Bank, I think instead of IndusInd, he can go for a Federal Bank or even ICICI Bank. That will be a better option.
Okay, all right. So that's the view coming in on IndusInd. The next one is coming in on the real estate space. Today, it's the top sectoral gainer. Sriram from Chennai is writing, and he says that he holds Lodha at 1192 and Brigade at 1018 and Sobha at 330. And wants to know if it is prudent to kind of average out these counters at the current level, or what should be the next course of action. Rahul, I'll stick with you for this one. Your view on some of these real estate players, and if not these, any particular counter that you like in the space.
Yeah, so speaking of Lodha, the entire realty pack has been, quite under selling pressure. And looking at the price action today, it seems like it should be a good short covering number on most of these counters. Now, since these stocks were heavily oversold, we feel that another 5 to 6% bounce back or maybe 10% bounce back cannot be ruled out given the high beta nature of this sector. So particularly, in Lodha, we could very well see the current bounce back extending upwards of 850, 860 on the higher side. And overall, the entire realty pack seems like, it's the short covering is something which is prevalent as far as the price action is seen in today's market action.
Got your view, Rahul, but let's go across, take our next caller from Gujarat, and Suraj has a stock query for us. Suraj, very good afternoon. Welcome to the show. What's your query?
Good afternoon. So I want to make a new entry into Lemon Tree for 1 to 3 months perspective.
Okay.
Is it the right time?
Got it. Rahul, would you suggest and recommend Lemon Tree right now for a 1 to 3 month time frame to Suraj?
Absolutely. In fact, the stock has the risk reward is very favorable for a buying position in Lemon Tree. The stock has formed a very strong base around the 100-105 area, and the current reversal could very well take the stock towards 135-140. So this particular space should see revival of sentiment as well, given the the relief rally that we've seen in the markets today. So purely from a 2 to 3 month kind of a perspective, one can look to buy Lemon Tree. A decent upside can be expected given the kind of base formation that we have in the stock. So keep a stop loss placed at 104, and you can invest for a 3 month period.
Just sticking with that space, Sumit from Mumbai is asking about Sami Hotels. Wants to know if he can hold or sell at the current levels. He's got 8,200 shares bought at the levels of 52 for Sami Hotels. Rahul, your view on the charts for this one?
Yeah, so this is relatively, not as robust as something like Indian Hotel or, the one that we were recently talking. So from a technical perspective, this is heading into a resistance around the 160, 165 area. Once it crosses that, I think then things should turn favorable for the technical setup of the same. In this kind of a market, there are better opportunities in the relatively larger names that are there in the market. Probably that can be considered because we're still far away from where we were a couple of months back. So there are better options available in the market.
Got your view, Rahul. But this question by Sumit, actually, he's bought it at 52 and he's on gains of almost 8 lakh rupees on this one trade. So good on you, Sumit. Would love to hear what made you buy it at that price, and you could call us, speak to us also about the same. But great price to buy it, of course. But let's go across to our next caller from Bengaluru. Pavitra has a stock query for us. Pavitra, good afternoon. Welcome to the show. What's your question?
I'm holding ONGC shares, 700 shares, at the rate of 275. So this, I bought it for very short term, 1 month or 1.5 month back I bought it. So what is the very near term, like 15 days to 1 month price up? Or can I, even I can sell it today, or can I, should I hold it for another 15 to 20 days?
Got it. Well, Rahul, we've seen the refiners actually gain a lot of momentum in the month of March, of course, because the Strait of Hormuz was shut and they had pricing power in their fray. Now that has gone. But we've seen a very stellar recovery, actually, Rahul, in today's share price just for ONGC as well after being down in the morning. How are you viewing this counter? Would you recommend Pavitra to continue holding for the next few days, or is it a good time to exit?
Yeah, so contrarian to the opinion, the price action is suggesting that there is more steam left in the setup of ONGC. We feel that above 293 there can be a fresh breakout in the stock, which means somewhere around 315 to 325 is what the projected targets for the stock are coming at. So stay invested at these levels. Once it crosses 293, I think that is when one can expect a sharp momentum, and the targets would be around that 320 mark. So the in spite of correction in crude oil prices, in spite of the ceasefire, the structure of ONGC remains strong, and one can continue to remain invested in the same. However, do keep a stop loss. So the stop loss at this point in time would be 275, and keep on trailing your stop losses as the stock moves upwards.
Okay, all right. So that's the view coming in on ONGC. We've got our next caller. I think Ram is calling us from Bengaluru. Ram, a very good afternoon to you. I believe you have a question on Tata Power.
That's correct. So I'm currently holding 1,450 units of Tata Power at average price of 393.
Okay.
And that holds close to 20% of my portfolio weightage. And I'm looking for a long term between 3 to 5 years. So I wanted to understand if this is a stock that I can hold as it is, or should I trim or exit? That's the question I have.
Okay, got your question, Ram. I'll take this up with Tapan then. Tapan, 20% of his portfolio consists of Tata Power right now. What should be the next course of action for him? Because right now he's just sitting on mere gains of 1,000 rupees.
So he can hold the stock, but I think 20% allocation is too much. He can trim down the allocation. If he wants to go to power, I think NTPC or Power Grid also another good option. He can have it for long term. But here, I feel that the stock will be doing well over the time, and moderate return it may give it. Even if you see the growth will be there, hopefully summer will be good, and the way energy transition will happen in India, that will help this stock also. So yes, I'm positive, but I think the allocation is too much. He can trim down and go to some other power stocks if you want.
Got the view, Tapan. But Tapan, Rahul, as well as our viewers, it's time now for the rapid fire round in this edition of Fast Profit. Request you to keep your answers on buy, sell and hold, so that we can take as many queries in this very short time. The first one's on Dixon Tech. From the long-term perspective, what Chandra is asking, what would we suggest, Tapan? Should he continue to hold right now?
Yeah, buy, hold and buy on dips.
Okay, emphasis is the next one. Lalita from Bengaluru is holding 27 shares at the levels of 2,771. Short-term view on this one, Rahul?
Hold.
City Union Bank bought at 129. Rahul, should he book profits? Should Sneha book profits right now or continue to hold?
Hold for 275.
Ashok Leland, is this a good time to buy? Bharat is asking. He wants to invest 2 lakhs from a short-term perspective. Rahul, your view?
Wait for a dip to enter.
Canara Bank bought at 160 by Arvind. Rahul, should he wait for that buying price to come back? What would be your view?
Hold.
Sirma SGS, can I buy the stock in large quantities? What Shakra wants to know. Your view on this, Tapan?
Yeah, it's a good stock.
Geo Finance bought at 300 rupees by our viewer Sudhakar. Should he average down, Rahul, right now?
Yes, can average.
BEL, 8,000 shares bought at the levels of 453. Sell, hold or wait for 6 months? Rahul, your view on this one?
One can look to add at these prices. We are positive on BEL.
Aptus Housing bought at 294 by our viewer MM Kapoor. What should he do with this counter now, Rahul?
Exit.
JSW Energy bought at the levels of 486. 450 shares is what Raj from Jaipur is holding. Sitting on 2% profit. Can he continue to hold from a long-term perspective? Tapan, your view?
Yep.
BSC bought at 2,700 by our viewer Kunal. Rahul, should he continue to hold?
Take profits.
Astral, is this a good opportunity to buy the counter again? The viewer sold it at 6% discount. What do you think, Tapan?
Yeah, slowly on dips.
Union Bank bought at 175. Rahul, should Avija exit this counter now?
In fact, one can look to add Union Bank.
Lupin, is this a good buy on the dips right now? Sai is asking this question. Your view on this, Tapan?
Yes.
Finolex Cable bought at 1,000 rupees by Anuj. Tapan, his question is if what could be some of the key targets in the near term?
No, I think it may give you around 15 to 20% return in 1 year.
Okay, can I buy Newgen Software Technology or BLS International at the current levels? Rahul, any of these charts looking attractive for you? Newgen Software and BLS International?
Yeah, one can look to buy Newgen. That is the relatively better stock between the two of them.
Okay.
Prasanna actually holds Infosys Tapan at 1533. It's almost 10% of his portfolio. What would you recommend him now that the results are also very close?
Yeah, he can hold it, but once it goes up, he can trim down his allocation, less than 10%, around 5% maximum.
Okay. Symphony is the next one, 100 shares bought at the levels of 1300. Balaji from Chennai wants to know if you can continue to hold with this for the next 6 months. Rahul, your view on the charts?
Yeah, Symphony can be held.
Tata Motors CV is what Somin from Bangalore is actually asking. What would be your view on this one, Tapan?
Yeah, good for long term, but buy on dips.
Garden Reach buying price at 3123, 64 is the quantity. Continue to hold or sell? Tapan, your view?
Yes, please hold.
Karnataka Bank bought at 188. Can he add more? Tapan is what Ashok is asking.
Yeah, on dips.
For ATM, can I invest 1 lakh in lump sum or keep buying in small tranches? Tapan, your view on this one?
Small tranches.
Okay, alright. So that brings us to the end of this rapid fire round as well as the Ask Profit show. Tapan as well as Rahul, thank you so much for taking out the time and helping us with answering all those stock related queries. Viewers, completely out of time on this edition of Ask Profit, but do stay tuned. India Market Close up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
To understand the Tamil Nadu twist, join me in the midst of our people, language, and politics Vanakkam Tamil Nadu. Here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Aisha Saigal. What's that today? How to
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Aisha Saigal, on Prime 5 only on NDTV 24/7.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu?
Hi, thanks so much for joining in. You're watching India Market Close on NDTV Profit. My name is Alex Matthew. It's a good day for the Indian equity markets, and it follows soon after the announcement of a ceasefire by the United States and the ratification of that ceasefire by Iran as well. It brings a pause to a conflict that has raged for over a month, and what you're seeing on the screen is a celebration of the cessation, however temporary, of that volatility and that violence. You're seeing equity markets trade higher across the board. The benchmark Nifty 50 trading with gains of about 3.7%. It is off the high point of the day. In fact, pull up the intraday chart and you will notice that very briefly you had the benchmark Nifty 50 that crossed 24,000. It is now trading just shy of that mark, 25 points. Remember, however, that we're still very far away, even now, from the 50-day, 200-day moving averages as well. Now, the broader markets are also looking quite pretty. In fact, pull up the mid-cap index, it's up about 3.9%. The small-cap index up about 3.85%. And pull up the advanced decline ratio, because this will just show you the picture of how this is. It's as wide as it can get. Just about 150 odd stocks in the red right now, and maybe one or two of them from the Nifty 50. So pull up the heat map as Tamanna joins us to discuss some of this as well. Tamanna, it's a pretty picture. More red on the screen for the Nifty 50, but it's still, the big winners are right here.
I mean, it's held up beautifully. Come off 24,000, but held up beautifully, I would say, despite a couple of news points that could have played spoil sport. One, Israel saying that in their view, this ceasefire does not include Lebanon.
Yes.
And staying off Lebanon.
Yes.
Some reports of a little bit of firing on both sides between Israel and Iran. But despite that, the overall peace has held. I thought Donald Trump's post on "we will be looking at the Strait of Hormuz together" was also quite interesting. So clearly there is something that he wants to add to that picture. So here's what's happening, if I have to sum it up for you. Nifty has gained for a fifth consecutive session. It's the longest gaining streak since November 17th, 2025. And that's really saying something. It has recouped over 1,600 points in the last 5 sessions. Nearly half of those losses started since the start of the war. India VIX has cooled off dramatically. It's the first time since March 18 that you've seen the India VIX at the 20 mark, and 23,900 is the new support level, while 24,000 to 24,100 is the new resistance. All sectoral indices are gaining in trade. IT and pharma are gaining the least. Value buying seen across mid and small cap names, and a sharp jump seen in cash market volumes as well. I think that's important. Cash and F&O market volumes have jumped 71% for cash volumes and 12% compared to yesterday till 2 p.m. I think that's very, very telling, Alex, because we've been speaking about how volumes have dried up. These cash volumes jumping up tells you that investors were looking for an opportunity, and there seems to be a consensus call that for now, the worst is behind us.
You know, it's an important time that this is coming through. Serendipitous, however, it is, because you're going to see the latest AMFI data that comes through tomorrow. And I know that Navneet Munot in the morning told us that he expects an SIP figure that's at a record high.
Wow.
What I have found out, though, in conversations that I've had is that that's unlikely to happen. And we'll know soon enough either way, but it might actually come off the 29,000 crore mark because there are cancellations that have come through. Having said that, the net and the gross numbers that come through to equity in the way of flows are likely going to be at a record high. So there is money flowing through into the mutual fund space.
Is there any seasonality for March numbers in terms of year-end, etc.?
There tends to be quite a bit of reallocation that takes place. A lot of people tend to book out certain losses that they might have in underperforming spaces, but they reallocate that as well. So that's something that comes through. And I think a lot of people don't pay attention to the flows into the balanced advantage funds and the hybrid funds, but that also has a pretty substantial component of equity. So that's important to talk about as well. We'll see those numbers through tomorrow. I just want to pull up the sectoral indices. You touched upon IT just shortly, but it's a pretty picture, right? So you're looking at realty that's up and about. Auto is a big talking point today, Tamanna, because some of those CV makers, Ashok Leyland and a couple of others, doing particularly well today because it means positive news for the economy and for development as a whole.
Tire stocks have also been shining. It's only the CPSE which is in the red. So that's a strong screen. What do you do in this market? Sameer Dalal of Natvarlal and Sons with us this afternoon. Nilesh Jain is also with us this afternoon. He's Head AVP Technical and Derivatives at Centrum. Welcome to both of you and great to have you here. Nilesh, I'm going to start with your index call.
Very good afternoon to you. Good afternoon, everyone. Well, on the index, the structure after today's gap-up opening has already turned positive, and the kind of correction that we are witnessing in volatility index indices, clearly there could be possibility that we may see a follow-up on the upside to continue. The market sustained throughout the day the gap-up that we saw in the morning. So from here, the structure appears on a positive side for 24,300, 24,500 kind of levels. And support has now shifted to 23,800. So buy and decline should be the strategy from here. Similarly, in the Bank Nifty as well, we expect a move towards 56,500. So that's the immediate target that we are expecting. So both the indices have already turned positive with a gap of opening today, and we are expecting a follow-up on the upside to continue.
Okay, what about stocks this afternoon? Nilesh, anything on your buy list?
Right, couple of buy recommendations. First of all, Samman Capital, this particular counter has given a good breakout today, and we are expecting a follow-up on the upside to continue in this particular stock towards 156 to 159. So 156, 159, these are the two targets, and 147 should be the stop loss. And apart from that, within PSU banks, Punjab National Bank, that's PNB, looks positive for a follow-up on the upside to continue towards 115. That's the immediate target of 200 exponential moving average, and one can keep a stop loss below 108.5, and PNB is a long.
Got it. Okay. All right. I just want to come to Sameer. Sameer, any opportunities that you are seeing at this moment? Because the fact is that quite a bit happened in the run-up to today, and opportunities would have existed in those last few weeks. If you had deployed at that time, you're reaping the rewards right now. But having said that, are you still seeing opportunities when you look at the screen right now?
Hi, Alex. So, when the war initially started, we had actually taken a view that this would end soon, and that time we did make some investments. But over the last week and a half, we actually took the foot off the pedal and decided that we'd wait. So, at the bottom, probably we did miss a step, and that's okay. I mean, we didn't think this would end overnight like the way it did, but I'm glad it's over. Now, the question is, what are the probabilities you are playing, right? So the market is all about probabilities at this point. The fact that Donald Trump has got an exit from this war, the probability is that he will not get back in. But will hostilities between Iran and Israel, I heard you guys also talking, there's something already almost there. And will that come to an end immediately? That also needs to be seen. The Strait of Hormuz also, at the moment, we don't know exactly what the terms are and whether the US and Israeli vessels will be allowed out, not allowed out, what the stand is. So, all of these, there are too many variables which are still unknown. And the second thing, what we wanted to point out also is that, the impact of these higher crude prices or delay of products reaching to the end user are going to start showing its head in Q1. Now, hopefully the market can look beyond the fact that Q1 numbers could be a little disappointing and then continue to stay afloat. But we get a feeling that there will be an opportunity. Is it necessary to go out and buy today itself? No. You will get opportunities over the next maybe 2-3 months. And as we find stock ideas, there are always opportunities. The question you asked, we invest in those as and when they come along.
Okay, so what are those stock ideas? Has that opportunity come along or not, Samir? What are you liking right now? Are you as bullish on real estate, as on auto, as the screen is showing?
So we are a little bullish on real estate, but we've been selective in real estate, right? So 2 stocks that we actually bought and continue to think is a long-term buy. One is Brokerage Properties. The stock has corrected significantly from the highs. They have huge developments ongoing where a huge part of those developments have been pre-sold. So the cash flows for that will only start coming in over the next maybe year and a half. And we think there is an opportunity to invest there. There's EMBDL that we do like, which is Embassy Developers. They've got a case filed against them because of which the stock has been beaten completely out of shape, I think from 120 down all the way to 40. We think there's an opportunity there. Of course, today it's up, but we think that that has scope to move back up to at least 120 in the next year, which is fantastic returns. So those are there. And then we've been very positive. I've always been very positive on solar and renewable energy. So we continue to hold that stance. Sterling and Wilson Solar, Suzlon.
That feed has frozen. So he was just taking us through a list of stocks that he likes. We'll come back to that in just a bit. But before we do, let's take a look at what we've identified as the stock of the day, and that is Ashok Leyland, because it's doing particularly well. We briefly mentioned the commercial vehicle space. And let's go across to Puneet now to talk about why this is working. Puneet, up 12%. Is the view that some of the supply chain disruptions, some of the economic development that would have normally taken place will now come back on stream?
Well, most certainly, and definitely the price action move is telling you that. It's also been a very dramatic move over the last 4 to 5 weeks, as well as a very dramatic year for the company as a whole. GST rate cut benefits was, of course, a big one, not the direct one in MHCV, but for LCV space. It's the top F&O gainer today, we're up 12%. But since February of 26, when the war broke out and you saw that impact, stock had corrected 28%. So from the highs of almost 210, 211 rupees, stock had corrected to 144, and then hence today's move becomes a crucial one. Still some time away from that highs that we saw. Now we've seen buying post this particular correction as well, and you've seen stock is still up 70% on a YOY basis in the last 1 year. So over the last 1 year, return is 70% despite the volatility that we've seen since the end, and still trades at around 11 to 12 times EV EBITDA, which is in line with a historical valuation. But a lot has changed over the last 3 to 4 years for the better for the company. So let's look at that part as well. Sales growth was very strong in H2, led by the GST rate cuts. So hence, what's also been very interesting is that the fleet age has actually gone up. So someone using a truck is now using it for almost 10 years versus the 7.5 rate. So replacement demand is yet to kick in. Despite the GST rate cut benefits, is only a lot seen in the light commercial vehicle space. So the heavy truck sales is still yet to come, and management feels that the current fleet age is not sustainable. So that will be another leg of growth. What's also been interesting is that for the other CV makers also, Tata Motors as well as VECV has been a stellar year. This is the FY26 number. Look at the growth, 13 to 15% growth, and this is the MHCV cycle is still yet to kick in at this point of time. Finally, for Ashok Leyland, both 2 new segments, LCV and buses, are a big one. They're increasing capacity in both of them. LCV capacity will rise to 1.2 lakh units from 80,000 currently. And for the bus segment, increasing to 20,000 buses from 12,000 currently as well. So gives you that comparison. Switch Mobility, the EV bus arm, will also be positive in Q2 for EBITDA as profitability. It was in Q2 of FY26 and will turn free cash flow positive in FY27. What's also interesting, just ending this segment, has been that you're seeing the spillover effect on Tata Motors CV up 10%, but also Shriram and Chola Finance up almost 10 to 12% as well. So the whole CV cycle, OEMs as well as financiers are doing well, with Ashok Leyland leading the way as the biggest F&O gainer for today.
All right, thanks so much for that. Samir was giving us his view on certain stocks that are looking attractive right now. Samir, if you can run through that list very quickly and specifically speak about Ashok Leyland, because the stock is up 12% even as we speak. And as Puneet has aptly described, there are several tailwinds that are currently in play.
Absolutely, there are some tailwinds in play. The commercial vehicle space is something that has opportunity to grow. And like Puneet put up, the expansions will allow them to produce more, but I don't think they were producing at capacity. So growth will come, but it will be over a longer period of time. So in the near term, we think Ashok Leyland is well priced. We don't think that you're going to see an immediate bounce back in demand coming through. Like I said, it's going to be a 3 to 6 month delay for everything. So everything could get delayed, including purchase of trucks. So the run up is good, but it could also be just a bounce that has come because the stock was a bit oversold. Now, running through the list very quickly, so power sectors that we were very positive on: renewable energy, solar, wind, SW Solar, Suzlon. We've been positive on the banking space: HDFC Bank, IDFC Bank, and IndusInd Bank. NBFC space, Samman Capital is one of them. LIC Housing Finance is another one. Manappuram now is looking attractive. So that is there. Then if you go a little beyond consumer side, I think all of these trend I've always mentioned, I'm quite positive on. Metro shoes, all of these will start seeing a bounce back. QSR also will start seeing consumption growth once everything comes down, inflation comes down. So that is the side where we remain positive, and opportunities will come along. And then whenever they do, we have to take them.
All right, so those opportunities will come through. Just need to take them. Let's go across to Somit now just to find out what the chatter from the dealing rooms is. And I'm pretty sure, Somit, it's going to be significantly different from what it was yesterday. Let's talk about what you're hearing on the street.
A host of stocks that dealers have highlighted in trade today. Firstly, when it comes to Poonawalla Fincorp, dealers are indicating that the company will soon launch its QIP. The size is expected to be around 5,000 crore rupees, and they have appointed Kotak as the banker for this QIP. So keep an eye out for Poonawalla Fincorp. For Amber Enterprises, there are buy flows on the large HNI desk. Dealers expect a big joint venture announcement with an AC company that could come in soon for Amber Enterprises. For Anand Rathi stock, there are buy flows in the PMS desk. Dealers expect that the fourth quarter earnings are expected to be better compared to what the street has been anticipating. When it comes to Sri Lotus Developers, there are buy flows on the large HNI desk. A large project announcement is expected soon from this counter. For HDFC Bank, there are buy flows on the FI desk after a very long time is what dealers have highlighted, and delivery volumes could also be on the higher side for this counter. And lastly, a host of mid-cap stocks: Force Motor, Kalyan Jewellers and Newland Labs. There are buy flows in the large HNI desk. Prominent influential HNIs have been accumulating these counters in trade today. So keep an eye out for these names as well.
Thank you so much for that, Somit. You have to look at whether we are going to continue this momentum, and in part that momentum is very, very dependent on what happens next, and which is why let's get to our next guest. We're speaking today with Professor Kivraj Jangid. He's Professor and Director at Jindal Center for Israel. Professor Jangid, great to have you back once again. We spoke earlier when we were in the middle of not knowing in which direction we're going. At the end of the ceasefire, does it seem like any one side has come out stronger, and can we hope for peace to last for some time?
Yeah.
You're on mute, I think.
Thank you for this, Tamanna. I think we spoke 3 weeks back. I didn't expect this war to be so long, so it certainly is a big blessing. There are 3 takeaways from the today's development. First, that the ceasefire is a big relief, as we understood from Donald Trump's frustrations and his expletives. This war became a nerve-breaking moment for him. So the person was really losing his head as much as his tongue. So I think it's a great relief. Second, this ceasefire is the major diplomatic path ahead. As we understood from, more or less the first 3 weeks of the war, that America achieved whatever it wanted to achieve in the first 3 weeks. After that, it was just looking for a way out. Iran made that way out very difficult by closing the Hormuz. So I think America was found in a more weaker position, diplomatically speaking. So this ceasefire is also a bit of a relief for the American perspective because they ended up opening the Hormuz for 2 weeks. The third thing that I take away from is the worry that the details of the ceasefire are very foggy. There are two counterclaims. Iran claims, and this was a claim in their Farsi version of the 10 points. We understand that Donald Trump tweeted that 10 points that Iran offered him, countering his 15 points, is a workable solution for him. But in those 10 points, there was this thing called Iran is allowed to have nuclear enrichment, which is to say, if Iran is allowed to have that, then that was the bargain, that Donald Trump is getting Hormuz free, but Iran wins on the nuclearization.
Once again, Professor Khivraj, just explain that to us. How does Donald Trump get Hormuz free? Everyone is going to pay to pass through the Hormuz, which was free earlier.
You are right. Absolutely, you are right that, in fact, even for countries like Japan, India, Australia, it was free, even a day before. It's just that Iran asserted an international, going against the international norms, builty, like it used to be on the the river sand in India. The point now of the 2 weeks is to restore Hormuz to its international status. That Iran will not have this builty system on Hormuz. I do think that Iran has really won on this, that because of the Hormuz, they are now going to get a concession from Donald Trump on the nuclear enrichment.
Professor Jahangir, so that's an interesting view. My only question, though, is whether countries as a whole, and here we're talking about countries that are not really like the US, in that they're more dependent on the Hormuz Strait, and they haven't been participants in this war, but they're going to be bearing the brunt and paying the cost of the war. Do you think that there's going to be an acceptance in perpetuity of a cost to ply the waters of the Hormuz?
What it explains is that Iran is not a rational player, first of all. You are expecting Iran to play a fair game, but Iran is not a rational actor that keeps the international norms in mind when it comes to its foreign policy objectives, or when it comes to supporting terrorism, when it comes to supporting proxy wars. So let's understand that Iran is an outlier for many other international norms. The countries like United Kingdom and many others that have been, gathering 45 nations, passing a resolution, they will find it very hard to get any concession from Iran. Let's keep in mind, Iran in this, prolonged conflict showed something that it didn't believe would succeed against America. It showed it can close Hormuz, and America by force could not open it. It's a very clear outcome of the last 3 weeks. Hence, Donald Trump is getting this ceasefire on the 10 points given by Iran. And one of the 10 points is that now, based on Hormuz, Iran will bargain a lot from America. So what I mean to say is this: to keep the Hormuz open for everybody, free of cost, America will have to now agree to the Iranian demands. My only worry is that Donald Trump can say, well, I don't have to actually assure penalty-free Hormuz for the rest of the world, because they in any case don't like me. UK didn't want me to, have their air bases in use. So I don't care about if you take money from India and others. I would just keep fighting you. So yes, Donald Trump would also play a brinkmanship kind of a game in the diplomatic bargain, and so would Iran.
Professor Khivraj, because you study Israel so closely, how have you read into their public responses to the ceasefire in the last few hours?
For Israel, it's a very different fight with Iran altogether. The war with Iran doesn't get over for Israelis now or in the near future. Israel has been fighting Iranian proxy war through Lebanon and Hezbollah for the last 2.5 decades. In this ceasefire, Iran also got Israel to agree that there would be no attacks on Lebanon, and Israel has agreed. Israel said, we respect the mandate given by Donald Trump. There is a doubt if Lebanon is part of it or not. Both of them are contesting, but nevertheless, I don't think Israel will right now spoil anything that Donald Trump is really in need. But yes, Israeli fight with Iran is much more existential, and there is a much greater willingness in Israel to go through the pain and sustain far more war kind of situations with Iran in the near future.
Okay, and is there a possibility, Professor Kivraj, that there could be an escalation based on what happens in Lebanon against the Hezbollah?
I don't think so, because Israel has been fighting in Lebanon with a free hand for the last 2.5 years. Iran didn't really go to defend Hezbollah even when Hassan Nasrallah was assassinated. Iran would like this proxy to fight Israel out of its territory. All what Iran needs right now is and stop on the attacks. Let's understand also, I think Tamanna asked the question, who appears strong at the end of this 7 weeks? I think Iran may appear standing in public perception, that it gave a tough fight, but the worst loss out of this war is Iran's. Israel has certainly burnt a cost. America will take some kind of a reputation damage, but militarily, physically, Iran will bear the real cost of the war now. And second, Iran might also now enter into a civil war kind of a situation where the regime will have to see if the people are going to stand against it.
What is the basis for that thesis that Iran will bear the real cost now and they have to see if people will stand against them? There were exhortations to the people of Iran to stand up against the regime. If they did not do so far, why will they do it now that Iran seems to, or at least the regime in Iran seems to have protected itself?
There are a lot of orchestrations. I'm aware that today there was a pro-government protest. Maybe by evening there would be firecrackers. It's true. Common people will also celebrate this moment when the bombs are, stopped from the sky. Let's understand, for a common person, it's a relief. It's a big relief. But in a very existential manner, whether the regime will be, able to suppress the protest again, but by all means, there are diaspora, there are people in Iran who have been asking for American intervention, who have been asking that this regime will not be able to, survive an external push. So I think there is enough to believe that the regime will be challenged. How much will that succeed? It's a matter of some, months and maybe, weeks.
Yeah. Okay. Interesting space to watch. We'd like to invite you back soon, Professor Kivraj, as this becomes clearer, and hopefully things will become clearer. The markets are pretty clear. There seems to be no confusion there, even though there are so many comments and slightly angry sounding kind of commentary between Israel and Iran right now. But the screen is showing that it's truly moved past this. So then what next? Sameer Dalal, I want to come to you on the business update so far and the results season. Let me start with TCS. What are you looking forward to when we see the TCS numbers come in? And will that set the stage maybe for another leg of relief rally in IT?
Yeah, Tamanna. So, relief rally in IT possible, up move no. So what are our expectations from the results? What we want to see is that the guidance that they give is slightly higher than what they had given for the last financial year. Now, it becomes difficult for them to probably do that, but given the fact that they're sitting on these huge orders that they've won over the last couple of years, we can only hope that the execution of that picks up. And if that does happen, what you can see is growth. Now, the second very important thing to look in the TCS numbers is they have started giving us what is the AI revenue as a part of the total revenue. We want to see what that growth is. If that growth starts surpassing the traditional businesses growth, that would be taken as a positive. Does that mean the stocks are going to rally in a massive rush? Probably not, because it needs to scale up a lot more. And we also don't know how the traditional businesses get affected, and will that really, the increase in growth of the AI, does it create a problem of the degrowth in the traditional business. So that is something that's very important to see in the results. They may even announce some sort of a buyback or special dividend or something, which is a positive, which can hold the stock up. But am I expecting it to be a tearaway rally coming in or 10-15% rally from here? No, I'm not. I don't think they're going to be able to give anything better than maybe 7-8% top line growth. And if you talk about 7-8% top line growth and maybe 14% or 13%, 12% bottom line growth, you're trading at about 1.5, 1.6 times earnings PEG. So that it's a little bit on the fairer side. So nothing expected great from this. But just want to point out and ask a question. The previous speaker spoke that Iran is allowed enrichment of nuclear weapons. If that is the case, then did he achieve any target? That becomes the question that Donald Trump should be asked.
So this is the fog of war, right? What Professor Khivraj is referring to is what the Iranians have put out in their Persian posts, and in fact one of their embassies has also said this. We pointed out this morning, but that is their claim, that this is what the US has agreed to. No one has seen any written documentation of what is the terms and conditions of this ceasefire. We're living in an era where everything is on social media and claims versus counterclaims. So we'll have to watch this space. But stay on with us. The other story that we're talking about is also an important one. A US court has admitted Adani Group's plea to dismiss an SEC lawsuit. Remember, Adani Group promoters had asked the US court to dismiss a securities fraud lawsuit brought by the US Securities and Exchange Commission, which is why you're seeing all of those stocks fire today as well. Nimit Dixit joining in with more details. Nimit.
Yes, so absolutely. What has happened is that the court has opened the door for Adani to argue its motion to dismiss against the SEC for the entire bond issuance lawsuit that's been in the news for the last couple of years. Now, this is not an argument on merits. It's simply to say that Adani is now allowed to argue its motion to dismiss, and there's going to be a pre-trial conference where a schedule will be decided now on how the trial will progress on Adani's motion to dismiss. What is more interesting to note, Tamanna, is actually what Adani has said in its documents, in its plea filing to the court. The largest strain of argument is essentially saying that the SEC does not have jurisdiction over this bond issuance and over this case at all, simply because there is no US connection with the bond issuance that Adani Green has done. What Adani Green says is that it is not a US listed company and that the SEC has failed to show any domestic securities transaction related to the bond issuance. Importantly, it also says that all bonds were sold to non-US underwriters, and any US resales were not linked directly to Adani Green. An argument that the SEC makes that's important to note is that the settlement was done by the DTC, which is their US-based clearance organization. Adani says that even if this is the case, this is only a back-end machinery process. This has nothing to do with the actual issuance, and again, this does not link them to any sort of US securities jurisdiction. Lastly, Adani also says that there's no personal liability on any of the promoters, and also says that even if the allegations were true, and it denies the allegations of bribery completely, but it says that even for argument, in that case also none of the alleged conduct happened outside of India. It has no link to the US. So the trial is going to be a jurisdictional one, deciding whether the SEC has the power to go after Adani Greens if found that it has nothing to do with the US at all.
Okay. All right. Thanks for putting that into context. And by the way, standard disclaimer here. NDTV Profit is part of the NDTV Group, which is a part of the AMG Media Network, part of the Adani Group. Nilesh, I want to come to you on the entire pack, right? Which is buzzing in trade like a whole host of other stocks. The question is, do you buy into it? Do you use the opportunity and the upswing to buy more?
Well, absolutely, Alex. As far as the overall product structure is concerned, looks like today we saw a good gap up opening. And overall, Adani pack as a whole, we have seen a good momentum. And we have also seen some bit of cool off and profit taking from the highs. So that is again giving a good opportunity to start building a long position. As far as a stock specific move within this space is concerned, Adani Port and Adani Power, specifically these two stocks are looking positive. Adani Power looks like it is heading towards a fresh record high. Maybe in the near term, we may see the levels of 180 to 185. That's the kind of upside we are expecting in Adani Power. So with the stop loss below 160, it can be added on declines. And apart from that, If you see counters like Adani Port as well, we have seen a very good start today, but profit taking has dragged this particular counter towards 1450 right now. But broader structure hints that it is heading towards 1550 positionally and can be added on declines, keeping a stop loss below 1400.
Got it. All right. On that note, thank you so much, gentlemen, for taking the time. Pleasure speaking with you as always. All right, let's slip into a very quick break. Just take a look once at the Nifty 50 and see whether it's holding, and it has been. It is very close to the high point of the day, up about 3.8%. It's still not yet at that 24,000 mark, just shy. Let's see if it breaks past on the other side of this very quick break. Do stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
Welcome back. It's turning out to be an exciting day for the markets, and you know what is fascinating and heartening as well is that markets have kept up. There hasn't been any massive profit booking coming in. The Nifty has flirted with 24,000 quite a few times and is close enough for comfort. It's still about 850 points up there. What's working? Well, pretty much everything is working. You have to look at who the winners are who've really pulled ahead really in today's market. So the L&Ts of the world, all of the auto anchs of the world, the Ashok Leylands of the world, those are some of the big winners this afternoon and through the day, and consistently have been pairing up. Dharmesh Kant joining us now on the show. He is head equity research at Chola Securities. Shivangi Sarda, analyst equity derivatives and technical at MOFSL, also with us on the show. Welcome to both of you. A very good afternoon to you. Shivangi, I'm actually going to come to you first for what next for the Nifty. And if someone is looking at this, for some reason missed the day and then came back and looked at the afternoon on their screen, should they be deploying more funds? Do you see this rally having more legs? And what would be Nifty targets?
Very good afternoon, Tamanna. Thank you for having me. So we've